There are moments in history when civilizations redefine the future. 5 centuries ago, here in Rome, at the heart of Europe, humanity entered one of those moments. A moment that changed the destiny of the world forever. One man dared to imagine beyond the limits of his time. Leonardo da Vinci, artist, inventor, visionary. He saw no boundaries between science and art, technology and humanity. He imagined a connected world before the world itself was connected. And with that vision, a renaissance was born. From Italy, a movement spread across Europe. A rebirth of ideas, a revolution of knowledge. A moment when Europe reshaped its future and redefined its role in the world. But history is accelerating once again. We are entering a new era of profound transformation. Artificial intelligence is redefining how we think. Energy is reshaping geopolitical power. Technology, capital, sovereignty, security. Everything is being rewritten. The old world is fading, and the next world is still being imagined. And today, Europe stands at a defining crossroads. Not as a museum of history, but as a force capable of shaping the future. A continent of unmatched creativity, industrial strength, talent, and renewed ambition. This is Europe, reimagined. Reimagining competitiveness, reimagining sovereignty, reimagining strategic autonomy in a fragmented world. Across the world, a new global dialogue is emerging. Through the FII Institute and its global summits, leaders, investors, and innovators come together to transform ideas into action and investment into impact. Renaissance is not inherited. It is created by those who choose vision over fear, action over inertia, and courage over uncertainty. The next Renaissance will not be written by spectators. It will be built by leaders. And so, from the eternal city to the leaders shaping tomorrow, welcome to FII Priority Europe in Rome.
Your Royal Highness, Your Excellencies, distinguished guests, ladies and gentlemen, here we are at day 2, back in Rome. It's so wonderful to be here. And when we think about a renaissance, yes, not just in one area, but it is truly a renaissance in the world at the moment. We have so much going on, so much excitement right now, so much dynamism, and again, so much opportunity. This is really what it's all about. Now, yesterday we brought you on almost a global tour of finance, of economics, of social cohesion and impact. We have so much that we need to look at, so much we need to examine. And also, of course, yesterday we heard so much about what's going on with FII and what's happening with a new era and with PIF in terms of the new focus, the new intent, the new direction. So it's very, very exciting for me to be here. And I'm very proud and indeed very honored, and Richard mentioned the shift with the FII Institute, and it just gives me tremendous pleasure to welcome for our opening remarks Her Royal Highness, who is with us today, the CEO of FII Institute. Please welcome Her Royal Highness Dr. Maha Bint Mishari Al Saud.
Bismillah ar-Rahman ar-Rahim. Your Royal Highnesses, Your Excellencies, dear friends, Assalamu alaikum. Being here today is both a profound honor and a deeply personal moment. I want to first extend my sincere gratitude to the custodian of the Holy Mosque, the two Holy Mosques, King Salman bin Abdulaziz Al Saud, and to His Royal Highness, the Crown Prince and Prime Minister, Prince Mohammed bin Salman Al Saud, for their visionary leadership and advancing the ambitions of the Saudi Vision 2030. I want to also thank the chairman of our esteemed Board of Trustees, His Excellency Yasser Al-Rumayyan, and the chairman of the Executive Committee, Richard Attias, for their visionary leadership. I joined FII Institute not simply as its new CEO, but as someone who believes passionately in the power of ideas, innovation, and human potential to change the course of history. And I can think of no better place to begin this journey than Rome. Rome reminds us that civilizations are not remembered for what they inherited, but for what they created. Today, societies everywhere are asking the same question. What kind of future do you want to build? Over the past 2 days, I have listened carefully to many of the leaders gathered here. Investors, entrepreneurs, policymakers, scientists, visionaries. What gives me confidence, not simply the capital represented in this room. It is the courage represented in this room. The willingness to invest not only in markets, but in possibilities. Not only in returns, but in progress. Because the future will not be shaped by those who wait for certainty. It will be shaped by those willing to act despite uncertainty. This has always been the spirit of FII. Since its founding, FII has grown from a conference into a global community, a movement that has helped unlock hundreds of billions of dollars in investment opportunities, a movement that has connected thousands of leaders across continents, a movement that has demonstrated that when capital, innovation, and purpose come together, extraordinary things become possible. But I believe our greatest chapter is still ahead of us. As I assume this responsibility, I see the future of FII Institute evolving in 3 important ways. First, FII Institute must become the world's most trusted platform for future intelligence, not simply discussing trends after they emerge, but identifying them before they reshape industries, economies, and societies. We will deepen our research capabilities, expand our data platforms, and provide leaders with the insights needed to make better decisions in a rapidly changing world. Second, FII Institute must become a catalyst for action. The world does not suffer from a shortage of ideas. It suffers from a shortage of execution. The next generation of breakthroughs in artificial intelligence, healthcare, energy, sustainability, education, and human development cannot remain in laboratories, reports, or conference rooms. They must reach people, they must create jobs, and they must improve lives. Through our ACT platform, our partnerships and our growing innovation ecosystem, we will help bridge the gap between innovation and impact. Third, and perhaps the most importantly, FII Institute must become a platform for humanity. A place where investment is not measured solely by financial returns, but by the value it creates for people. A place where innovation serves dignity, where technology serves inclusion. Because ultimately, the purpose of capital is not capital itself. The purpose of capital is human progress. At FII Institute, we want to accelerate our mandate, not only through dialogue, not only through research, but through investment, partnerships, and action. And as we look ahead to our 10th anniversary this October in Riyadh, we will celebrate not only what FII has achieved over the past decade, we will focus on what the next decade demands from all of us. Because legacy is not what we leave behind. Legacy is what we enable others to build. That is the future I see for the FII Institute, a global platform that connects ideas to capital, capital to action, and action to impact. A platform that helps shape a more innovative, more prosperous, and more inclusive future for humanity. I invite all of you to be part of that mission, to think with us, to exchange with us, and above all, to act with us. Together, we can do more than imagine the future. Together, we can build it. Thank you.
A catalyst for action, building on all of the work that has been done before. We want to thank you so much for that wonderful opening address there, Your Royal Highness, Dr. Maha, Bint Mishari, Al Saud. And I can promise you this community, this movement will give you all of the support that you want and that you need going forward, and really work with you to build the FII Institute as we go forward. So we're all very honored to be here with you. And again, when we look at the great work that is going on, as you said, it's not just about investing in markets. It's about investing in possibilities. Possibilities that will transform into impact, into influence, and once again, into action. And again, that capital, innovation, purpose, when all of that comes together, great things can happen. And I think we've seen this over the years. And as you mentioned it, yes, 10 years, here we are on the 10th anniversary almost, looking forward to October. So looking back on all the great work that has been done to get us to this point where really we have this movement, we have this community. So to all of you who have put this in place, indeed, well done. And we will continue to do this. We are going to move on in just a few moments here. We have a great day lined up for you, as we did yesterday, and we talked about so many areas of economics, investment, geopolitics. We're going to continue that today, really looking at sovereign AI, investment, security, geopolitics, aviation, infrastructure, and even today we will have some culture. We'll have some fashion and some sport. So we're covering the entire gamut of industry and sectors for you. We're going to be looking now at the money revolution, really looking at digital euro, tokenization, and the future of European finance. I'd like you to welcome our dear panel onto the stage right now, who will be really examining all of this to start off our day here. And of course, this panel, expertly moderated by my dear colleague and friend, Manus Cranny, the geoeconomics editor for The National. So once again, to all of you, lovely to have you all here. Manus Cranny, thank you so much. Thank you.
The revolution of money. Good morning, Your Royal Highnesses, Excellencies. Great to be here. And a wonderful introduction and a speech. Breakthroughs. Her Royal Highness talks about the breakthroughs, and we're here to talk about the breakthrough and the digitization, not what's in your pocket, but how you're all going to transact with one another. The title of this panel is The Money Revolution, Digital Euro, Tokenization. We're going to learn exactly what that is. And the future of European finance. I love a stat, so let's start with it. In the past 5 years, stable coins have gone, I would say, from being a crypto curiosity to a $322 billion worth of assets. It needs to be in your portfolio. Processing $33 trillion of transactions now. That's larger than the FX reserves of the UK and of Canada. So we're here to debate where we go next, and we've got a great lineup for you. Revolution is in the title of this panel. Where are we in the revolution of digital currency and tokenization? Let's begin the conversation with you, Zoe, because you spent 25 years at Morgan Stanley, and we just talked about it. In 1989, I settled my first FX transaction badly. This woman knows how the money moves and where it goes to. Where are we? Revolution, evolution. Kick it off. Good morning.
Good morning, everyone. Certainly a revolution, as big, if not bigger, of what made my career, which is finance was globalizing when I joined Morgan Stanley. I gave a speech, or I was on a panel in 2021, a year before the FTX deluge. And someone asked me that question, and I said, it's a Cambrian explosion of activity. If you study evolutionary biology, amazing things happened. Most things died in the Cambrian explosion, but the things that survived created humanity. So I would say that revolution that is going to change the way value moves. It's not buy Bitcoin and you'll be rich, maybe, but the real revolution is we're tokenizing, digitizing value, not just money, value. And it's moving faster, cheaper, cross-border. That's what people miss. The digitization revolution has already happened. If you're in the US,
Yep.
Venmo, I can move $2 to you instantaneously. It's cross-border. That is the revolution. Faster, cheaper, accessible, with minimal counterparties.
Well, let's bring it to the American on the panel. Some people in this room might not actually know what tokenization is. I mean, I learned an awful lot more over the past couple of years about this. But Chris, good morning to you. America dominates in stablecoins. This administration has poured a new elixir of life on digital currencies and that whole sphere. Bring it to life for this audience. Where are we in this cross-border radical shakeup of how we're going to use money? Good morning.
Good morning. Well, let me just take a step back and add a little bit of context quickly here, because I think that the discussions of tokenization often miss the broader point, which is that this is not about the technology itself. It's about what the technology enables, which is what Zoe was talking about here. This is the digitization or tokenization that we're talking about here enables much greater liquidity, transparency, and accessibility. That is why this technology is as important as it is, because it will provide capital formation at much greater scale and speed than was ever possible before. And that is how you are able to this is how you're able to diffuse prosperity more quickly and more broadly across more people. The United States has very consciously tried to take the lead in that. If you look back 100 years ago, we were able to form very broad, deep capital markets because of the Securities Acts of 1933 and 1934. That gave us transparency, liquidity, and accessibility for that era. What we're going through right now is that Cambrian explosion that's going to happen again. I was actually struck by something Her Royal Highness said, which is that the legacy of a people or a civilization is not what they build, that's part of it, but it's what they enable others to build. And so as we build out the regulatory schema for the digital revolution in money, that is what enables people to build more quickly, which enables people to represent value. Like at 1789 Capital, we're tech investors. We are all about capital formation, and we need to move quicker all the time. And the digital revolution here is a step change of the order of magnitude of going from barter to currency. And now we're going from traditional currency that we've thought about for a couple thousand years now to a digital currency, which is going to accelerate everything in a way that I think even people like me or Zoe have a hard time grasping.
I think we all have a kind of a hard time grasping it, and we'll get to this, which is our own personal adoption of AI. Who in the room has used ChatGPT, Claude, Gemini? I think the speed with which we all adopt will have an amazing impact in terms of how we use digital currency. Now, Angus, you are in charge of global digital solutions at State Street, okay?
Yep.
You are the spearhead of the brand of trust. What you do in this space will have a phenomenal global impact. Is it a revolution? You know, Zoe talked about the experiment, but where is it for State Street? How are you using and going to use digital currency for us?
So I think for State Street, what's absolutely key is we can manage both the traditional and the digital together. It is a revolution, but it's going to take time. I know it looks like it's moving ahead at warp speed, but at the same time, you know, when I look at our customers, we're here to serve asset managers, asset owners, and they are along this massive spectrum of those that are at the absolute forefront and that are driving forward with, you know, tokenization being absolutely critical and you know, driving the innovation on that. But we've got a whole load of customers that are still at the stage of going, what is tokenization and why do we need this? So for us, it's how do we manage that hybrid setup that we're going to see for, you know, a significant amount of time still to come. And it's a little bit back to what the guys here were saying as well around, we've got to start to prepare for a model that is 24/7, real-time data management, real-time liquidity, distribution across multiple rails, whether digital or traditional. And I'm really hopeful that in 3 to 4 years' time, we won't be talking about digital or traditional. We're just talking about the change in a operating model that has significantly progressed.
Fabio, you're the Chief Financial Officer at Cassa Depositi e Prestiti. I hope
Perfect.
I got that.
Yeah.
Listening to this conversation so far, you have a burden of responsibility within the Italian context. Can you frame tokenization for this audience for Europe, for Italy, or the other way around?
Sure. Well, first of all, thanks very much for having us here. Of course, as Cassa Depositi e Prestiti, we are the Italian national promotional institution. So our main mission is to foster the economic growth of the country and, of course, in the broader context of Europe. When we are talking about tokenization, DLTs, and so on and so forth, in the end, we are talking about an infrastructure.
Yeah.
It's at the crossroad in some way of financial market and technology. I completely agree when we are saying that it's not a technological matter. There is an urgency in some way to integrate this type of technology, which, by the way, is well established, well known, broadly used in different industries into the financial markets. Unfortunately, what we did so far was to try to adapt the technology to the actual frame of how financial markets are working. Basically, DLT, if you're going at the very beginning, was all about disintermediation, instant payments, was about trust. You're talking about stablecoins. Stablecoin is the typical way on how we adapted, in some way, the DLT concept to the real world. You know, we tweaked, in some way, the concept of...
Well, I think stablecoins give us all a level of confidence because we understand a stablecoin is backed by bonds. It's backed by the United States government.
That's it.
You know, it's an irrevocable level of trust. I own a stablecoin. I own a piece of America. I'm grand, you know?
But trust should be embedded in the DLT concept. And so we just, you know, accelerated this concept by using a collateral. So this is important because this allowed us to use stablecoins as a way. This is accelerating. This will accelerate is an innovation. In my point of view, it's not just a matter of speed, but it's also a matter of how we will be able to let it grow at a scale, especially in Europe.
Chris, I feel an interjection, but I'm going to bring, in the interest of fairness, I'll bring Eric in for his opening contribution in framing this for us, and then by all means, jump in.
Yeah, so I completely agree this is a revolution, and what's becoming possible now, and how that coexists and, you know, ultimately replaces, you know, the conventional ways of, you know, payments, investments, and so forth, We're very, very early stage in that. From Adepar's perspective, we have a little bit of a unique view on this. So we're a software platform that's enabling wealth and investment managers around the world to see everything they own, where they own it, and how they own it. Our clients now stretch across more than 60 countries, and together they have about $9 trillion of assets on our platform. So what we see in the data is early indications that people are actually, in fact, adopting and embracing what we're describing, but it's almost infinitesimally small right now. And so now the challenge, I think, is with a well-defined framework for innovating and iterating, how do we get that cycle speed for execution? In combination with entrepreneurs, with regulators, with banks, with central banks, et cetera, really to push that, like what's possible now, how do we fully capitalize on that?
Can I ask you, if you've oversight, if you've a vantage point of $9 trillion worth of assets, what are we embracing? Are we embracing what Mike Novogratz and what Scaramucci would try and sell to us, which is cryptocurrency, the classic crypto things that have been marketed to us and we understand, or is it stable coins? What is it within the digital world that we are currently adopting that you can see in the data?
Yeah, so because our business is 17 years old, like just going back even almost a decade, we had some family offices come onto Adepar where their origin of wealth was crypto assets. That's unusual, but there were some all the way back then. So we had to make our platform, which is able to denominate assets in any currency, out of client requests, like be able to redenominate your whole portfolio in terms of Bitcoin or Ethereum or what have you. Some of the more emerging patterns, though, are as money funds and so forth are becoming digitized. We're starting to see early indications of those actually showing up on the platform as well. But that's really the part that I was saying. Right now is still very, very small as a proportion of what we believe it can become.
And that's where the growth comes from. Chris, did you want to jump back in before I move it along?
Just quickly, talking about the distinction really between what we think of as classic cryptocurrency, say a Bitcoin or a stablecoin. Like these are categorical differences. Something like Bitcoin is a decentralized, legible, transparent, ultimately knowable form of value. It's a store of value, which is quite different from a stablecoin. A stablecoin, it was the point you were making. A stablecoin is just a representation of a dollar, right? Because let's say a USD1 or a USDC is 100% backed by bonds.
Yes.
Right. And so this is to the point about the technology.
See, I like that.
Pardon me?
I like that.
A lot of people like that. And so this is a way to engage in commerce more quickly, more transparently, more legibly. And you see this especially in the Global South, where we've been able to dollarize the Global South because people are able to access dollars via their phone. There's not an intermediary there. And so that has the effect of making people able to transact more quickly.
Is that the growth bit? Is that the exponential opportunity proof point earlier than we all presume and understand here in Europe? That digitization of the Global South, because the population there is so much more of a proposition perhaps than more mature economies.
100%, because the governments there have often restricted currency inflow and outflow for lots of reasons, some good, some bad, some debatable. But the point is that as soon as people were able to access dollars through stable coins, through their phones, because everybody's got a phone, this enabled commerce at scale. And this was good for people because it spread prosperity.
Okay. We've got a lot to get through and 10 minutes to do it in.
But can I just interject? I make a slightly controversial comment.
Please do.
To me, crypto, Bitcoin, and I mean, our funds do own Bitcoin. It's an interesting digital gold thesis. Crypto has actually been very, very negative for people understanding the true value add, as actually we were talking about, of this revolution. You're talking about massively rewiring around the globe the way money value moves. That is massive. So getting into the crypto bro language actually is really not...
Did you say crypto bro?
Yeah. Yes. Everybody knows what that means.
Your son is going to be on the phone again. You've got to behave yourself on this panel.
So just the final point, the fact that right now capital is not as available as it used to be, what we're talking about is actually velocity of capital. from point A to point B is accelerating. That's massively valuable right now.
But then this goes to the point with you, Angus, which is about if it's a rewiring. So this is about us rethinking, rewiring our own thinking in asset management, in banking, and in retail, all three pillars. But to State Street, this is about rewiring how you settle, where you settle, who your counterparties are. Does it reduce counterparty risk? Does it rev up the settlement process? Does it take costs out of the system? Because fundamentally, banks and asset managers are going to look at this as a cost opportunity and efficiency, aren't they?
They are, and this is where we have a very fine balance to have here. In that, on the one hand, we have massive trust built up with our customer base. They rely on us for that. They rely on us to manage risk. And I know we talked about regulation before.
Yep.
Actually, regulation, I think, in this space is a really good thing. And it's a good thing when it's done correctly. And it's a good thing when you have principle-based regulation. And I think we've certainly seen that to a large degree in Europe with MiCA. I think it lays out where many of the areas in which the guardrails in which you can operate, which is a good thing. I think the other thing which I'm really seeing is we've got to be very careful about the fragmentation in this space as well. If we're here to generate efficiency, then when we talk about the plethora of blockchains that are being set up, the plethora of vendors that are creating new little roles, unique roles, at some point that fragmentation is going to cause as much of a problem. And I think where regulation is hugely helpful is that it creates a bar that organizations do have to meet. And those that do meet that bar, as we were discussing before we came on, are the ones that are going to be, I think, successful in this space.
It's interesting, when we were preparing for this panel told me, we don't want to spend the whole time talking about regulation, Manus. I'm going to show you the sheet of prep on regulation. Okay? It took up an awful lot of our time. But I think you've nicely moved along. Fabio, this is your whole point. To coin a phrase for you, Europe's problem isn't over-regulation. So that's very different to what we heard all day yesterday. Yesterday, Europe got a kicking in terms of its over-regulation. In this space, you say it's about fragmentation rather than regulation. Can you just expound on that? 27 nations, are we all just traveling different roads?
Yes, of course. When we're talking about Europe, it's very easy to adapt the word regulation, are two words that comes very well together, right? But in this case, to be honest, in my point of view, it's true that what is coming out is also a way of how the geopolitical fragmentation is going on. The United States are moving in a certain way, they're accelerating. Europe, as always, we are first wearing the seatbelt before starting the engine in some way. So this is exactly how it was. Now, to be honest, we need an acceleration. But in my point of view, regulation is not bad. Also, as we have to take into account that we are talking often about retail investors, about money protection, about retail investors, and all these very easy way of moving money from one country to another, and so on. Of course, got also a lot of compliance issues, anti-money laundering issues, and so on and so forth. In my point of view, the real burden, the real block at the moment is interoperability. In the sense that at the moment, all those DLT that are not talking to each other in the end. We are using DLT to be connected with the systems in the banking systems, into the legacies, so on and so forth, but they are not talking to each other. So we need to evolve in some way the ecosystem. Again, having a digital infrastructure that is working, and after that, of course, this will accelerate the adoption. So I'm not really worried about the regulation, as you were saying before, rather than how we can create and accelerate. It's not just a matter of speed, as we were saying, but it's also a matter of being able to create an infrastructure at scale, especially here in Europe.
And I want you all to think about the answer to this, which is what's the one thing that we could remove to accelerate things, not within the American context, because I think you're driving on N95 at speed. You're breaking the speed limit. Eric, just pick up on the regulation theme, and then we'll whip back.
Yeah, so I think in Europe specifically, like MiCA is a clear framework that allows for just much more rapid iteration with the understanding of what the rules are. Like that was what we had lacked in the, for example, in the prior administration in the US. Like with that, I think it also gives Europe the opportunity then, to Zoe's point, like let's not focus on the, crypto assets. Let's focus on the underlying infrastructure that can unify and harmonize how business gets done in Europe, how money flows in Europe, and do that in a way that's, internally consistent, but allows for just really rapid iteration.
Can I just, one more thing
Jump in.
to add to that is the problem in Europe is the governance problem of 27 nation states and one central command and control. This digitization of everything isn't going to solve that problem. So for me, the legacy banks have a very old technology. So they need to actually reinvest in their technology. And what they, I think the danger of legacy systems, the newer, I mean, you look at Brazil, neobanks, they're huge, they're fast because they haven't had to deal with as much legacy infrastructure.
Yeah.
So for me, Europe will be a very interesting experiment. How do you get Brussels to stop experimenting? And maybe by 2030, we will have a CBDC. 2030 is way too far into the future. So we have...
and just for the audience, CBTC is a...
Central bank digital currency.
Thank you very much. There you go. Acronyms.
If I may just jump in on this one, this as real a key point. Capital Markets Union, in the end, is what is missing actually in Europe, and unfortunately, DLT, blockchain, and tokenization is going exactly along this way. Until we are not able to solve the issue of having a unique capital markets, in the end, technology will not be helpful in this respect.
But can I just come back to
please.
What is the purpose of DLT and tokenization? It's back to that point of it's moving the business model for the whole, for the industry. And actually what I quite like about one of the things in Europe is, when you look at Pontis and you look at actually can Target 2, if it moves to more of a 24/7 type operation and interoperates with a set of digital asset platforms, that isn't a bad solution at the end of it either. And I think there's one part of the solution.
While Europe debates, I like what you said. Europe puts the seatbelt on before it's fiddling with the seatbelt, while everybody else has already taken off on the journey. Chris, let me bring it back to you. Europe. I know, Zoe, you're based in New York, but Europe per se is debating what to do, how to do it best, and we're going at a different speed. 93%, stablecoins in the United States of America, 93% of the market in the world is backed by US assets. Can you just tell the audience the speed with which the United States is moving with dominance? And I come back to that phrase because I don't think it's any accident that we have a new level of dominance, sphere of influence within the crypto space from the United States of America. It is a political juggernaut at the moment from this White House in this lane.
It's a priority for this White House. It was laid out in President Trump's Project Crypto about a year or so ago, which was written by his AI czar, David Sachs, plus input from Paul Atkins at the SEC and some of the other important regulators in the United States. And it is a very self-consciously created program in order to create a regulatory framework that is obviously backed by the government, which aims to make the United States the digital asset capital of the world. And like having had these discussions with Sachs and with Paul Atkins at SEC, they very much look at this as the beginning of a new era, akin to what happened in the 1930s, which is, again, this is about capital formation and commerce. How do we represent value? How do we create the next era of finance so that people can do the underlying things that happen in the economy? You innovate, you build new technologies, people trade with one another. This is about making that happen at scale, allowing capital to deploy at scale. That's what we do. At 1789 Capital, we invest in businesses, but the ultimate winner isn't just who invents the best technology, it's who's able to deploy it at scale, and that means capital formation, which ultimately leads back to the subject of this panel, which is how do we digitize that and do it very, very quickly?
And that comes down to a capital markets union. By the way, in 1989, I was the voice of the euro for CNBC. I have no objection in being the voice of the digital currency in 2026 in Rome. Ladies and gentlemen, your opening panel for the day: how do we digitize, tokenize, and revolutionize currency? Okay, so that is the infrastructure. I'm going to let the panel leave because we're going to set up for the next conversation. Thank you very much. We didn't drown in regulation. That's the saving grace there. So that's the architecture of the financial system. And as we were saying, adoption of Gemini, of ChatGPT, of Claude. We're all on that personal journey. And so the adoption then of currency is the next logical thing. I just wonder to what extent does our own personal journey on adoption within AI have an impact in terms of our ability to adopt in autonomy? So that's the physical infrastructure that we've just discussed. So what is it that's going to move the needle in autonomy? Well, there's one gentleman who knows a thing or two about that subject. His name is Travis Kalanick. And we're going to bridge that gap between the digital currency world, the revolution that's underway in banking, to autonomy. In conversation with Barbara Cafagna, I give you session 2 at FII Rome. Good morning.
Hi, everybody. Hi, Travis.
Hello.
So you changed our life in transportation with Uber. You digitalized the urban transport with Atoms, your company. Are you now trying to do the same thing to the physical economy, such as food, mining, logistics, turning atoms into software?
Well, look, I think, you know, an entrepreneur's journey sort of is never just modular and sort of separate. It's all kind of part of the same story. And from the very beginning, I've always been about what I call digitizing the physical world. And that means treating atoms like bits. And Uber was maybe the first chapter in that, which is when you first use it, you had glass, you know, phone with glass, and you would tap on that glass and a car would appear. That was sci-fi for some period of time. A car would physically, in the physical world, would move towards you because you tapped on a phone. And so it was the beginning, but it was really an app in an app store. And where we're going is to a sort of much more integrated place where you're really treating atoms like bits. I like to say there's a, you know, the bits world we know is a computer. There's CPU, storage, network. CPU manipulates the bits, storage stores bits, network moves bits from point A to point B. If you're treating atoms like bits, CPU manipulates bits. What manipulates atoms? That's manufacturing. Storage stores bits. What stores atoms? Real estate. Network moves bits from point A to point B. What moves atoms? That'd be logistics or transport. And so these are your 3 core computing resources in an atoms-based computer. I know I'm going a little long here, but I'm trying to explain. That's kind of how we view the world. And so our company is about physical automation, sort of a physical automation to transform industry, making machines very specific around different industries, food, mining, and transport, to sort of bring AI into the physical world. Yeah.
So these fields were business, we consider them as business. Now they are becoming strategic infrastructure. So you give life and a new infrastructure to this world and business. As AI moves from software into physical worlds, in your opinion, who should control this system? The private sector, the governments, or a new kind of private-public architecture?
I guess it depends what your goal is. If your goal is about progress for cities, progress for people, then you want to have a sort of foundational model for an even playing field for people to sort of compete and offer services to consumers, but it shouldn't be about control. It should be about progress. And I think that may be where sometimes regulators in lots of different jurisdictions get it wrong. Yeah.
This leads me to the next question, but I guess I know how you will answer, because as you know, here you are in one of the cities of the world where Uber doesn't work so much, because we have a very strong taxi driver unions. So when you look at Europe's combination of strong regulators, powerful labor protections, and fragmented markets, do you see it as the hardest place in the world to scale autonomous system, or as the ultimate stress that if you win here, you can win everywhere, and in Rome especially?
Well, there's a couple things. First is, you know, I always used to think when I was running Uber, I was like, I don't really understand how it got so controversial for one citizen to take another citizen across town. How did that become so controversial? And this comes back to the comments about progress and about control and power. It should be very straightforward to have a system like Uber or something else that moves people really efficiently at a low cost. But for some reason, certain jurisdictions around the world just are not okay with that kind of progress, and they hold on to the past. Autonomy is like a whole new layer of that. And so, you know, at some point, cities, countries will be surrounded at their borders with progress, and they will eventually move forward. I think in Germany recently, they sort of adopted Tesla's FSD almost a decade after it was rolled out. You will eventually get it. The question is when. And is it good that the people of Germany didn't get it for 10 years? I don't think so. You know, there are a number of people who are sort of, I mean, well, we already know that FSD is way safer than driving a normal car, that when you have FSD plus a driver, it is way safer. So you're less safe. You're more stressed. You're living not in the future, but in the past. And the question is how long do you hold the future back in the name of regulation and control?
We should give up with the idea of technological sovereignty in your mind, or as those are strategic infrastructure, we should keep this idea of being sovereign as European.
I'm not sure I understand the question. Say it one more time.
In Europe,
yeah,
there is a lot of talk about technological sovereignty. Do you think that from a brutally practical entrepreneur's perspective, what would a serious European autonomy strategy actually do in the next 3 or 5 years? What is just political theater? What is right to do?
Well, look, I think there's a lot of good intentions with regulations. And a lot of times you see regulations, you go, you know what, I understand the intention and they're trying to get to a good place. The problem is when you get too caught up in the process versus the outcome, right? If the outcome, Tesla FSD is like a perfect example. If the outcome is about safety for your citizens, it should have been rolled out many years ago. But if the process becomes the outcome, then it gets tough. Then something that's good for people rolls out a decade late.
Now, in this period, the attention is very focused on humanoids. But, of course, we don't have, for example, the washing machine. It's not a human humanoid robots that does like this. And Atom is focused on specialized robots, not human. So why this choice?
Well, look, you know, I think there's a couple things. Anytime you see the humanoid, there was a humanoid Olympics in China recently, and you had a bunch of humanoids running the marathon. And it was a little clunky, it was a little awkward, but we know they're going to get there. But I kept watching these humanoids running. I'd say, imagine how much faster they could be if they had wheels. And so it's like, we have to look at what is the purpose of a humanoid versus a different form. If I want to get across town, I don't jump on a humanoid's back and then he runs. Yeah. If I want to get across town, I don't jump in a car and then have a humanoid drive it. Okay, not necessary. Or if you're in the food world, if I wanted to make 1,000 pancakes in an hour, I wouldn't have a humanoid, you know, and have like 100 of them trying to make 1,000 pancakes. You could do it way more efficiently with specialized machinery and specialized robotics. Humanoids will work when the task that they're doing is low scale and in a highly human designed environment. So this would be like the home, where you're not doing laundry all day long. You're not cooking all day long. You're not cleaning all day long, but I need one machine that can do a lot of different things so it becomes generalized. And it's in a place that's designed for humans, and therefore it has to act and move and ergonomically feel like a human. But places where you're doing high scale work, industrial scale work, you're just going to have a specialized machine that does it way better.
Okay, thank you, Travis Kalanick.
Yeah.
I leave the stage now to Luca Benici, yes, partner McKinsey & Company, and the title is Sovereign AI, Power or Illusion?
We speak about artificial intelligence as if it lives in the cloud. But AI is not weightless. It is physical. It lives in massive warehouses of processing power. It consumes staggering amounts of energy. And it depends on systems controlled by only a handful of global powers. Now, the race for sovereign AI has begun. Governments are mobilizing billions, building domestic chips, national clouds, localized models. A new technological arms race, driven by one fear: dependence. But ambition is colliding with reality. Europe's CHIPS Act promised 20% of the global semiconductor market by 2030. Internal forecasts now suggest it may reach barely 12. Europe pioneered the AI Act, setting global standards for transparency, compliance, and risk. But while Europe writes the rules, others are building the platforms. Europe's brightest companies show enormous promise. Yet most commercial AI applications across the continent still rely on American foundational models, which raises a deeper question. Is sovereign AI an achievable strategy that balances innovation, trust, and competitiveness, or just a political aspiration that risks fragmenting global AI collaboration? The stakes are enormous. By 2030, AI could unlock nearly $2 trillion in economic value across Europe, but only if adoption moves fast enough and infrastructure scales fast enough. The future will not be decided by who writes the rules, but by who commands the code. So in the age of artificial intelligence, is sovereign AI true power, or simply the illusion of control?
And now our next panel will address sovereign AI, power or illusion. Please welcome our dear panel to the stage, who will really examine what exactly is going on. Power or illusion, sovereign AI. And join me and welcome our panel to the stage. We're delighted that we have them here. And of course, this great panel of experts here who will talk to us about what's going on in the area will be moderated expertly by the partner from McKinsey & Company. Luca Benici is our dear moderator. Ladies and gentlemen, thank you very much.
Sovereign AI, power or illusion? AI sovereignty has become a strategic imperative for both governments as well as enterprises that seek secure and critical infrastructure, data center, and talent in a world dominated by a handful of AI platforms. In a recent survey that we ran at McKinsey, where we interviewed over 300 of global enterprise and AI leaders across the globe, we found out that over 70% of them define sovereign AI as of strategic imperative or a topic of existential concern. We estimated also that this market is worth $500 billion to $600 billion by 2030, roughly 30 to 40% of the global AI spend. While some regions are mobilizing billions for sovereign cloud, chips, AI models, most still face gaps in regulatory capacity, energy, data center infrastructure, venture funding, and skills that are required in order to meet the big tech investments. Today's panel wants to deep dive a bit in the topic of sovereign AI, and we want to understand whether sovereign AI is actually an achievable industrial strategy or just a political aspiration that risks fragmenting AI collaboration. My name is Luca Benici. I'm a partner at McKinsey. I lead our tech and enterprise AI for the broader EMA region, and I globally co-lead our sovereign AI service line. Joining me today on stage, we have Deemah AlYahya, Secretary General of the Digital Cooperation Organization, a leading advocate for global digital cooperation, working with governments, industry, international partners to ensure digital economy creates opportunities for all. Next, His Excellency Dr. David Sengeh, the Chief Minister and Chief Innovation Officer at Sierra Leone, serving as a principal advisor to both the President as well as the Vice President, while coordinating the delivery of the government's agenda across ministries, departments, and agencies. Thirdly, we have Paula Assis, Senior Vice President and Chair for IBM Europe, Middle East, Africa, and Asia Pacific, overseeing IBM business operations across more than 170 countries. A globally recognized technology executive, she leads the company's strategic direction in some of the world's most dynamic and diverse markets, driving growth, innovation, client success across IBM hybrid cloud, AI, and industry-focused solutions portfolio. Last but not least, Josephine Kant, Head of the Ventures at the UK's Sovereign AI Fund. She leads investments in British AI startups and is helping shape how the UK backs its most ambitious founders with capital, compute, talent, and the broader support needed in order to build global AI leaders from Britain. Since launching in April, the Sovereign AI Fund has already made 3 direct investments: Colossum, Ineffable Intelligence, and Isomorphic Labs. Perhaps to get going, we'll start with Ana Paula, and wanted to ask you, if you define sovereign AI from your seat, what is the minimum a country or an enterprise must actually control for this to mean anything than just pure branding?
Luca, thank you so much, and very happy to be here with these distinct panelists. So sovereignty is not about isolation, right? Sovereignty is about having control on the elements of the stack that are going to generate the biggest business impact. So what are those elements? Data, models, and infrastructure. Starting with the data aspect, which is really the fuel of AI, to have the right governance, to have the right privacy elements in place. Can you move the data to ensure that it is going to be consumed by your AI? So those are the aspects that you need to be thinking about when you're looking at the data layer. Then you are going to go to the model layer. Can you switch to another model without having to start everything from scratch, without having to retrain all your applications again because you're doing that, that change? And finally, if you need to move your workloads from one place to another, can you do that without breaking your environment, right? So it's really about resiliency, it's really about business continuity. Then the next step you need to consider is, well, certainly you cannot do that for everything in your organization. It's not going to be costly effective, it's not going to be technically effective. So you need to understand the tiers of critical operations that you have. What is really differentiating for your business? What is going to drive competitive advantage? And what are some parts of your applications that are more like commodity, right? And that is going to define the level of sovereignty that you want to apply to your systems. And why is it mattering now? Why is this so important? Because AI, the models, they are creating different levels of dependency right now. Costs that are changing, terms and conditions that are changing, data requirements that are being imposed. And what we have discovered in a recent study that we did with our clients is that only 9% of the companies that we interviewed really have visibility of the dependencies that they have today. So there is a lot that needs to happen for companies, governments, organizations to understand how am I going to control these dependencies that I have. And finally, 71% of the companies that we interviewed say that it will be very difficult for them to change the providers that they have today, right? So in conclusion, sovereignty is not about building walls. It's more about building bridges, having visibility of your environment, understanding your dependencies, and mapping what is strategic, what is non-strategic, so that you can define a better way to work with those dependencies and create the ways to increase the resiliency of your environment.
Thank you, Anna. Deemah, Secretary General, how do you ensure that sovereign AI doesn't become a luxury for rich states only? And what tools, financing models, and cooperations needs to happen for the mid-income and smaller countries in order not to be permanently locked out from the AI potential?
Well, first, it's great to be here and discussing a very, very important topic, which is, I think, controversial right now. And looking at sovereignty and the importance of sovereignty, as Anna was mentioning, is that we see that we're building more bridges and building more walls rather than bridges. And these walls will actually become a preventive for a lot of countries and nations, for them to bridge that gap, for them to leapfrog and become mature when it comes to either consuming the technology or producing the technology itself. What really keeps us up at night is that gap. And is that gap increasing or decreasing? We have been trying to solve the digital gap for quite some time now, multiple decades now. The thing is AI is increasing that gap. And we are going to be in a position where it's not about only if we have the right infrastructure to create local content, but can we use it? If 1/3 of the world right now as population don't even have access to internet, don't even have access to communication, which is the now fundamental human right. It's as important as water and electricity. So how do we expect nations to invest and to be updated when it comes to creating their own sovereign and localized AI models? This is where, if we like it or not, we are interconnected and we do have to cooperate and work together. Every country has a competitive advantage, and by connecting these competitive advantages together, we can leapfrog faster and bridge that AI divide quicker.
Thank you. Your Excellency, David Sengeh, energy, water, and grid constraints are emerging as hard bottlenecks to AI expansion. If a country doesn't have the power, the cooling for large-scale data center infrastructure, can it ever be sovereign in AI? Or no matter how advanced its regulations or research labs are, it will be left out?
Look, thank you very much, and such a wonderful panel. I really want to answer this question by starting where Deemah left it, which is about equity and justice. AI and technology cannot be a reason why the world becomes more unequal. And we have to shift our mindset, including in the kinds of questions and ways we think about sovereignty. And if you think about energy and water, those are atoms. Those are infrastructure that are important. But the question is, why do you need AI? What's our application? Is it a healthcare application? Do I need to run my models fully on my own data systems and GPUs before I can use an AI application to address healthcare, diagnosis for some radiologists, or learning? And we're already seeing that if we shift our mindset and orientation from everything me, closed walls, we're able to share and impact in ways that we, our citizens themselves, benefit. Yes, we can get power, and we have to, as a country in Sierra Leone, figure out how our people get power now anyway. My priority is not trying to get power for data centers. I want the rest of my people in Sierra Leone to have access to clean water. It's not about cooling systems that are for AI. And so we have to shift our mindset. But I do care about education. I do want to be able to use AI to improve learning outcomes. And this is why with Google DeepMind, they did a study in Sierra Leone and Italy where they saw that if you introduce guided learning in classrooms, AI applications with teachers and students, you're able to get learning outcome improvements by up to 1.2 to 1.7 years extra learning. That is not a model that was built in Sierra Leone. It was a model that was built in around the world by Google and applied in Italy and Sierra Leone. Octopus Energy is another example where they have models on wind and solar that they've built in the UK, but we're applying it in Sierra Leone to provide energy in a solution that we have. So if you take a step back, I'm Sierra Leonean, my wife is American, we pay taxes in Sierra Leone and the US. My data is in Sierra Leone and in the US, my financial data. So if we are speaking about data sovereignty, there are many people here who have multiple passports. They move from one country to another. Their data exists across all of those countries. When we begin to think that, no, your data has to be in UK and it cannot reside in some other country, what happens when you travel? What happens when you move your money? What happens when you do certain activities? So we have to change our mindset on what sovereignty is and begin to understand it fundamentally in ways that does not make life much harder for us as individuals and as citizens. So we're not necessarily asking the right questions that focus on the applications and the why. And really, finally, the Minister of Innovation from Sierra Leone has been pushing a lot on data embassies. We've seen in the war, if all of your data is in one location and it's bombed and you're trying to protect it, that's it. We already have embassies around the world where you are safe with diplomacy. What does it look like to have data embassies across the world that are shared and protected? These are conversations that we need to be having now so that we understand sovereignty. Yes, independence. Yes, ability to use what we want for our own priorities, and certainly things that we can share. Sierra Leone does not need to go and invest the billions as UAE did to develop its own national model. But we can use UAE's national large language models in Sierra Leone to improve healthcare and education. That's what we want. That's the world that we must be moving towards. So is it an illusion? No. We as humans have to begin to understand that we have to force the collaboration. AI is not going to do it by itself. And maybe the big tech companies are not going to do it by themselves because they want to build for every country. That's their business model. As political leaders, we have to work with them to make sure that they're building ways and solutions. That does not mean every country spends X number of millions of dollars to build its own systems. But I'm super excited about the opportunities that there are. And I think we're getting more connected around the world.
Thank you. Josephine, you ran investments at the Sovereign AI Fund in the UK. When you talk about sovereignty, what capabilities would you want the UK to have 5 or 10 years from now that it doesn't have today?
I'm new to government, and I think that's quite important to start with. I took this role in January, and before that, I've only worked in technology and venture capital. So I'm going to do something which is perhaps a little bit atypical to people that work in government, which is I'm going to keep it really real for a second. I think the word sovereign and sovereignty and sovereign compute is really overused. Allow me to give you a really quick example. I go and train a model on Isambard, which is public UK infrastructure. Isambard runs on GH200s, which are NVIDIA chips. Does NVIDIA make their own chips? No, they just design them. Who makes the chips? Taiwan makes the chips. Where does Taiwan get the machine that makes the chips? The Netherlands. Where does ASML get the parts to make the machine that makes the chips? Lots of countries, including Germany. Over 85% of ASML's parts that go into the lithography machine aren't made in the Netherlands. So let's be really clear that when we talk about sovereignty and we talk about sovereign capabilities, you're talking about the most globally interdependent object that humanity might have ever created. So when I think about capabilities that I want the UK to have, I think about focus. £500 million is not a large sovereign fund. It is the tip of the spear. And the way that we build capabilities is by being really diligent about what areas we want to invest in, so that in 10 years, we look back and we realize we have a critical node and that we have to build up these capabilities so that we can work together with other countries. So I really try to get away from this idea of sovereignty as control, and I look at sovereignty as leverage.
Thank you. Anna, maybe moving on, if you look at right now what matters the most for sovereignty, is it more important to own your own models and infrastructure, or developing the regulation to ensure that global platforms from global tech providers operate on your own terms?
Yeah, I do believe that there is some level of model developing that you can consider. I'll give a great example, a work we do with L'Oréal in Paris. They decided to create their own model for cosmetics because they believe that this is the most critical data that they have in their environment. This is what provides competitive advantage for them. They picked a pre-trained open source model. They're training that model with their own data. I need to have control of that model. That's not going to work for all the applications that you want to develop, right? So you have to really understand what is strategic and what's not strategic. On the policy front, it's about smart regulation, right? It's understanding what are the risks that are involved, not controlling the technology itself, and creating the capabilities to provide oversight on those risks. So I think the combination of those elements, understanding the strategic component and creating a regulation that is more concerned about the impacts, about the risks that are involved, and not controlling every element of the stack, I think is the right balance.
Thank you. Going back, Your Excellency Deemah, Secretary General, on the topic of capabilities. Obviously, a lot of talks happen, around the chips and sovereign clouds, but talent is a core enabler to run these machines effectively. And so, given the global competition on, AI researchers, engineers, what would be a serious strategy to both attract and retain the talent, and who's getting it right, in your opinion?
Well, a very important question, really, because there is a global competition when it comes to talent acquisition. Also, going back to the sovereignty topic as well, nations, you recognize that nations want to create their capabilities or internal capabilities more. But looking at the diversity of talents in the world, looking at as well the speed of technology, it really enforces us to open our markets and our borders to bring in a more diverse brain power from around the world. Silicon Valley is Silicon Valley because it's diversity, because if it's a collection of cultures, minds, expertise, and that diversity of talents and skills, which infuses and sparks that innovation. I think that with looking at what we're doing in the Digital Cooperation Organization, which is creating the right governance platforms that enables innovators to innovate across or cross-border in other countries to utilize that computing power, but share IP as well. So how can we enable innovators to have access to that computing power, but at the same time create ventures that will infuse their economies and have a shared opportunity for the innovators as well as the public sector. So this is where it's very important for us to create innovative ways and governance frameworks to enable that talent to prosper beyond its borders.
Thank you. Maybe moving on, Your Excellency Sengeh, we touched a little bit upon this earlier, but in your opinion, from a multilateral perspective, what is the line between legitimate AI sovereignty and harmful digital protectionism?
I think it's become very clear from this really wonderful panel that the conversations on sovereignty maybe as understood outside in the real world and from policymakers is different. That we're really asking questions around strategy, impact, and solutions. And for us in 2019, when I first joined government as Chief Innovation Officer, we launched what we call the National Innovation and Digital Strategy back then. One of the 3 priorities that we said was Sierra Leone should be country as AI lab, country as the A lab. And people thought, I mean, why would Sierra Leone want to be that? It doesn't have the basic fundamentals. But we were looking ahead with the vision of His Excellency, the President, to say, we may not have all those issues. We know we're not going to develop our own large language models now, but we want to benefit from the applications of AI. And during COVID, we used AI models to push our healthcare, to understand the healthcare personnel that we have and place them around. Now we use AI in energy, we use AI in education. It is important for us that we prioritize human capital development, that we're training young people who know how to code, who know how to apply those models, because that's what we need. The world is going to need human capital from all across, and we have them. 70% of the population in Sierra Leone is under 35. When we train them as data scientists, they will work for people who are in London, people who are in America and Europe, and the solutions they develop will all benefit from again.
Yes.
Thank you. I know we are at time, but perhaps one last intervention, Josephine. A lot of countries and governments are announcing sovereign AI funds. What do you think is the role of the state in supporting as a strategic partner to AI companies?
It's very simple. It's, can you make your country the very best place to start a company, to build a company, and to win everywhere? And when I think about the UK, I think we win on supply and we lose on retention, which is that we're a really excellent nursery for the very best talent in the world, but we're quite an expensive finishing school. So it's my job to make sure that the very best founders in the world that want to build in the UK, that the sovereign fund makes it attractive for them to build here. And that's not about being patriotic. That's not about telling founders you should build in this country because you're from here. It's about actually making it easier for them to do so. So the way that we support companies is not just with capital. We give them 1 million GPU hours to actually train their next model in the UK. We unblock visas for them. We can be their first customer. There's nothing more valuable than having government as your first customer. We give them access to data sets. And we help with soft policy levers. If you can make the very best regulatory environment for a company to build, they will want to be here. That's why we invested in David Silver and Ineffable. David Silver is one of the most important AI researchers in the world. He could have built his company anywhere. He chose to build it in the UK. So it's our job to make sure that the UK is the very best country for him to build, so that no founder ever has to choose between their ambition and their home.
Excellent. Thank you very much. Thank you, dear panelists, and thank you, everyone, for listening in.
And Luca, thank you very much. There we had Luca Benici. I want to add my thanks for that panel there, really expertly moderated, looking at what's happening with AI, power, and illusion. Well, there's not much illusion left when it comes to AI. In fact, there probably is tons of illusion left. But this is the excitement that's there for all of us to discover. But again, it was so good to have that panel there, really look at what is going on and look very, very deeply into AI. Where do we go from here? Because it is something that encompasses all our lives at every stage. And it is something I think we all need to be careful about and to look at very, very closely. We have so much more in the afternoon for you. We continue our conversation here, but we're now going to shift gears a little bit. And again, looking at holding the lead in Europe, capital, and the future of sport. Eleni Giokos is back with us, and she is in conversation with Alejandro Agag. I want you to give them both a very, very warm welcome. We're delighted to welcome them back on stage, Alejandra and Eleni. Thank you.
Good morning, ladies and gentlemen. I know you all went out last night. Can I have a bit more energy? Good morning, everyone. Yeah. Fantastic. Really delighted to have Alejandro Agag with me, founder and chairman of Formula E, E1 Series, founder and CEO of Extreme H. We're talking about sports, the future of sport, and all the work that you've been doing. But importantly, I just want to mention this. You were in politics, and you're now in sport. Tell me about the pivot.
Well, excuse me. Yes, I was in politics for many years. Good morning, everyone. Good morning, Your Royal Highness, my neighbor, the ambassador of Saudi in Italy, friends. Yes, I was in politics. And to be in politics is an experience I recommend to everyone, but for a short period of time. Politics is great. Politics is, where you can change the world. But also politics is very tough and is not very grateful as a profession. So I was very passionate for politics. I was a member of the European Parliament. I was Secretary General of the European People's Party. But then I started dating the daughter of my boss, and actually did marry her, and decided to resign from politics to avoid the conflict of interest and not work for my family.
Now the pivot makes sense. Okay.
So then I didn't have a job, but I had two friends, Flavio Briatore and Bernie Ecclestone, and they invited me to join them in motor racing, and that's how the pivot happened.
Yeah. Fantastic. And look, I mean, what's really interesting is, looking at what you're doing on the electric front. We were talking backstage, and I said, is this sort of, something that you're pushing because you're wanting to see this very heavily intensive, internal combustion engine industry move green, and whether it's an altruistic push? And you said no, it is about a sustainable business. So take me through this and sort of the base of what you're trying to achieve.
Yes, so after many years in, let's say, traditional racing, combustion racing, fuel racing, one of the sponsors that was with us told us, we don't want to continue in Formula One because Formula One is not sustainable. And we thought we need to create a green version of Formula One. So that was Formula E. So I would love to say the reason to create Formula E was that we were, altruistic and environmentalists and so on. Of course, we do care about the environment, but the main reason, and I think if you don't have a business case for anything, it doesn't have a future, is that we thought that there was a big opportunity for business on a greener version of motorsport. And that was Formula E, and Formula E is already 12 years old racing now, and it's in great shape. So actually, there was this opportunity, there was this gap to create that, but we still love combustion racing.
So when you got into Formula E and, looking at getting the auto players, the manufacturers on board to build the cars, to get the sponsors, to build the ecosystem, did you mimic that of Formula One to create what you have today? And was it difficult?
It's very interesting what's happening with Formula One and Formula E. When we started Formula E 12 years ago, Formula E got huge momentum. Formula One was not doing very well at the time, and we had a gap. And Bernie Ecclestone allowed us to grow because he didn't think we were going to be a challenge. And we grew very fast for 5 years. Then Formula One turned around. They did this Netflix show, Drive to Survive. They did a lot of things right, and they took off. And Formula One now, it's probably in the best moment in its history. And Formula E, we slowed down a bit the pace of growth. Now we're coming to the next moment, what we call the singularity event, when the Formula E cars will go faster than the Formula One cars. That is going to happen between 3 and 5 years. When that happens, when the singularity event happens, it's going to be very interesting to see what happens. And at the same time, Formula One, it's in a great internal conflict, because Formula One 5 years ago decided to go towards electric. And this year, the new regulation is 50% electric, 50% combustion. They are not happy with it. And the president of FIA, Mohammed Sulayem, wants to go back to V8. So in 4 years, Formula One will be completely going back to combustion, which is, I think, in my view, where it should be, because Formula One is pinnacle of combustion and fossil fuels, and we will be fully electric.
And when you say you're going to be faster in 4 years, are we talking seconds faster? How much faster are these vehicles?
So
these cars?
We are talking probably very few seconds faster. So our target is to beat Formula One in Monaco as soon as possible. So the pole position in Monaco, the fastest lap in Monaco is 1 minute 09 seconds. That's Lando Norris' fastest ever lap in Monaco. We're hoping to do 1 minute 08 seconds. So 1 second faster than Formula One. But 1 second faster, it's enough for us to show that electric cars can beat that. And then I'm sure that Formula One will do 1:07. So there will be this challenge between Formula One and...
So I want to talk about something else that you're doing that's quite interesting, is that with your E1 series, which is the electric boat racing, as well as what you're doing with Formula E, is that you have mixed teams of men and women competing against each other. How is that working out? What have you discovered in that process?
You know, the question of women driving in racing is always been a very tricky subject, because if you say, oh no, women cannot drive as fast as men, then you get into a lot of trouble. But the reality is there has not been very successful or at the top women in Formula One. We tried, and I've been trying to personally to have women racing for many, many years. I had a team in Formula 3 about 20 years ago where I took 2 female drivers. I tested 20 female drivers. I took 2. I paid for the whole season, but they didn't do well with the guys. They were always at the back. So we came up with the idea of making women and men a team. So every team has a woman and a man. So then it doesn't matter if one is faster or the other. They both need to perform to win. We took the idea from Wimbledon, the tennis, you know, how they call it, the mixed tennis,
yeah.
doubles. You have the woman and the man, they play, they're really fun games. If the guy makes a mistake, they lose. If the woman makes a mistake, they lose. They're both equally important for victory. That is what we are doing in Extreme H and in the boat races. And after a while, the woman and the man, if you give them the same machine, the performance gets very, very close.
So, I mean, have you seen the women now, performing the gap between men and women in terms of speed?
In 4 years, the gap between women and men, the first season was 1.4 seconds on average. The 4th year was 0.3 seconds on average.
Wow.
So the gap between men and women, if you give them the same machine and the same time in the car, reduces massively. Still, men have an edge because it's a physical sport. You need physical power. but the ability of the woman is exactly the same as the ability of the man to drive
That's
a car.
incredible. Okay, let's talk about, who's watching. Tell me about viewership, and I'm just curious in terms of broadcasting rights. What are some of the issues that you're experiencing right now? And I think everyone's talking about sort of how AI and how technology is going to impact sports. And it's quite interesting because I think humans love to see people compete against each other as opposed to seeing robots. You were saying also that at one point you were attempting to see robots, if people would watch robot races.
So I think sport, the core, the sport, the things around sport will be, of course, affected by AI. But the sport, I think, is going to be one of the sectors that is going to be least affected by AI. Because people want to watch humans playing football, driving cars, playing basketball. They want to watch the humans, and the AI cannot really add much to the actual performance of the player. We did, a few years ago, something called RoboRace. And we had these really cool cars. They were designed by Daniel Simon, the designer of Tron, the movie. And they had algorithms, and they were going around. And nobody wanted to watch them. People want to watch two humans fighting with each other, making the risk, being close. The risk is very important, by the way. I don't want any pilot to die or any sportsman to die. But the possibility that they can die makes a lot more interesting and catches the attention of the fans. Like, for example, skiing downhill, you're worried if the guy is going to crash, no? So that kind of thing. So yeah, AI, I think is going to be the opposite. AI is going to give people a lot more time, and they're going to be watching more sport.
Interesting. Okay. Last question. What are you betting big on? I mean, we didn't speak about extreme H, but it's based, hydrogen. What is it going to? I mean, what's going to drive sports forward? Would you say?
So we hedge our bets. We bet in electric. I am betting again very strong in electric. We think that that's our bet, and that we should go all in. And I think it's compatible. I think combustion racing and electric racing are both will have a great future. And then we're doing a bet in hydrogen. I don't know how.
You're not planning to take over Formula One completely, right?
No.
Want to watch Formula.
I like Formula One.
You still like it?
Maybe we will merge them together. we will see. But we did a bet in hydrogen, and it's, you follow the trends of the world. Now the world is again. 3 years ago, everybody was excited with hydrogen. Now they're less excited. Maybe they will be more excited. Yeah. So we create sports. We see where the world goes, and we try to.
Very quickly, okay, hands up. How many of you enjoy watching Formula One because you love the noise? Yes? How many of you don't care about the noise and just speed? Okay, interesting.
Yeah, but we have half of Aramco here. Of course they like it.
Okay, so that's the thing. I mean, this is the sound, the noise. I mean, that's the thing about Formula One. You love to hear that sound. Do you think that's not, the new generation won't care?
I think I love the sound, and I think people of my generation love the sound.
Yeah.
I think the younger generation is less bothered about the sound than we were. But we, old school, we like the sound.
Yeah. All right. Let's not give our age away, Alejandro. Thank you so much. Ladies and gentlemen, a big round of applause for Alejandro Agag.
Thank you so much. Good.
Thank you.
Eleni and Alejandro, thank you so much. And we'll all be brushing up on our Formula One skills, all of us ladies out there, right? It's the new future without a doubt. Now, I'm sure many of you have read many books about AI. We're all very interested. We're all looking to see what's happening. And many of the great thinkers in the world are writing about it. They're talking about it. We're now going to look at, can AI turn physics into the biggest investment opportunity of the decade? But one definitive book that you have to be reading is AI or Die. It is simply as simple as that. And the man who conceived this, the man who put it together, is with us here. He is the CEO of Sandbox AQ. Please give a very warm welcome to Jack Hidary. There you go, Jack. Take it away.
Thank you very much. Great to be here. Hey, Manfredi, everybody, how you doing? Great to see so many friends here in FII Rome. It's an incredible moment in AI. And today we're going to be talking about the future of AI and how it impacts our lives. So let's start, of course, with the economy itself. When we look at the economy, we know that LLMs are affecting each vertical. We can use it to make documents, we can make videos, we can make all kinds of. But how about the actual real economy? When we want to make a new medicine for cancer, when we want to make a new medicine for Alzheimer's, when we want to have a new kind of plane that maybe is 10% lighter, more fuel efficient, when we want to defend our countries with defense and national security, chemicals, energy, all this is not really a job for the LLMs, but is a job for the LQMs, large quantitative models. These are models not trained on Instagram, not trained on Bugs Bunny cartoons, but trained on the real world, trained on the engineering and physics of our actual world. This is what we're going to focus on right now. We need both of them. LLMs, very, very important to make all of our digital work, but LQMs, large quantitative models, to impact our daily lives. Even the Formula E that you just heard about now with Alejandro. When you look at a Formula One car, Formula E car, what is it made of mainly? It's made of carbon fiber. This is a material that we need to design, and the AIs that can design that are AIs that are based on material science. Not language models, but models understanding the physics of the car, of the materials. So that's a great example. Batteries. Oh, thank you very much. Okay, great. Batteries, also very, very important. In a Formula E car, even in a Formula One car, you have batteries in every single car. We need batteries for energy storage. Right now in Europe and the US, we can only store less than 2% of the energy that we create. That's a difficulty, that's a challenge. We need to be storing more energy so we can use it where we need it, in data centers, in our homes, in work, and in hospitals. And then semiconductor manufacturing as well. So when we think about discovering new batteries, this again is a job for a quantitative model. You can start with maybe 1 million ideas in battery chemistry and narrow it down to just a handful of those. The AI that we produce at Sandbox AQ, as you can see here, narrowed it down to one of these new discoveries. This is a novel battery chemistry that humans did not create. An AI created this, and we've tested it, and it works really, really well. This particular one is designed so it does not use cobalt. Cobalt only comes from 1 or 2 countries. It's a big choke point from a geopolitical point of view. And the customer for this needed a battery that did not have that supply chain dependency. And so we now have the ability to create batteries, and now we'll also talk about catalysts. Everything that you're using right now, the chair that you're sitting on, the pen that you're holding, the screen that you're using for your cell phone, all needed catalysts to make it happen. And so how do we make catalysts? Well, once again, it generally takes about 5 to 15 years to make a new catalyst. It takes a lot of money to do that. And once again, we need to do that because we need to take the output, for example, of the oil and gas industry and turn it into higher value products. That is what a catalyst does. We now have come out with AQ-CAT 25, which is the world frontier model for catalysts. And again, large language models, fantastic, very useful in all of our lives, ChatGPT and Gemini and Claude. But if you want to impact the world itself, if you want to impact oil and gas and semiconductor manufacturing, you need this kind of work. And so I'm very proud to announce here today that we've secured a $500 million award from the United States government from the CHIPS Act, and it's for these 4 areas. I want to highlight the one on the left, PFAS-free chemicals. When we make semiconductors, there's PFAS output. PFAS you may be more familiar with in Teflon. Anyone here use a nonstick pan to cook? Nonstick? That nonstick pan has PFAS in it. Don't use it. And so PFAS comes out of semiconductors. We have a way now, using the AI we created, to break down those forever chemicals. That's important. We want to scale semiconductors for NVIDIA, for Intel, for all the different semiconductor manufacturers in the world. So we're very pleased about that validation of the models of LQMs versus just LLMs. And now let's turn to our own human bodies. If we want to solve the major diseases of the world, be it cancer, heart disease, Alzheimer's and neurodegen, dementia, we need to do better. Today, it takes 10 to 15 years to develop one drug, billions of dollars, and most of them go into clinical trial and fail. 80 to 90% failure in clinical trial. And so now with this new AI, a quantitative model trained on biopharma, trained on the biology of our bodies, the chemistry, the physics, we can now make new molecules like you see here in purple, thousands of ideas being fit against a target in the body. And this leads to these kind of models like AQ Affinity, which we just launched a few months ago, 1,000 times faster than what we could do before in the industry. And that led to deals like this with Bahrain. Bahrain is now making new drugs for its people and for the people of the region, in the Gulf region, using this technology. This leapfrogs the old way of doing pharma. So LLMs, very, very useful, trained on the data of the internet, Reddit, and Instagram, and pictures and YouTube videos, very useful to make documents and images. But when it comes to the real world, we need a different kind of model. A model that's not trained on the internet and not trained on cartoons, but trained on proprietary data that comes from the labs of the real world. That is what we use at Sandbox AQ. And then we train our own models. We build them ourselves. We don't wrap other people's models. We're using our AQ Cat, our AQ Affinity to produce these results. And these results are the basis of AI together with physics itself. Our world is based on physics. And so if you want to have something in the real world, you want to use physics to make it happen. LQMs on the right, LLMs on the left. These are the two worlds that you're going to see now moving forward. We announced with Anthropic that you can use Claude now to access Sandbox AQ LQMs. And you may see other announcements, hint, hint, in the near future with other LLMs as well. All this, of course, is based on our great partnership with NVIDIA. Very, very pleased and thankful for that partnership and investment from NVIDIA. And this is what the software looks like when you're accessing it to make new molecules, to make new batteries, to make new catalysts, to make new drugs for dementia, for all the diseases that we all care so much about. The technical papers on our website, you can check those out. And some case studies to show you that this is happening now in the actual world. This is a Nobel Prize winner, Stan Prusner. Won the Nobel Prize for his work on Alzheimer's, on neurodegenerative disease. And he used our software, saving literally years and years of work that otherwise he'd have to do and most likely would lead to failure. He now has been very successful using our software to make that happen. Other pharma companies doing so as well, including Sanofi in France and around the world, using these technologies to leapfrog the old way of doing business. So in summary, language AI, very useful. We all use it every day. We'll continue using it. Anthropic, OpenAI, Google, so many others offering us these wonderful tools. But now we need to combine the LLM with the large quantitative models. This is the revolution now that really will impact our daily lives. For the drugs that we need, for the semiconductors that we need, for the batteries that we need, our electric grid is super important. I think in the past few years now, many of us have become aware of the need for more power, more energy storage for the data centers, for the AI itself. All this takes a different kind of model, a model trained on the real world, and that's what LQMs are about. I want to thank Richard and the entire team for putting this wonderful FII on together here in Europe. Looking forward to more partnership with everyone here at FII. Thank you very much.
Thank you, Jack. And there we have it, Jack Hidary in full fashion, full of energy, full of ideas, looking towards the future, and indeed bringing us all with him. He might scare us a little bit at times, I think he does. But again, he really lays out what's happening in this market and what we need to get ready for and what we need to expect and what we need to prepare for. And I think it is at a point that AI is now part and parcel of everybody's daily life. And we really need to, as he says, if we don't embrace it, it is about AI or die. And if you haven't read this book, you've got to read it. Yes, it'll scare you at parts, but indeed, he's the man who knows what's going on. We're going to take a look now and see what's going on in terms of the age. Well, the age of disruption is with us now. Every day of our lives is the age of disruption. But also let's look a little bit in terms of what's going on with the Public Investment Fund in Saudi Arabia. And we heard His Excellency Al Rumayyan talk about the 5-year plan and actually talk about the new focus. But right now, I'm absolutely delighted to have my wonderful team with me here who's going to discuss this. The people who are working on this day in and day out, if they might join me here. Jerry Todd is the head of National Development Division and head of the Investment Strategy and Economics Insight Division for the Public Investment Fund. And Maram Al Johani is with us. Maram, of course, is the Chief of Staff and the Secretary General of the Board of PIF and a member of the Executive Committee of FII Institute. I'm so thrilled to see you both. Thank you. Maram, there is so much going on at the moment. And, you know, as we juggle the situation in the Middle East, as we juggle the global situation, you know, the world is changing constantly. And I think we're getting used to it, maybe. We have to get used to it. But as an institution, how do you scale and deliver, you know, at an institution and begin to build for scale? That's what you have to do.
Thank you, Etna, first of all, for having us today in this important forum. And glad to be with all of you. Proud to be part of a one-decade journey for the FII Institute. Congratulations, Richard, for that. You only keep getting better. And I'd like to congratulate Her Royal Highness Princess Maha Bint Mishari for her recent joining as a CEO for the Institute. And I wish you all the success for the period to come under the leadership of His Excellency Yasser Mayan. Back to the question on how do we create and how do we deliver at scale at PIF. So when I look back in the journey of PIF that I will be describing in 4 phases, I would find a pattern of continuous evolution for the PIF. So when PIF has started back in the establishment phase in 1971, PIF has laid the foundation of the local economy. Many companies were created in vital sectors, the likes of SABIC in petrochemicals industry, the likes of STC in the telecommunications industry, and the likes of Riyadh Bank in the banking industry. Then came the next phase, which is the most important phase. It's the transformation phase, where PIF was transferred and transformed. Transferred from the umbrella of the Ministry of Finance to the Council for Economic and Development Affairs, and transformed its mandate exponentially to become the engine for the economic transformation of the kingdom. And at that period, governance was established and strengthened. Capabilities were built out. After that, there was a period that is marked by growth and acceleration. And that period was the period of our previous strategy delivery. It's from 2021 to 2025. And during that period, PIF has focused on its investments in 13 priority sectors. It has paved the way for the private sector to come and participate with PIF. And that has resulted into $200 billion of investments in the local economy. And now, with the recent announcement of PIF strategy, which was 2 months back, we are entering the next chapter of our evolution journey, which is a chapter that we call value realization. We are creating more and more partnerships, opportunities, and investment opportunities for the private sector and the private capital to come and participate. We are building of that evolution phase where we had 13 sectors, and we have these sectors in ecosystem format to ensure that there is synergy, there is value created across our portfolio, and we're strengthening our returns and financial performance through 2030. So what makes that period of delivery sustainable is indeed having an ambition that is translated into a clear vision and the clear objectives, having strategic frameworks, and having the strategic plan that is disciplined and has a disciplined execution, while of course adapting to changing circumstances. And finally, and the most importantly, having the right level of talent that ties all of this together. So I think a long-term transformation comes when institutions create value a decade after decade, which is the story of our journey at PIF.
And it is a lot of complexities there, a lot of challenges, but again, that strategy that's there in a very dynamic and exciting time. Jerry, talk to me about when we look at this new investment strategy. You know, why does it choose to invest the way it does? Because it has a clear strategy.
Thank you, Edna. It's a pleasure to be here. I'd like to echo Maram's comments. These FII events for me are always a source of energy and optimism, and I'm very much feeling that at this great event in Rome. Our strategy is relatively simple. You can think of it as 1, 2, 3.
Okay.
One vision that has given PIF 2 mandates, which we express through 3 portfolios. The vision is an articulation of an end state, a future. It's also the strategy through which we, as a country, are building to that future. And it assigns mandates to the key institutions so they each know their role in delivering that vision. So one vision. That vision has assigned PIF 2 mandates. We have to invest for financial return. We're creating the, if you will, the endowment for the future financially. And as Maram said, we have to be that economic engine that drives for progress, that helps to build, that catalyzes the building of these 13 sectors, which are organized into 6 ecosystems that will be the economic engines for the future. So those 3 portfolios that do that work, we have a vision portfolio, a strategic portfolio, and a financial portfolio. The vision portfolio contains all the new build. So all the companies that need to populate these sectors of the future that we're building, that PIF has started on a greenfield basis, they sit in that vision portfolio. When they reach a point where they no longer require ongoing capital from the PIF, they graduate into the strategic portfolio. In the strategic if the vision portfolio is about getting to a point where you're, from a funding perspective, self-sufficient as a company, the strategic portfolio is about fulfilling your potential as a company, growing regionally, growing internationally, becoming more efficient from an operational and cost perspective, and from a balance sheet perspective. And then as those continue to grow, we release capital from them back to PIF. That capital over time, if you're taking a 15 to 20-year view, gets reallocated to the financial portfolio, which is a ring-fenced, globally diversified, targeting a risk-adjusted return, almost like any endowment you would expect. So 1 vision, 2 mandates, 3 portfolios.
Yeah, as you say, you simply lay it out and it gets done. Maram, we look at this vision, we look at the ambition, but ultimately it's about turning these priorities into strong execution, measurable results. That's what has to happen.
Of course, ambition alone doesn't create results, but the real challenge comes when actually you want to translate that vision into clear priorities. You want to translate that vision into long-term objectives. And of course, strategies will fail if they're not associated with clear governance frameworks and adequate monitoring mechanisms. So looking back at the journey that I have just explained, at every phase of it for PIF, we made sure that we have a clear strategy that is associated with measurable outcomes. And these outcomes look at both macro and macroeconomics and trends. And of course, they are tied back to Vision 2030. So we have translated, or to ensure the successful implementation of our strategy, we have translated that strategy into long-term objectives that are clear and interlinked. We have 7 objectives as part of our new strategy through 2030. And most importantly is that we went to another level where these 7 objectives are translated into KPIs and targets. And those targets are defined across all levels of the organizations up until the individual level. And under those is projects and initiatives. And these projects and initiatives are time-bound, have clear deliverables and clear scope of work. And most importantly, the strategy governance has to serve the current state. I remember we used to go to the board for every single decision that we make in direct investments, but now we have clear policies and procedures. We have the frameworks, and we have all of that. We can act within that framework with autonomy. Yeah. So the ambition becomes reality when you match vision with accountability and capability.
And I think we can see that, from many of the great companies that we've seen over the years grow in Saudi Arabia. Jerry, without a doubt, there's been so much disruption in the world, and no matter how clear your vision is and how focused you are, everybody has been impacted by the geopolitical situation, the AI boom. There's just disruptions you can't control. How are you managing that?
So if you think of a disruption as a as a shock, each one of these is, well, shocking. But as a phenomena, they happen all the time.
They do.
If you take a 40-year view, about every 27 months, something has happened. Geopolitical conflict, natural disaster, financial panic, pandemic. So these things happen. And from a market's perspective, they're always absorbed within 2 years. So in a way, you have to make sure that you don't overreact to these shocks. At the same time, the economy goes through fundamental shifts, and they happen quite slowly, and you can almost miss them if you're not paying attention. And I'll give you 2 examples. 40 years ago, the top 10 emerging markets represented 13% of global GDP.
Yes.
Today, it's 31%. That is a major change in who produces and who consumes.
And it's very exciting for all of them, yes.
It creates opportunity. Technology, 40 years ago, consumer internet didn't exist, e-commerce didn't exist, smartphones didn't exist. Today, more than 5 billion people have a smartphone. US markets, the top 10 technology companies 40 years ago, total market cap $110 billion, and 100 of that was IBM. The 10 was Apple, Microsoft, a bunch of small companies we've never heard of. Today, 22 trillion. Top 10.
Yeah.
So that's gone up 200x. At the same time, the US markets have only gone up 25x. So if you miss the shift, you miss the most important thing that you're supposed to be looking at as an investor.
Maram, if you could just quickly give us a feel for how can international investors really have that confidence that PIF can deliver on these long-term commitments? Because it's ambitious.
Of course, and confidence is never built through periods of stability. It's rather built through periods of uncertainty. And long-term investors, they want partners and investors who are having a clear direction and at the same time who are able to adapt to the changing circumstances. So that combination of clarity, of vision and adaptability is the core of our approach at PIF. I could think of 3 reasons on why investors and partners have confidence in PIF. The first reason is to have a long-term thinking with ability to adapt. His Excellency yesterday mentioned in his speech that PIF thinks in decades, doesn't think in quarters, and that's very important for the approach of PIF. We have a track record that is proven for delivery. If you look at our portfolio, and across our portfolio, we have seen many projects that move from simple concept to reality, from a vision to execution.
Yes.
Exactly. You can see that the Red Sea is now welcoming visitors. Qiddiya is now becoming the cultural destination and entertainment destination. And also Riyadh Air is flying passengers now. So that is at the core of our approach at PIF. And most importantly, investors also look at the institutional strength and transparency. We at PIF follow strong governance and globally recognized governance standards, the likes of Santiago principles that are published with the 24 principles on our website. They talk about the strong governance that we have, strong structure of board and committee, strong risk management practices, policies, procedures, accountability, everything. And we also publish detailed report, the IFRS for the financial reporting, the GIPS for performance reporting. So when you put all of these elements together, then I think confidence becomes easier to understand.
And again, all of that great information on the website. Jerry, I want you to leave us a closing word here, because everybody in the room is going, this all sounds wonderful, what's in it for me? So when we look as an investor, really, what are the opportunities for investor? Because once we get over this shock, we're back full scale ahead. This is a little rest almost in the region right now. But tell us, what's in it for everybody as investors?
Well, I think one of the really cool things about working at PIF is we don't just invest in shifts. In a way, we are the shift in Saudi. And we want the rest of the world to join us in that. So His Excellency on stage yesterday said, We've identified 140 distinct opportunities within the Saudi economy. Those are places for businesses to come set up, manufacturing or service businesses, to participate in these growing ecosystems. And many of those opportunities fit sweet spots for European operating businesses, electrical harnesses, water pumps, venue management. There's a lot of things where Europe and Italian companies are already global leaders. And so what we are looking to do is partner with people who want to make shift happen. And so if that's you, then we'd love to talk to you.
Well, I love that. Make shift happen. And the big shift will be happening in Saudi Arabia. You can watch it. And of course, with FII Institute leading the way. I want to thank you both so much. Jerry, thank you. And Maram, thank you so much. I know you have so much work to put in place. So a big round of applause for my dear colleagues here. And thank you so much. Thank you.
Thank you.
The life and soul of the PIF. So we'll be looking forward to seeing great things in the year to come. Again, when we look at trust, truth and capital, yes, we can see it coming around us in all areas, but it is something we really need in business. We need to see that confidence. We need to see the honesty. We need to see, you know, the dependability and the confidence that so many of our people talked about. We're going to look at, is Europe still investable? And I'm absolutely delighted to welcome out here to the stage as our moderator for this session, the founder and the president of Cecilia Attias Foundation for Women, and the former First Lady of France. Cecilia Attias joins us now, and she is in conversation with the most excellent Cayanata Alvarez de Toledo. I'm so delighted to have you both here. Thank you so much, ladies. We look forward to this conversation.
Good morning, everyone. Buenos días, Cayetana.
Buenos días.
They didn't let me speak to you in Spanish.
No, we're going to speak English.
We will speak English,
Lingua
but it's sad
franca.
because I love when you speak Spanish. You're so charismatic. I have to say something. I'm very lucky to have you with me this morning. I've been admiring you for years, following you in social medias. And a friend of ours told me, you know what? She's my cousin. So I met with you, and we decided to have this conversation. She is the future of Spain. She is this kind of woman you want to know, to empower, to help across Europe, because we need people like you. We need you. So today, you're going to have a voice here at FII. You've never been. I hope you will come back, and we will do whatever we can to help you, to bring to Spain the sparkle that no longer exists. So thank you for being here.
Thank you so much. I've admired Cecilia for many, many years. Many Spaniards have. She's been a reference for many of us. And it's a real privilege to be able to have this conversation with you. Thank you, Richard, as well, and all the organization. This is the most amazing event. I hope it's not my last. I certainly will do everything possible to be with you in other events like this.
Thank you for being here. So let's start a little bit. My dear Cayetana, how is Spain doing economically today?
Well, the first thing, obviously a disclaimer, as Cecilia mentioned, I'm a politician. I know politicians are not the most popular people today, but I'm particularly grateful that you've brought a politician on stage because, as I say, nothing is more important than politics. Finally, it's politicians who are making decisions that you guys, other people, have to comply with. Regulations, rules. So we need the best people in politics. And this is a small introduction to talk about Spain briefly. Maybe we'll talk also about European context. And Spain is looking good in the big macro figures, but feeling bad in the real micro figures. So what people are experimenting. No? There is growth, and the GDP figures are good, but that growth is not translating into well-being. We are not converging. We are still 8% below average in EU convergence. And this is happening because Spanish growth is based on volume, not on productivity. It's based on more public debt. It's based on EU funds, which are poorly administered and will not last forever, obviously. And it's based essentially on immigration. So you have a bigger base, more immigrants, but no productivity. And the problem is a lot of young people, particularly young people, are having an extremely tough time. Tough time finding housing, a huge housing crisis.
You told me it's 25%.
25% youth unemployment, over a 15% EU average. 25% of risk of poverty and social exclusion in Spain, in a very strongly growing economy, one of the most growing in Europe, which is also the stark contrast between the big facts and the small facts. And then political and institutional crisis. People, when I explain this in other countries in Europe, they're in shock. Or in the US, I was in Washington a few days ago and I said, you know, we haven't had an approved budget in 3 years.
That's crazy.
Because there is no majority in Parliament for an approved budget. And so the budget has been, you know, taken over and over and over. The budget from the last term, from the previous government. No? So we have a political crisis. We have bad figures on the local level, on the well-being level. And then a mentality, and this connects with Europe, which is based on regulation and subsidies. And so the most shocking figure really is, I saw it in the newspaper a few weeks ago, in a poll. You ask young Spaniards, you know, what do they want to do in life? What do they want to become? Entrepreneurs, builders, creators, innovators, tech giants? And the answer for 60% of them is, we want to be civil servants. That is a civilizational alarm bell.
No risk.
No risk-taking.
No entrepreneur.
So we need to change this whole thing. You know, we need reforms, we need a change of economic model, and we need a change of mentalities.
And you were talking about politics. For me, politics is very noble because that touches economy, health, culture, everything that rules a country. We have to stop criticizing politicians. We have to help you guys to do a great job.
Well, we need to be criticized on many fronts. You know, we need politicians who speak the truth. And that is probably one of the main problems we have. The politicians have mistaken political correctness with political cowardice, you know? and are afraid of speaking the truth. And the European crisis, to a large extent, is a crisis of truth and therefore of trust in institutions. No?
Absolutely. So can a country remain attractive to investors if we trust in politics, media institutions, if that trust continues to decline?
No, certainly not in the long run. I believe there's no economic health without political, democratic, institutional health in a country, no? And a case study, a very extreme case study, obviously, is Venezuela. And we talk about Venezuelan recovery. I always say first democracy and then economic prosperity after that, not the other way around, no? And across Europe, as I was suggesting, no, we really need to recover trust in institutions, in the media, and in politics. And the way of doing so, I think, is to start speaking the truth about certain things. No? Juncker, many years ago, said something which I think really synthesizes the European crisis. He said, we politicians, we all know what we have to do, but we don't know how to get re-elected if we do what we know we have to do. And the result of that kind of thinking has been three major problems or threats to European progress, which is fictions, dogmas, and hyper-regulation. Fictions, the idea that peace would be permanent, and America would always provide. That was the first big fiction. And that ended up with, you know, dismantling armies, cutting our defense budgets, and now, obviously, having serious trouble saying, you know, how are we going to rearm and prepare for the new era? The second fiction was the idea that the welfare state would always provide. The idea, you know, that money just falls from the trees. Yeah. And that obviously doesn't happen. And the result of that was expanding budgets, strain in institutions, and social tensions. And the third fiction, still there, is the idea that prosperity can remain with no productivity. No productivity, you still can be guarantee prosperity for people, and that's not true, no? No growth means no welfare, no defense, no future for many people. If you add to that the dogmas, the green dogma, the idea that we could sacrifice workers today for the planet tomorrow, or it was a good idea, the idea of the green dogma, but not taken to a dogmatic extreme.
Yeah.
Or the multicultural dogma, the idea that you could integrate infinite numbers of people with no problems, and immigration, and we have to say that clearly, that it has to have limits, and values are important, and integration is essential.
Have you seen the law that passed at the European Union yesterday, regulating the immigration for the countries in Europe?
Yes, this is reality striking back. I always say that populism is the revenge of reality against political correctness.
Yeah.
When you've been politically correct and you've speaking the truth about things and of evidence-based politics, you've shied away from that and being very scared of speaking the truth about things. That ends up fueling populist movements and nationalist anti-European movements. So it's so important to recover the truth. And the third issue, obviously, is hyper-regulation. The third threat to European progress and prosperity is the obsession with regulation.
Europe speaks a lot about values. How do we translate values such as truth, merit, and rule of law into economic growth?
Yeah, values. Well, speaking about values is great, but then you have to implement those values.
Yes.
As you said, rule of law, obviously, that's essential. That's institutions. We know that Acemoglu won his Nobel Prize on the idea that it's not geography, it's not culture. Institutions are crucial. If you can have low taxes but captured courts, that's not good enough. You can have better regulation but no independent enforcement, that's not good enough. We need really institutions to make property rights real and to make investment rational. So we really need institutions that respect the rule of law and are the incarnation of those values. And the most important, as I said earlier, I think really is to start to say in politics publicly what we say privately. And a lot of politicians are scared of doing that.
Yes.
We need to speak truth to the citizens, to talk to them as adults who are responsible for their destiny, and to make sure that they will recover something essential, which is we've forgotten in Europe, which is the idea that dignity comes from work, a work ethic.
Exactly.
I was brought up in Argentina, and Argentina is an extreme example of what populism can do to a country. The idea that you can live off the state permanently, that subsidies are the way forward. And that destroys a country, not only economically, it destroys a country also morally. Because as human beings, our sense of dignity, our sense of purpose comes really from what we do in life.
Exactly.
From our work.
But I know that people, when you speak the truth, they listen. And they can understand. And they can change their mentality. That's something I'm convinced of.
I think so, true. I think so as well. I think truth is the revolutionary factor in politics nowadays. And what people, I think, are angry about is that politicians haven't told them the truth about the limits of the welfare state, about immigration, about defense, about so many issues.
How do we attract the right people into politics to change?
That's not easy, because talented young people who can make a living, and a very good living in the private sector, shy away from politics. Politics has become a very messy, unpleasant business, where feelings override evidence, But as I said at the beginning, there's nothing more important than politics, because it's politics that is going to take those decisions that are going to affect so many people. Let's talk about regulation, for example. A recent decision, Apple has decided, or finally, not to implement its AI Siri, AI-powered Siri in Europe for 450 million users because of European Brussels excess regulation. There's been a conflict between Brussels and no, Apple, the result of which is that 450 million consumers in Europe won't be able to use that AI. So political decisions have tremendous consequences for people's lives. So we have to make sure that the best people in society really spend some time in politics as a public duty. And for that, we need to make sure that the political ecosystem makes it possible for people like that, who are intelligent, who have a real sense of purpose and of duty, can survive in politics. Yes. How can we do that? That's not easy. We need to...
How someone like you
survive?
Not only survive, but decided one day that duty, love of your country, comes first.
That's, I mean, this is vocational, obviously, but you have to have that sense of mission in you, and I have that. I mean, that's a mission.
It is.
But again, you don't have to create an ecosystem that requires heroes in politics. You know, people with a sense of a mission. You know, you need excellent people to be ready to spend some time in this business without being destroyed in the middle, no? And we need to invest in truth as well. For example, in the public conversation now, which has turned completely, not only sour, but impossible, we need to restore truth in the public conversation. What do I mean by this? If opinions have completely overridden facts, and facts have become completely a matter of opinion, then we can't discuss. In the public arena, if you say, I feel there are 3 bottles of water here, it's just my feelings that are override facts. And I'm saying, no, there are 2 bottles here. It's impossible for us to have a conversation.
Yeah, of course.
So when facts disappear, there is no democracy. And for that, we need to restore evidence-based politics. Science has to come into politics in some form or another. We need to make that cross again between facts and politics. Science and politics.
I could speak
That's
for
not
hours
an easy job
with you, but time is running out. So I've just a last question. How can you attract entrepreneurs, investors in your country? What can you say to attract those people to believe in the future of your country?
I think I'd say absolutely. I'm an optimist. I think.
Me too. Good.
Absolute optimist. I hate pessimists. I think pessimists are it's badly maleducados.
Maleducados?
Boring.
Not well raised.
Not only that, I think pessimism is a great ally of populism, you know, because pessimism says, you know, everything's so ghastly, everything's going to go so badly that we need a messiah, we need a strong man, we need a caudillo. And I don't believe in that. I think we need responsible citizens, you know.
Exactly.
So I don't like pessimism. I like rational optimism. I like the man in the arena, you know, the wonderful speech by Roosevelt, you know, I am the man in the arena, the one who is not in the barrier saying, oh, politicians are doing it awfully, but who actually, you know, fights his way there. And I would tell those young people, you know, to invest absolutely, but with open eyes. I would say, first of all, you know, if you don't want to invest in Europe, you're not being a disloyal European or a disloyal whatever partner. It's not your blame. You're not to blame. That couldn't be a rational decision. What we have to do is to fix the reasons to make sure that you want to invest here, no? And the EU is not a lost cause at all. It is the most extraordinary place. It's a place, it has assets that no regulation can destroy, you know. The best universities in the world, talent and extraordinary talent, 450 million consumers, and rules, certain rules that are essential for good investment. And it has something else, which is reality that is forcing our hand. It is the most powerful reformer in history is reality. You know, the war has, in a way, you know, is forcing Europeans to come to terms with reality. So bet on Europe, on the Europe that could exist, on the Spain that could exist, but make sure that you also make it happen. And there, just to finish off, because I think we're sort of moving on to other people's times, I would say 4 or 5 things. Now, first of all, we need open market. We need a single market that's going to produce much more energy and productivity than any subsidy. In the second place, we need to cut red tape. We need to cut bureaucracy. Every hour spent on compliance is an hour lost for building, creating, and innovating. Third of all, we need to make energy cheap and abundant.
Yeah.
And that means nuclear. In my country, nuclear is a bad word.
I know.
In France, it isn't, but we need abundant energy. 4, we need to restore merit, the concept of merit over
That's so
ideology,
important.
over identity politics. No? We need to restore the concept of excellence and the ethics of work and dignity. And last of all, and putting it all together again, as I mentioned earlier many times, I think we have to tell the people, speak the truth to our citizens. And that is a way of recovering their trust in politics, in institutions. Tell the truth, even though the truth may be blood, soil, sweat, and tears. The Churchillian phrase, toil, blood, toil, sweat, and tears. But it's better. Painful reform is better than comfortable decline and decadence.
Thank you so much, Cayetana.
Thank you.
Thank you. Good.
Great conversation.
Thank you.
Alongside the most excellent Cayetana Alvarez de Toledo, and a salutary warning to many of the European structures out there that debt, access to opportunity for the next generation is incredibly important, and that the level of exclusion that is happening has the capacity to cause potentially political and institutional issues. So those are the challenges of Europe in terms of its current status, grappling with immigration in each country, industrial policy, technology policy. But most of all, the world is grappling with the second major geopolitical shock that the global economy has felt in 4 years. Supply chains everywhere are being disrupted, made more efficient. 75% of most multinationals are diversifying their supply chains. Let's welcome to the stage my next panel. We're going to talk about how geoeconomics are redrawing those supply routes. What are the implications? What are the flows of capital? And how should we address those issues? His Excellency Ahmed Burak Dalioğlu, Fahad Dahab, Senior Vice President at Aramco. I should say His Excellency Ahmed Burak he is the President of the Investment Office of Turkey. Fahad joins us from Aramco. Hisham Ahmed Al-Rez, the CEO and board member of GFH. And lastly, Dr. Vivek Ramachandran, on the end there, he joins us from HSBC Solutions. Gentlemen, masters of the supply chain, holders of the capital. I mean, what have we got on this panel? We got a little bit of the geography dominance of Turkey in ascendance, not that you ever were behind. The capital, HSBC, has $1 or $2 on the balance sheet to lend you. Of course, the private capital with GFH. I'm going straight for Aramco. Because, look, if there's ever a company in the world that has dealt with perhaps one of the most significant geoeconomic shocks of our time, it is your company. The East-West Pipeline was your savior. It was the world's savior. What's been the toughest part of the past 4 months? Have you had any sleep? Tell us how you're doing. Good morning, sir.
On that note, good morning, everyone, and delighted to be here. And I think the last 3 months were one of the toughest for the energy industry ever, and probably the global economy. What we have witnessed is not even a black swan. It is something that was far-fetched from happening. The world all of a sudden found itself losing 20% of its oil and gas supply. That immediately translated into doubling of prices. But it didn't stop there. I think what cushioned us at the very beginning was the oil in transit. And then people realized that we will have to tap into inventories, and soon enough, countries that didn't have access to that oil and gas had to prudently manage demand. We've seen, countries move into a 4-day week. Others resorted to working remotely. We were seeing economic growth being destructed as a result of a closure of the strait. It didn't stop there. Soon enough, we've seen that spill over into other supply chains. LPG, which is used for cooking, comes from oil and gas, and we've seen restaurants in certain emerging countries stop serving food. We've also seen fertilizers. 30% of the global fertilizers come through the Strait of Hormuz. This had a serious impact on food prices. Sulfur, urea, around 40% come through the Strait of Hormuz. Helium, that everyone didn't expect helium to come from oil and gas. It has had an impact on the semiconductor industry. And we've seen during the COVID how the auto industry were impacted by $210 billion as a result of chip shortages. So this is what has happened. It's more than just an oil and gas shock. It's an oil and gas spilling over into many other sectors.
As you say, it was something even more profound than a black swan event. I'm going to talk about risk and capital in a moment. Briefly, we hope we are at the beginning of the end of this conflict and that a new peace exists. How quickly can the flow turn? This is the opportunity to give the world an update in terms of Aramco's ability to normalize along with the rest of the GCC. Briefly, Al.
Okay. So for things to go back to normal, you will have to make sure insurance companies will have to okay ships to go through the Strait of Hormuz. And there are at the moment around 580 ships stranded inside the Arabian Gulf. And there is around 400 ships outside. For you to go back to the normal flow, it will be a while for these ships to go through. It will depend on the setup that will take place and the assurance that some of the ship owners and customers will be getting. We in Aramco have benefited a lot from the East-West pipeline. It has been an investment that we undertook half a century ago.
Yep.
We maintained it. It's more than just a pipeline. It's a pipeline with 55 compression units. Maintaining it for 5 decades wasn't an easy and
costly insurance policy.
Nevertheless, it has paid off.
Okay.
Go ahead.
I want you to hold that thought because I'm going to come back to you. Let's rev this up now. That's the reality of the supply chain. That's the biggest shock to the world. You've got to reprice risk and you've got to decide how much you're going to lend to this region, to Saudi, to the UAE, to the GCC, to the entire region. For HSBC, are you stepping back from lending to this region? Have you been jolted? What's the most profound impact at the credit committee and HSBC?
HSBC is committed to a region. It's strategic for us. We've been there over 100 years, so we've doubled down in our commitment to help clients through it. But Manus, I think the main point, if you step back, $25 trillion of trade last year, mercantile trade, 60% of that looks different from it did 2 years ago. Okay. US tariffs, the oil shock, and AI. Right? So the world of trade is fundamentally different. Now, we are the world's largest trade bank. We facilitate almost $1 trillion of trade. Some cases, the prices have gone up, but the demand for financing has skyrocketed. And I think so there's an opportunity to get financing aligned with demand. But we'll talk about it, I'm sure. When you talk about long-term expenditure, you need public and private partnership. It's not going to be the private sector by itself, because some of the investments we're talking about are 20, 30-year bets.
Well, there's no pause button from HSBC in regards to what you're doing in the region. That's fine. And we'll dig into the AI trade flows, because I think that that's turning into the various spheres of influence. We're building out huge AI infrastructure, both in Saudi Arabia and in other countries. Private capital, good morning to you, Hisham. Biggest impact of this 4 months in private capital deployment to our region, to Saudi Arabia and the GCC. Has it, lift the lid, lift the veil?
So, so at the beginning, it was there was a slight pause.
Okay.
But very fast, we have seen how the need of more capital to be allocated into logistics projects, security, and food was massive. And this provided massive opportunity for private capital, because maybe the HSBC lending is not available on the same low rates. Okay, so there is the need of the capital, the equity, and just before the crisis, a lot of demand across the world from Europe, Asia, US, everywhere on the region, in logistics in particular, and there was scarcity of opportunities. Everybody was chasing opportunities, and they are very expensive, so we cannot deliver the returns. And suddenly now, everybody wants to invest, and also governments wants to partner as well. So a lot of interest in Saudi Arabia because it has provided a very safe corridor to supply all the Gulf from food, needs, commodities, and construction materials, beside, of course, the oil and other goods. And now every country has its own strategy and massive opportunity. Now, in the last 3 weeks, we have signed several mandates from Asia to invest in warehousing and logistics committed to the region. We think this will provide substantial opportunities for private capitals, and we think we can deliver great returns for the client.
But again, it's around that supply chain narrative. It is about centers of excellence in terms of infrastructure and in terms of connectivity. Now, Turkey, country that I love, a city that is beautiful, and I visit your capital often. Burak, good morning. Turkey sits at a very interesting geographic nexus for this room and for the world. What is that going to mean at the end of this, hopefully 4 months of conflict? What is it going to mean for Turkey in terms of its ability to offer an alternative geographic site in the supply chain opportunity around the world? Good morning.
Good morning, thank you. And I would like to thank all FII leadership and Richard's team for organizing such a great event. And we are thankful for the Italian authorities for hosting this event. We are enjoying since yesterday's morning. So, of course, this conflict has ended, but, you know, in our region, we have some other conflicts, especially in the north of Mar. And what we see, especially in the last 4 to 5 years, the international companies are growing their footprint in Turkey by expanding their facilities, by bringing their vendors, suppliers to, close vicinities. Plus, we have seen lots of logistic investments. So, while, introducing the panel, you mentioned that 75% of the multinationals somehow restructured their supply chain. We witnessed that that's happening. So why Turkey is important in this regards? Firstly, the location, as you mentioned, and we invested a lot for the infrastructure and connectivity of the country in the last 2 decades during the President Erdogan's term. And Turkey offers a very diversified industrial basis supported by strong services, plus the talent. The talent is available in the country. So from all spectrum, like blue collar staff, technical staff, software developers, engineers, senior and high-level managers, they are all available in the country. So these 3 solid value proposition, I think, makes Turkey as a reliable supply chain member of the geography. And as you know, we are very well integrated with the European supply chains. And just like in the last 4 months, because of the low reliance on the Strait of Hormuz, it's very negligible for our supply chain from the primary perspective. Of the secondary effects and impacts were there. But we see a quick shift from Asian countries to Turkey because we are quite agile, flexible, and we are easily adapting to the customer demands. So companies were ordering on one Monday and they were getting the product in the next Monday. So this is a story that I've heard from many multinationals. So in short, investors are asking for market access and they would like to see supply chain is working. So we are trying to provide these, from our country.
Vivek, if I bring it back to you, you talked about the $1 trillion of trade last year. It's interesting that obviously you saw that trade destruction described by Fahad. What can you tell us about the trade flows over the past 4 months? And more importantly, we spent about the last 48 hours, a lot of it talking about technology, AI, regulation, the changes that Europe needs to make. But I want you to make it come alive from a trade point of view and a supply chain point of view, what you can tell us in terms of the lending at HSBC into that area and just the size of it, because you said something in the green room that just sort of blew my mind in terms of what's supporting the global economy. But you can elaborate.
So global trade and I would say global GDP is being bolstered by one thing: investment in AI. 40% of all new trade last year, almost 45%, was linked to AI. This is not productivity gains. This is chips, semiconductors, data rooms, data servers. It's the investment that's going into the infrastructure to get AI up and running. And US GDP growth is probably driven by the same thing too. And so AI is keeping the world afloat. Supply chains are getting fragmented. You have the first big chunk of supply chains are strategic products. This is where you want geopolitically allied supply chains. You want close to home. You want nearshoring. Anything which has got rare earths in it, with defense, with healthcare, critical supply chains. And then you have supply chains where you're chasing cost. And those supply chains are now moving where one of the big cost factors is tariffs and ease of access. So it's moving out of China, moving into Southeast Asia, moving into parts of Africa, moving into other markets. So you have two categories of supply chains coming close to home, which need CapEx, and moving into new markets, which need trade finance.
So that's dispersion and fragmentation, both at the same time.
And over the last year, products have actually traveled a greater distance globally. So supply chains globally, on aggregate, are not getting shorter. They're getting longer.
One question that comes to mind with what you've just said, okay? And I'm going to go right the way back to 2008. He said, ask me a difficult question. I said, no. So what about concentration risk then? Are we going back to a period of time of 2008 where there was a significant concentration risk in regards to subprime lending? Are we facing a similar moment of where there is concentration risk in the banking system in lending to AI? Gentle question.
So I think global economy hinges on AI working, because you're talking about trillions of dollars of investment going into it. Now, all our institutions are using it. All of you are using it. So it's not the banking system. I think the global economy hinges on it. Now, banks are being quite sensible, and I think private credit has stepped in and done a lot of it, but you're also seeing a lot of bond issuance. So all the hyperscalers now have run through their cash in large...
So it's different. It's structurally, I think the point you're making is it's structurally different. It's not on our balance sheet, Manus. It's in the private credit world, and it's in the bond world.
And the risk of contagion, I would say, is very slim. So if one AI venture doesn't work, the risk of another one, so the risk of contagion is a lot smaller.
Good, because I've only one more global financial crisis left in my career to get.
You and I both.
And I hope it's not. I hope it's not in the next couple of years.
I think that there will be winners and losers, and there is.
Well, let's talk about that. Expand on that, because this is about the supply chain of the world in real time. So talk us through the winners and the losers that you see.
Just commenting on AI, I think definitely there is a massive investments, and there is massive valuations and massive lending now. It's not anymore equity play, it's lending play. So, and there will definitely be winners and losers, and that might impact the world growth. And yet, you can't also leave the ride, okay? Because you can deliver great results by being part of SpaceX, for example.
Did you get any SpaceX?
Yes, of course. Yeah. And I actually invested long time back, and it's a massive invention and a company, great leader, but I think the valuations are really high, and it's more of the belief into Elon Musk rather than scientifically justified valuation. So there is a risk there, and that some impact will be there, but the AI is, of course, very important, and it's definitely one of the greatest inventions. But there is definitely a risk there.
So there is a corollary to this. I'm going to get to the long-term infrastructure play for Aramco in a second. It's not 2008. It's in the debt market. It's in the private credit market. You're long of SpaceX. It's a $1.77 trillion valuation. If it flops in any way, we're all at risk. Will you ever sell your SpaceX stock? We're not supposed to be talking about SpaceX, but we'll get one answer from you, and then we move on. No. To Hisham.
The evaluation?
Yeah.
I think in the long run, it will support the valuation. The short term, there will be a lot of ups and downs. And on the long run, definitely it is a great company. Yes.
Now let's pivot back to supply chain and to Aramco and their CapEx program for the next 10 years. I wanted to get an idea from you, and that's tongue in cheek, but it is about the long-term implications. Global trade is becoming fragmented. You have a huge program ahead of you, big decisions to make about the medium and the long-term investment strategy for Aramco in supply chain. It must be the most difficult set of decisions to make. You've got the East-West pipeline. What's the medium, long-term investment plan to bolster your supply chain?
Well, we have to be mindful that the energy system today is underinvested. With all of the hype around AI and the reality of AI will require more energy. And this means that you have to stabilize the grid. You have to invest more in infrastructure. And that's the next wave that will be coming. But let's focus on today, oil and gas and infrastructure. Definitely, the world will require more storage, especially in emerging economies.
Okay.
Much of the oil that you have seen came from advanced economies, and it only came at a flow of 1 to 2 million barrels of a day, not sufficient to cover the 20 million barrels per day that were lost through the Strait of Hormuz. You can imagine the size of the undertaking. Number two, I think many countries are rethinking their trade routes and their pipelines, and there could be some alternatives to some ship rates that are in the making. At the same time, we have to invest in upstream oil and gas. 90% of the investments today are going to meet reserve requirements, to replace what we have consumed. So you will require more investment in upstream oil and gas. In addition, as more people talk about electrification, some are saying gasoline will be peaking soon. Some states and some countries are underinvesting in their own refinery system. And that will also create some shortages, possibly in jet fuel or gasoline, if the right investments are not happening in place.
Can I push you a little bit on the investment in storage? Is that going to become a much more dominant theme from Aramco in terms of geographic distribution of storage?
So we have had a storage program that has helped the global economy.
Yes.
We have a concentration of storage in Asia, in Rotterdam, and in the Mediterranean, which has served Europe and many of our customers and ensured we're reliable. But that's not enough. Some of the emerging economies barely have storage that would cover 3 or 4 days of their own demand. They're also thinking of that and how can they smooth such shocks as opposed to absorb them through their economy. There are discussions with emerging economies who are interested, and definitely storage is a big push going forward, and we will continue what we're doing. We always think in the long term. We never think in quarters. The East-West pipeline came 5 decades ago, and our storage was built over many years, and we're always stress testing our scenarios with what ifs and what nots.
Before I bring Burak back in again, do you still have the same appetite to lend to oil and gas and infrastructure pre-crisis as we are now?
Yes.
Pre-conflict, excuse me.
Obviously, with the counterparties like Aramco, yes.
There you go. Your credit line at a much better. How many basis points over?
That paid off for my trip, huh?
Okay. I'm going to close with Burak. Listening to what Aramco is saying, HSBC's access to capital and private capital from GFH. Where are you going to double down in terms of going out into the world and say, come here? You're going to go to Aramco and say, build more storage here. Obviously, geographically, it makes sense. But what else are you going to focus on in this deglobalized world as it happens?
So it has been discussed several times in FII Riyadh as well. Like, during the deglobalization, regional cooperation, is much more important. And as Turkey, as a part of customs union and having a free trade agreement with 28 countries, and we are negotiating some more like GCC, it is on the list. I hope it will be ratified soon, agreed and ratified soon. So we believe in the importance of the regional cooperation, and the attitude of Turkish decision makers have been to improve the relations with the countries in the region, with the neighbors. And we are discussing an event originated from Saudi. Consider Turkish relations with Saudi. It is totally on complementarity approach. Yesterday, Minister of Tourism was here. So many Turkish tourism companies are going to Saudi because of the seasonal complementarity. I mean, the seasons are not overlapping. Or in the industrials, in the manufacturing, many Turkish companies are now expanding to Saudi to support their supply chain. Similarly, Saudi companies are investing in Turkey. Just recently, we announced 2 gigawatts of green energy project of a PIF company, Aqua, and then they will hopefully double it, at the end of this year. I mean, as a kind of commitment. Plus Italy, we are in Italy. Turkish-Italian economic relations are at a very good stage. Just a few years ago, it was low $20 billion of trade volume. Now it is $30 billion. And the areas of cooperation is including also defense and aviation. A Turkish conglomerate, a family office invested in Piaggio here, and then they had a partnership with Leonardo. So these efforts to grow the the regional cooperation is on the way. And I believe we can have more multi-stakeholder developments. Like why not to establish a triangle between Turkey, Saudi, and Italy?
Well, I look forward to visiting Turkey and discovering more again in Istanbul about your future. Yesterday, I was looking for an invitation to Alula. Today, I'll say to Aramco, I'm up for dumb man. Give me a hard hat. Give me a yellow jacket. I'm there. A spirited conversation. Ladies and gentlemen, your panel this morning on supply disruptions. They're brave. There you go. There is no concentration risk. We can all stand easy. There is no global financial crisis, ACA 2008. That is the supply chain infrastructure. How we operate ultimately comes down to the security infrastructure of the world. The architecture of that, how it is crafted and how it is redrafted from this year going forward, and the role of the multilateral institutions in crafting that narrative. Who better to hand over to than my former colleague from Bloomberg? It is Luca Casiraghi for the next conversation.
Thank you, Manus. We meet at a moment when security, technology, and defense are more interconnected than ever. And there are a few people that can help us understand what is at stake for Europe and NATO than Admiral Giuseppe Cavo Dragone, who is the chair of the NATO Military Committee. I'd like to invite him on stage. I'd like to give a few words before I come back for questions. Thank you very much, Admiral, for joining us here today.
Thank you. Okay, thank you for this invitation. There are few cities where a discussion on Europe, capital, sovereignty, and strategic autonomy would feel more natural. Rome's power was systemic. The legion was a visible instrument, but behind it stood roads, ports, alliances, administration, finance, and economic strength. A few days ago in Singapore, for the Shangri-La dialogue, the discussion repeatedly returned to the same conclusion. Capital, technology, resilience, and security are now part of the same equation. This is the challenge we discussed today. The security environment facing Europe has radically changed with the Russia invasion of Ukraine in the high north, eastern and southern flank, under increasing pressure. At the same time, developments in the Indo-Pacific and in the Middle East and North Africa region increasingly affect European security. Security challenges that once appeared regional have become interconnected. And for the first time in generation, Europe is again the center of global strategic competition. For many years, Europeans benefited from what we could call a security dividend. For almost 78 years now, NATO continued to help make that possible through credible military capability, political cohesion, and strategic clarity. Today, however, deterrence has become systemic. Armed forces remain indispensable, but security increasingly depends on resilient societies, technological innovation, industrial capacity, and the ability to withstand pressure and disruption. That is a fact, and it is reflected by the NATO's allies' commitment to invest 5% of GDP in defense and security. This brings me to the concept of strategic autonomy. While it is interpreted in different ways. From a military perspective, it is very simple and clear. Strategic autonomy is the ability to act whenever and wherever necessary. In today's world, complete self-sufficiency is not realistic. Security scenarios have become too interconnected, technology too complex, and supply chain too global for any nation or organization to operate alone. Even the United States is asking allies and partners to do more. Therefore, it is not about who can act alone, but about who can build trusted networks. Networks strong enough to generate and sustain security, resilience, and deterrence. This is precisely what NATO demonstrates every day. Sovereignty and cooperation are not contradictory concepts. Together, allies achieve a level of security that none could achieve alone. But today, the scale of the challenge is larger. Nearly 5 billion people live in Asia, a center of technology, production, trade, and strategic competition. This reality demands all of us to broaden the approach to partnership, because security is no longer regional, and neither can our partnership be. If strategic autonomy depends on resources, capabilities, and partnership, then economics has become one of its foundations. And now listen to me. Nervus belli pecuniam infinitum. This is Cicero, 43 before Christ. It is the 5th Philippic. And this means the nerves of war are unlimited financial resources. At our last NATO Military Committee meeting, a recurring theme was the availability of adequate resources to sustain credible deterrence. In this context, economic supply to security can help us answer 3 key questions. First, how to make the best use of limited resources. A simple and enduring economics framework can help us. The 3 E's: effectiveness, achieving the desired strategic outcome; efficiency, turning resources into readiness while reducing duplication and unnecessary friction; economy, investing in the right capabilities in a financially sustainable way. As I said in Singapore, you deter with capabilities, not with promises, not with intention, not by waving money in face of your enemy. We need capabilities and effects. Second question, how long does it take to generate credible deterrence? Here, economics and military planning must converge. Time has become an operational dimension itself. Building resilience takes time. Industrial capacity cannot be improvised during a crisis. Ammunition stocks cannot be rebuilt overnight. Skilled workers, engineers, shipyards, software teams, and secure supply chains require years of investment. The third question, how to reduce strategic vulnerabilities in an increasingly interconnected world. Economics offer a compelling answer, and the world is friend-shoring. Building trusted networks for critical technologies, energy resources, and strategic materials. In a more contested world, resilience depends on what we produce, but also on with whom we produce. Because a trusted cooperation reduces strategic risk, but trust, like deterrence, cannot be improvised. This is why NATO invests so much in partnership. Look at example like Japan, New Zealand, Australia, and Republic of Korea, where we do not seek expansion, but greater interoperability, technological cooperation, and stronger deterrence. The same applies to the Gulf region, with many strategic partners, investors, innovators, and contributors to regional and global security. I have had the privilege of visiting several Gulf countries, where I gained the conviction that partnership should not be limited to a single sector, but include security, economics, technology, culture, and people-to-people relations. The objective was the creation of long-term relationship based on trust, capable of withstanding political cycles and international tensions. Because the true test of any partnership is not how it performs in times of stability, too easy, but how it endures in moments of difficulties. Crises do not create cohesion, they reveal where that cohesion exists. On this final observation, while resilience remains essential, we should aim higher at something better, to the idea of anti-fragility. Systems that not simply absorb shocks, resilience, but learn from them, adapt, and emerge stronger and stronger. Partnership should therefore be durable frameworks of trust, cooperation, and solidarity, stronger through crisis. But while we build on familiar partnership, the recent past highlighted how traditional multilateralism is under pressure. And we are witnessing the emergence of a new form of multilateral cooperation. Its objective is to complement the existing organization with more flexible and agile frameworks. The latest example, the so-called STEP, named after the initial of the countries that are part of it, Saudi Arabia, Turkey, Egypt, and Pakistan. In this sense, friendshoring is one of the building blocks of this emerging form of multilateralism. Far from creating blocks or confrontation, this is about recognizing how, in an interconnected world, sovereignty and cooperation are no longer competing concepts. And I conclude, Ukraine, the Gulf. These are not isolated crises, but the symptoms of a world fragmenting at speed. But fragmentation is not destiny. It is a choice. The question for our generation is very simple. Did we let it accelerate, or did we build something stronger in its place? Here is what I know. Security and prosperity are not in competition. They are the same investment. Defense depends on your industries, your technologies, your capital markets, your universities. And economies grow where stabilities hold. History is unambiguous. Military power deters only as long as the society behind it remains confident in their future. The moment that confidence breaks, deterrence breaks with it. NATO is adapting. Partnerships are deepening. But the real work happens in meeting rooms and research labs as much as in Ministry of Defense. Deterrence, in the end, is the precondition for everything else on this agenda. Trade, investment, innovation, growth. And remember, the most successful deterrence is the one that never needs to be used. The one that looks from outside exactly like peace. Thank you.
Thank you, Admiral, for your speech. Let's take a seat here. Well, I have only a few minutes, but you mentioned strategic autonomy.
Yeah.
And I think that's the key issue that Europe is facing. And I wonder how you square that with the need to preserve the cohesion of NATO and maybe making NATO stronger. So in essence, can a stronger Europe mean a stronger NATO at a time when the US constantly rebuke European allies for not doing enough on defense? We just had an example yesterday with the in Brussels at a defense ministerial meeting.
I knew it. I stay awake all night to find a politically correct answer. And I have it, by the way, I have it. No, on strategic autonomy, don't take them apart from the alliance. Because a stronger Europe, a stronger alliance with a stronger Europe is a dogma. I mean, we know that, I mean, we should know that from the very beginning, Europe and NATO are, I mean, right, they are just matching perfectly, because if you consider Europe with all, I mean, financial capability, I mean, legal framework, and good, great leverage on industry on one side, which we don't have as NATO. We are a political, military, defensive alliance, which is not in alphabetical order, political, military, defensive alliance. And we have chain of command, plans, operation, all which is, I mean, the combat-ready stuff. So you can see how much compatible the two things are. So I would say that this is transatlantic strategic autonomy that we have to strive for because of raw materials, I mean, rare earth, anything that we need and we can get from each other on a two-way relationship. And I underline two-way relationship because Europe has a lot of stuff to do, has a lot of excellencies that on the other side of the pond they are not, and vice versa. So this is the first thing. Going back to yesterday, I heard, of course I was there, I heard the speech. They were basically the same word I heard 1 year ago. But in the meantime, Europe has done a lot in commitment and also in fact. So let's watch at what's going on now after 1 year. A lot of stuff has been done, so maybe we can update.
That's great. Thank you very much.
Thank you.
Following up on that, how does that square, so NATO and relationship with the US ally, how does that square with a stronger push for EU defense cooperation at the European Union level?
Well, I think that now things are changing. I think the European Union, which is not my business, but no, we usually do and we do more a lot together. Example, we went together with my counterpart in European Union. We went together to Kyiv. We went together to the Western Balkan, all the area which are of common interest. I mean, European Union is doing a lot. I mean, it's doing a great effort. They just considering and talking and organizing for what we call the European column of NATO. That should be something modular, that just going to reinforce NATO. Just consider it 23 nations in European Union. I mean, most of them are in NATO. So I mean, that's basically it. What we need and what we are looking at and what they are doing. We are doing just common requirements, standardization, interoperability, no duplication.
One last question on your. We talked about a troubled relationship with the US, but looking inward at Europe, do you think governments are doing enough to get where NATO would like to be, or are they taking the right policies and are right incentives already in place, or is there is more to do?
Well, I think they are doing a lot. As I told you, I think that there has been a strong change. Of course, I agree. We need to do more. I mean, We kind of, 1 year ago, maybe we had a cold shower, which is not related to this US administration, because also the other administration asked us to do more. This one did it in a more assertive way, and I think that Europe answered to this. I think that really we got the real problem, and also because now modern time, you cannot expect to have, unfortunately, never happened. I mean, a single theater crisis. It will be multiple. And I just want to say, and I repeat it, if we are in a mature, a strong alliance, which we are, because for 76 years, nobody touched 1 single inches of our territory, because we deter. If we are a strong alliance like we are, we will be able, in case one of our allies need to, redirect some energy, some power somewhere else, which is usual for us also in this global vision of security, we will be able to fill the gaps. And I think that Canada and the European allies are ready to do this, and we are watching this. We are just remanaging, we are just reviewing, reorganizing everything. And we did it, military, we did it for the first, because we just review all the command, and all the operational command now are European, no more Americans.
Admiral, thank you very much for joining us today. Unfortunately, we're running out of time, but it was a pleasure to talk to you here. Thank you.
Enchanté. Thank you so much. Such a great honor there to have with us Admiral Giuseppe Cavo Dragone, really bringing us through all of the great work that's going on with NATO. And again, a little cautionary tales out there for many of us. We all have to be aware of what's happening in the world. We have to look at the geopolitical issues and be very, very cautious in many ways. But again, I think the great work that is happening with the collective NATO is something we have to be, I think, so grateful for in so many ways, that it is there looking after each and every one of us. We're now moving on to the future of aviation, and could it be more human than ever? The founder and CEO of JetX joins us. Please welcome Adel Mardini. Adel.
Good morning, ladies and gentlemen. As a founder and CEO of JetX, it's my pleasure to be here today to speak about the artificial intelligence and the connection between the human being and the business aviation. What we built for JetX is phenomenal platform, and artificial intelligence rapidly transforming nearly every industry, including aviation. The global market of AI solution used by luxury brand is projected to grow from $1.2 billion in 2024 to reach $5.6 billion by 2034, which means expanding more than 16% annually. The luxury space, which is JetX operate, many appear resistant to that change at the first look. Our sector has long been defined by personal services and exclusivity rather than technology. Yet, behind the scene, we are gradually exploring AI to reshape the operational process and the client relationship. What makes us different is the way that we do it. JetX and many other luxury brands are adapting AI through several stages. The first phase focuses on operational improvement. Brands are deploying AI to refine forecast, supply chain, and analyze consumer trends. The next stage centers on customer experience. AI is powering ultra-personalized recommendation and virtual customer experience that replicate private terminal services online. Boston Consulting Group reported that 63% of luxury travelers think AI would be most helpful during the research phase only. So, JetX was the first in private aviation to launch virtual guest experience to educate first-time private jet flyers about our products and services. At the same time, physical experiences are becoming even more valuable. Some luxury clients and brands worry about the AI, which can make high-end experience feel robotic. 62% of the research participants are saying that the biggest risk of AI is losing the human touch. In many ways, the analog world has become a strategic advantage. Luxury brands are now finding renewed demand for human interaction, and we see that at JETEX every day and globally. In my view, technology should handle the hidden space, while humans handle the memorable. That philosophy is visible in all of our JETEX flagship terminals around the world: London, Paris, Dubai, Abu Dhabi, Red Sea, Istanbul. This is terminal function as a luxury experience destination rather than destination airport. We are investing in high-end spaces that combine the art, hospitality, and bespoke services that are unique to JETEX guests. Luxury travel is embracing the concept of slow luxury. The digital disconnection becomes part of the experience. The luxury client doesn't want to interact with AI. What they want to engage with a human. Despite the radical change we see in our sector, I strongly believe the essence of luxury will remain rooted in a human connection. The most successful brands are those that integrate technology in a smart way. Quality over quantity. For JETEX, less is more. We promote a concept of quiet tech at JETEX. Our focus remains on guest experience rather than the IT. This is the brand DNA of JETEX guest service at all the stages of travel. I firmly believe in responsible innovation and human-first approach. Our approach to AI is focused on responsibility, sustainability, and enhanced guest experience. This helps us solidify our position as a market leader in our industry and digital transformation pioneer. These are my view in AI in luxury as well as a private aviation. Ladies and gentlemen, thank you very much for your attention, and let's look forward to the bright future powered by human with a touch of AI. Thank you very much.
Adel, thank you so much. And indeed, good luck with all of the great work at JETEX. Yes. Powered by human with a touch of AI. This is what we want to hear for many of the industries. And I know even as we talk about AI for so many industries, yes, will they replace human? I think we keep hearing time and time again. The ideal, the sweet spot is powered by human with AI to run complementary. But the incredible work there that Adel, Mardini, and the team at JETEX are doing, really bringing a whole new style and a whole new focus to what aviation is going to be about, and to make sure that it is, yes, a luxurious experience and a luxurious encounter for each and every one of us. But again, we bring the technology into place. We bring the connectivity of humanity and technology in luxury travel. What I know we all want it, we all desire it. It's something that we can all aspire to. So well done to the team at JETEX. We have so many sessions for you this afternoon. We really, really do. And again, it's just part and parcel of what we do at FII, the interest that we have here and the people that are coming to talk to us. This morning, we've really been looking around investment. We've been looking at geopolitics. We've been looking at economics. We've been looking at more sustainability. And again, I see our dear Admiral is in the audience with us here from NATO. So lovely to have him and his team with us. So once again, to have that overview of what's going on at NATO. We're ready for this session, I do believe. And we're going to now look at heritage, power, and the future of culture. So again, putting all of that together, bringing back that concept of humanity. So let's welcome the panel for this session, and our dear moderator to join us for this session, to Barbara Serra, who is an author, journalist, and she will conduct this session on heritage, power, and the future of culture. Super.
Thank you. Hello, thank you, and welcome everybody to this panel. The title, as was mentioned, Heritage, Power, and the Future of Culture. Looking at culture as a strategic asset. Soft power is the thing we hear so much about. We're going to look at its different interpretations, but also crucially how it's changing. It won't come as a surprise to you that AI is having an impact here as well. My guests were just introduced. Let me just introduce them again. His Excellency Rakan AlTouq, Assistant Minister from the Ministry of Culture of the Kingdom of Saudi Arabia, Paolo Berletta, CEO and founder of Arsenale Group, and Arnaud de Puyfontaine, Chairman of the Management Board and CDO of Vivendi. Gentlemen, thank you so much for being on the panel. Your Excellency, if I can start with you. There's a lot of countries that use soft power. I think very few have been quite as determined as pushing the culture idea of using it as Saudi, all of this falling under the framework of Vision 2030. You have seen tangible successes. You've gone up a few places on the soft power index, and you've also created lots of important partnerships. Now, in this panel, in the title, it's described as a strategic asset. Culture is a strategic asset. Question is, for you, for Saudi Arabia, what does that mean? Is it economic diversification, international legitimacy, trying to build a domestic identity, all three, or are they incompatible?
Well, thank you, Barbara. Thank you for that question, and pleased to be here with my co-panelists. I think when you present these different elements of what are potential objectives for developing a culture sector, they're sometimes presented as necessarily trade-offs or at odds. And what's been guiding us since the ministry began is the idea of how do we combine all of these things in a way that actually have them reinforce each other. The Ministry of Culture was established in 2018. It had a national culture strategy set out that highlights the need for economic opportunity by building a creative economy. It obviously also highlights the need for international collaboration, not only because of wanting to tell Saudi Arabia's story of to the world, but also because we know that international partnerships are essential to developing the creative economy in the kingdom. So the truth is these objectives reinforce each other. They are symbiotic, in fact. What we've tried to do in the kingdom is to always be aware of the cultural asset base that exists, the heritage that we are inheritors of, that we hold in custody, really, and to make sure that development, when it happens, is very conscious of that. It's conscious about the past. It's very oriented towards the future and reaching our full potential. We've done that in large and small projects to different scales. I'll highlight some examples. Recently, this year, we announced the Riyadh University of the Arts. It's the first specialized built university for arts and culture education in the kingdom. It aspires to have 8,000 students by 2035. It's a university that is set up to build the capabilities for talent within the kingdom across different disciplines that will be the powerhouse for the creative economy. But it is one that is built in partnership with universities and educational bodies around the world. We're working with the Guildhall School in the UK, with the Royal College of Arts. We're also working with the University of Southern California's Film School to develop the film sector for filmmakers in the kingdom. And what we see is that that's the idea. You actually enable your influence around the world by having interesting stories to tell that are endogenous and indigenous. And that reinforces the confidence that the Saudi creative community has to engage with the world, but it also reinforces the opportunity for the world to come and work with Saudi Arabia. So the premise of these things being necessarily at odds, I don't think is always the case, and we've been very conscious to try to make these symbiotic, combine and reinforce each other, both for our domestic and international goals.
I mean, you mentioned the point of also trying to build up domestic talent. Now, obviously, something that Saudi has been incredibly successful at is building connections with foreign groups. But then it's, and you say you're managing to do that. I'm just wondering how much of a challenge that is. And just broadening it out to the issue of authenticity, which surely has to be at the heart of any kind of use of culture as soft power. But whether that sometimes you feel could be incompatible, or whether there is a balance to strike between foreign influences and staying authentic to your own culture.
I mean, the word balance is important. We in the same way that we want to be balanced between the past and the future, we want to be balanced between domestic and international. And ultimately, we want to grow, but growth with commercialization of culture is not the same as growth in typical economic terms. So we need to be very conscious, aware, and purposeful about how we think about this. Again, we get the benefit of designing an ecosystem with the ministry, with about 33 affiliated bodies established around the ministry, from specialized commissions in fashion, the culinary arts, heritage and archaeology, to different spaces. And we see that you need to balance this potential tension between authenticity and newness in different bespoke ways across these things. You have to be very aggressively thinking about the economic and commercial opportunities in spaces that lend themselves to that. But you have to hold in custody and proper stewardship things that need to be held as the intangible values of this culture. Ultimately, if you pursue an sort of unobtrusive growth idea with everything, you hollow out your cultural capital in a too fast way. You end up growing, but you're actually in a liquidation state of your cultural capital. So this conscious and purposeful idea about how do you do cultural development has to be bespoke within each subsector of culture. It has to be matched to the correct private capital, philanthropic activity, government support, and policy framework as well.
Which makes it interesting, and I'll ask you as one of the final questions, how you actually end up measuring success based on all the things that you've just mentioned. Let's go to Paolo Barletta from Arsenale. Now, Paolo, I have a quote of you saying that the DNA of Arsenale is rooted in Italian and European heritage. So again, the issue of culture coming through in a different way, obviously, than it would for a nation. You have a lot of projects in Saudi Arabia. Let me ask you that. How do you bring that DNA, that culture? Is it an asset? And how do you balance that again with staying authentic to the core message of your heritage, but then I guess adapting to different markets?
Well, first of all, I have to say that Arsenale, our company, is the representation of three families: the Bulgari family, Rovati family, Barletta family. And of course, this is like the DNA. I mean, when we created this company, we wanted just to be the host. So, you know, we wanted to welcome our clients in a way how an Italian family could host them, and so show and prove what is about our culture, tell a story, make a journey. We cannot be more proud to now that, by the way, Saudi Arabia for us represent a very important market. It's the first project outside of the European Union that will be live with a train that is set to start at the end of the year. That is the Dream of the Desert. And in this way, we also been very, very happy to have now a new family coming on board, which is a Kjell family, a family from Saudi Arabia. And so here again, you know, the DNA is keep shifting from Europe to what is Saudi, of course, getting the privilege to have this family with us. But I think what is very important to say is today in hospitality, what you need to transfer, what you need to give to people that come to visit your asset, to stay with your asset, is that you can really be authentic in telling them the story of how you've seen your part of the world, your culture. If people today come to Europe, they come because, of course, the food, because, of course, the quality of the weather, but because of the culture. They're not coming in Rome because there is no traffic and because the taxi works very well. For sure not. They come here because they want to live what is the story of 2,000 and more years of and you know, we're working in real estate on one side with iconic properties that tell a story. Yesterday we were in one of our property here in Rome, who has been an hotel since 1808. And I was telling, we just opened an hotel in Venice, which was discovered 30 years before the discovery of United States of America.
Yeah.
I mean, that kind of properties, when you live there, you really see what the culture, what is the DNA, what, years and years of civilization taught us. And then on the other side, we work on the railway, which is as powerful as the iconic asset that we have in Europe. Because railway, I mean, many of the civilization is thanks to the railway. And railway connected countries, created bridges. In a world like today with all this, the conflict, the bridges are so important. I mean, railway, if you think about the GCC railway network, now all the countries in the GCC will be connected by rail. But this rail, we also go beyond just the GCC. If you think about now with the situation in Syria is getting improved and hopefully in Iran, Asia, Middle East and Europe will be connected by rail because the corridor of railway track are getting like built. So what we do in our very small world is to create trains that can like traverse these countries, bring people together. And when, of course, you will be on a Dolce Vita Orient Express train in Europe, we tell you a story about Italy. You eat Italian, drink Italian, the landscape is Italian. But when you travel on the Dream of the Desert, in the desert, and not only the desert, because Saudi Arabia is an amazing country with desert, greenery, mountains, everything, you will eat local. You can see the story. The story of the train there is crafted about the story of Saudi Arabia. And I think that this is what people today, they really want to learn and to see.
Thank you, Paolo. Arnaud de Puyfontaine, your company, Vivendi, and we were talking about it earlier in the green room, has experienced enormous change recently because the whole industry that you're in has experienced enormous change, AI being the latest factor. Linking it all back to the issue of culture, how do you think that that change, the direction of it, and where do you think it's going to lead your company?
Thank you for your question, and good to be here. And I can't wait to use Paolo's training in Saudi Arabia anytime soon. That being said, I think that the media, content, and culture environment has gone through not an evolution, but a revolution, and pre-AI, just because I do think that culture, with the theme of our panel today, have to be seen in the context of local and global. There is no magic formula as regards to culture, but the capacity to build international players in that field is based on the capacity to be strong locally and then to be able to spread culture in different countries, because culture is a kind of a bridge. It's an intangible bridge which is going to those massive changes and revolution for two reasons. A few years ago, in culture, in entertainment, in content, the first and second to none objective was to produce the best content. It's true for a film, it's true for music, it's true for book publishing, it's true for a game, it's true for an advertising campaign. But today it's not enough, because the revolution as regard to technology has created two other pillars which are absolutely lethal. The first one is whatever content you produce, whatever initiative you're having in the culture, you have to make it known and appealing, because we are living in a world of content profusion. And so you need to be known and you need to create the appeal. And the third pillar is about distribution and user experience. Because if you do the best product, the best experience in any shape or form, it's not enough to create the awareness and the appeal, but you have to make it absolutely usable with a user experience that is going to be second to none. And we've seen the revolution around the music industry, the gaming industry, the audiovisual industry through streaming and distribution, because the world now, this industry has become more and more global. And AI, just as a kind of a climax, is going to accelerate this revolution. So we're going into this culture development, which is going to be extraordinarily important to build bridges between different countries, different culture. And let's not forget that being French in Italy and in Roma, the most beautiful city, La Ville des Lumières, let's not forget that we've got La Villa Médicis. And La Villa Médicis was a tangible element to create bonding between France and Italy in the context of sharing culture. And I guess that now, with the new world in which we do operate, we have to have more and more initiatives, and AI technology and the capacity to spread all those approach to the bonding between countries is going to be more and more important.
Yeah. I mean, as you mentioned, the changes predate AI, but AI is certainly upending the way that all communication now takes place and the way that people, nations, companies project themselves. So, Your Excellency, if I can go back to you on that point, I mean, obviously, what Saudi Arabia is doing is part of a vision that it wants to project to the world at a time, though, when AI is proving to be quite a destabilizing force in the way that everyone communicates, from mainstream media to nations to everything. How are you, do you see it as a challenge, and how are you facing it if you do?
Yeah, I mean, AI and well, technology and AI specifically in the last few years has become something that we're looking at with excitement and caution at the same time. I think the definition of this nexus of culture, creativity, and AI hasn't been fully formed yet. There's a discovery of what will the impact be on creative production, on musicians or artists. I think applications that are specific show already how artificial intelligence is an accelerant of work. It's an efficiency gain. We see it in things such as archaeology or preservation and so on. But if we want to take a more macro view on how does it affect the culture sector, we're a little bit forming some opinions on it. What is clear is the point of caution I would like to state is for places around the world, and certainly for Saudi Arabia, we know that a lot of, especially with the language models and things that are being built now, that the essence of this is on the training data itself. And what is the training data? And we know that there's less than adequate, at least from our point of view, amount of Arabic content, Arabic language content, or even stories narrated from within the kingdom that will form this data. So the worry is that if you're not in the training data, in the future, you're not in the memory as well. So what do we do about this? We do significantly more work around linguistics and AI. We have the King Salman Center for the Arabic Language, which is a specialist linguistics institute that's working on this. We do significantly more documentation digitally of our heritage, but also of contemporary cultural production, which is very important to feed into this. And we're working with companies such as Humane in Saudi Arabia to even design small language models around Arabic and Saudi culture that feed into potentially global and macro training data. Because as much as technology and AI can accelerate the good things, it can also potentially accelerate with biases that we would like to move away from. So that's the point of caution, I would say, while welcoming, and I think all of us should be embracing the gains, we should approach this with some nuance.
Yeah, I mean, we're talking about soft power. Surely there's no bigger soft power than the English language. None of us are native English speakers, and that's the language that we're using. And so in AI, it's very much sort of worth focusing on that as well, because language is culture. We only have a few minutes left, so a little whip round, and I'll start with Paolo and Arnaud. Very quickly, in your specific sectors, how you measure it. How do you measure the impact of culture in your businesses, and how successful you're being at harnessing it, Paolo?
Well, in our business, it's based on the level of attention span that we can get from our consumer, our viewers, our listeners, our readers, our gamers, our clients in all our advertising campaign in any shape or form. And you know, the common themes about all our different businesses in our group is based on creativity, and you just mentioned that. And I'd like to say that we know that things in this environment is moving on a daily basis. And there was a question about what's going to be the impact on the AI in creative business. And I like this sentence, which I made mine, but it's a Dutch scientist who recently said that asking the question about AI and creativity is as sensible as asking the question on whether a submarine knows how to swim. I leave that to the audience as regard to this aspect of AI and creative operations.
Well, very quickly, I think, first of all, you know, maybe I'm a little bit old school, but I think that our industry, the ultra-luxury segment especially is the most analog ever. And you need to remain analog, at least for the front office. Whenever there is like too much AI, robot and everything interacting with our guests, I hope that I will not be anymore the CEO of this company, and probably not anymore here, because that will take away what is like the real transfer. However, AI can impact very well. So first of all, the impact on our business is that more AI, more people will have free time, more they can travel, more they can come and relax in Rome. And so we are very happy about that. And at the same time, you know, I think that sometimes there is no best advertisement that Mr. de Puyfontaine that goes to our Saudi train and will tell to his friends, to his people, that the train has been an incredible experience. And you know, that one, I think that despite what we will see, and we of course push our company to use AI in the back end, but this kind of true connection between people, true advice between person to person, is what really will make the difference on an industry like ours. And I think that we will keep it, and we will use AI for other purposes, but we will keep that real human nature, because otherwise we will lose every day a piece of us, ourselves, and our culture.
Your identity. Last question to you, Your Excellency. How you measure it? I mean, you know, there's Vision 2030 has, you know, the 2030 number in it, but 2035, something that's so difficult to pinpoint like soft power and culture. How would you measure it?
Well, we clearly have measurable objectives for the culture sector of Saudi. We know that a significant part of our agenda is economic. We are tracking above our targets, aiming to get to 200 billion riyals in GDP contribution. We know that we are aiming for 35 billion riyals of cultural exports from the kingdom. We know that we have 200,000 employment opportunities to be developed by the culture sector as objectives, and we're tracking those, and I think hopefully exceeding them, because thankfully there's a lot of tailwind for this sector globally. What I would like to say is that with culture, we also have to allow ourselves to get into the space of what is not measured easily. And we have to allow ourselves to sort of understand influence outside of just objective numbers and to operate in the space of subjectivity. For us in the kingdom, we have a cultural asset base of heritage and current creative production that's very high and growing. We have an ecosystem that's being designed to collaborate in the most effective way between government from a policy and incentive standpoint, private capital and philanthropy, and international partnerships. As I mentioned, 33 institutions, but that's not counting the constellation of private investors, philanthropies, and so on that are joining in shaping this sector. And we have a very conscious approach about preserving heritage while developing a culture sector. What I would like to see, I think all of us in the ministry, is that in 10 years or in 15 years, not really only what will people say or what will the numbers say about the Saudi's culture sector, nor what will just the story we say ourselves be, but will people start to do things by a proof of concept that we've shown. And I think we're going that way, where the model of development in Saudi is starting to become a benchmark model on how do you do conscious cultural development that achieves economic objectives, that keeps you relevant and more important to the global stage, but also serves your domestic economy in the best way. So that's the space, let's say, of less measurable things that we also need to be aware of and keep that nuance in our thinking.
Okay. Your Excellency, Rakan AlTouq, thank you very much. And let me thank our other panelists, Paolo Berletta and Arnaud de Puyfontaine. Thank you, gentlemen, all so much. And thank you.
Barbara, thank you so much. Barbara, Sarah there, and her great panel. Your Excellency and colleagues, thank you so much for being with us here. Absolutely, the power of heritage, the power of culture, and the future of culture, so very important to our future. And again, that concept of conscious culture and collectivity. And all of that, of course, is only made possible when we have national security. That, I think, is one of the key things, and we heard it from the Admiral at NATO there, the importance of global security, the importance of national security. Our next session, now I am beyond honored to have the time to spend just a few minutes here with the Minister of Defense from Italy, but this will be in Italian. And perhaps a few of you, your Italian may not be as good, maybe as good or as bad as mine, so you might need a translation. So please, please have your headphones ready, because I will ask the questions in English, and the ministers kindly then he will reply in Italian. So we just have about 13 minutes on the clock. I better get him out here. We are ready to go. Please give a very, very warm FII welcome. The Minister of Defense from the Republic of Italy joins us, the Right Honourable Guido Crosetto. Buongiorno. Wonderful to have you here, Minister, and thank you so much. You talk about a more European approach to security. But also when we look at Europe's defense industry, it's very fragmented along national lines. How can we shift, I suppose, an industrial base to deliver cross-border projects, shared standards maybe, and even joint production? Can we do that?
First of all, thank you for the hospitality. The problem is fundamental for the European industry. It doesn't have many years to renovate, because the great enemy of each industry is time nowadays. So the goal of the European industry should be to speed up, especially the defense industry, to have the prototypization to production time be quicker, so that this is what Ukraine teaches us at the moment. This is what happened in the Red Sea is teaching us. The industry must transform the current fragmentation in a positive element, because if they collaborate in the initial phase, the fragmentation can be the engine with which you can increase the production, you speed up the production, and you keep prices low, because the challenge of the defense industry will be on the speed, on the quantity, and on the resilience. So there could be, it could be useful to have a higher number of production places, because they don't have to eat only one place. So you need to transform fragmentation in a positive element, but time is tight.
That speed, and unfortunately many times I think we're caught on the hop there, that we have not looked far enough. But when we talk about security, and I think national security and resilience, you know, it looks as a government cost center. The population don't like to vote for defense, perhaps. You tell them it's a growth story, but actually maybe it's difficult to do. So what is the most attractive opportunities? How can you get private capital in there? How can you get investment? And how can you get that support to move this industry?
You asked a question that is very current, namely considering defense just a cost center. It is common in many nations, but it is the current discussion here in Italy. Defense is a cost. But when there is a war that can be very sudden in Ukraine, in the Red Sea, and when the economy stops, restaurants stop, cars stop, transportation stops, the wealth of a country stops, everything stops. Without security, without a defense system, without a peace, the economy doesn't move. So the defense is a pillar so that everything else exists. So investing in defense and avoiding war, avoiding conflicts, avoiding insecurity is a basis on which all democracies should work on, and it is not a cost. Why it's not a cost? Because the technologies of the defense are dual technologies. We work in the digital world, and it starts from the defense. The American DARP is the place where the biggest American technologies were built. The Silicon Valley is built on the defense. We have reached a period in which, for the first time, the private industries are stronger than states. So we're reversing the trend. But the growth of new technologies will change the world of defense. But it will be a continuous exchange. And this is why we need to speed up, because Europe cannot lag behind, because if it lags behind in the defense sector, also in the economic and industrial sector could lag behind. It is all connected.
We don't have national security, as you say, we don't have economic security, we don't have energy security, nothing works. But when you look across AI, cyber, and secure communications as well, where do you think Europe must be self-reliant? Because the danger, if we don't do this, as you say, with speed, we will get left behind and we will be in a vulnerable position. But how do we actually remain independent and yet make these partnerships?
This is the biggest challenge of Europe, namely keeping a national sovereignty in sectors where big companies, especially American, are far advanced. The first thing is the space. If you think of Musk, when Europe will be able to reach the level and the number of satellites that Musk's have, 8 years, 10 years, and in 8 years, what level will Musk be? So the European challenge is to understand which is the direction where you can be competitive. Where you cannot gain ground, you need alliances. You need to partner with the big companies in which you can't recover the technological level by keeping the national security, the security of the data. And this can be done only through an agreement through the states and through the companies that give them the security of the fact that they can use these technologies. And this is the challenge, and this must be done in due time, timely, because I think it is stupid to focus and invest resources in sectors where the gap cannot be bridged. It's better to sit down and treat your security on technologies, even if they are not European. So you need to focus your resources on technologies on which you can build European technological verticals, on which you can build GDP and future production. You can't do this on everything because we are not able to compete, because the size of major technological American companies is uncomparable and cannot be overcome in few years. And few years means few centuries. The technological gap must be measured in weeks.
We have to get the speed in this. But when we want to attract this investment, you know, is it important to also embrace European investors to come and actually maybe raise the quality, raise the speed, and work on a more global level?
Obviously, you need European investments in European sectors, but you can't be close in Europe. You need to go to the world and make it European, to provide European securities and to put European boxes to guarantee your sovereignty, but you can't recover on everything. You can defend your data, you can defend your national security, but you can't use the most advanced technologies that you have, because if you want to use your own technologies, you just waste time, and no one can afford the waste of time. Time is fundamental on which the future of all nations is played.
Problem, as we've seen, can become a global problem very quickly. But in practical terms, when you look at Europe at the moment, Where are the biggest bottlenecks here? Is it regulation? Is it the governments maybe not coordinating on this? Is it skills? Is it building capacity? I'm sure many of these areas, but what do we need to tackle first?
No, non gli skills.
Well, not the skills, because I speak on behalf of Italy. We have researchers that are all over the world that work in the major technological American companies. There are many, many Italians as well as Indians. The problem of Europe is what you said, namely regulation, too much red tape, too much slowness. And I make an example. We have the antitrust organization. In Europe, we oblige European companies to stay small and to be at the same level of major companies, and it's mad. It's something that it's not true. Chinese and American become bigger and bigger, but Europe imposes to its companies to remain small, and it blocks them when they grow. And if you don't overcome these problems, you don't have any future in this world.
Thinking small is to our deterrent in many ways to it. But when we look at supply chains, and this is perhaps also the problem with thinking small, you know, our supply chains for energy, critical minerals, semiconductors, all of this coming in from other countries. So unless we shift that thinking, we will be dependent on an imported supply chain for a long time. And this, it doesn't make sense. What do you think?
We have a technological dependence, but the most serious one is the energy dependence and critical raw materials. The problem is the 90% of dependence on rare earths in China. Europe is poor of energy, if you exclude the north, of raw materials. That's why, upon a proposal of Italy, we are doing common policies on critical raw materials and energy. The problem is that you must do it quickly. The world doesn't wait for us. With regard to the production capacity, you have to calculate that Europe, from a manufacturing point of view, remained one of the places in the world where there is the highest manufacturing capacity. Italy is, after China, the second nation in the world in terms of manufacturing capacity. The difference is that in China there is a company with 10,000 employees. In Italy we have 15 employees in this company, but you can grow this know-how and help these companies with new technology. That's why I liked a proposal from Andrea Pignataro, so a fiscal incentive for Italy for all those who adopt artificial intelligence, also in the smallest activities. It is a fiscal intelligence that, if you adopt it earlier, you receive a higher incentive. So this is a way to have this manufacturing capacity grow.
Comes back to your focus on speed to actually be more competitive and to position Italy as a European leader, but hopefully a global leader. Just in closing, what would, I suppose, make your life better, make it easier if we could find maybe more cooperation, more cohesion with Europe to actually maybe look and feel the same way as you do, that the urgency is there, the speed is needed, and we cannot sit around talking about this for much longer. We need to take action. What do you want to see happen?
I think that Europe is realizing the need that it needs to act quickly. We are slaves of the national sentiment, also those who are not. We are closed within our borders. Either you open your borders or you will die in your borders. It's like being closed in a place where there is no air. Either you open the windows and you have air in, or you won't be able to win the challenges. We get used to move in a smaller world. We are no longer the center of the world, but we are those with a great capacity, and we are those, and this is something very similar to Arab countries that have, in addition with the industrial capacity, have values that are important, namely family, first of all. It is one value that we have in common. If you don't defend that values with the technological and economical growth, when these values will be devastated. This is the goal, but the defense is the pillar of some economies, and you need to defend that values linked to the history of those countries.
Is the pillar of humanity. If we are not safe, if we cannot have security in our country, in our continent, in our world, then we have no economic security. So it all comes together. What a good, strong note to put it on. We need to make that shift. We need to make those changes. And we'll be expecting you to keep leading the way. Thank you so much.
Thank you.
We've been so honored to have you here. Grazie. And there are some words of wisdom from the Right Honourable Guido Crosetto. Great to have him here. And to our dear colleagues in the audience, thank you. To our friends from NATO, thank you, Admiral, for staying with us. Again, so much that we can do here, and we have to look forward and I think look out. That's really the message that we were getting there from the Defense Minister, as it comes back to the fact that if we don't have that defense in place, if we really don't have the strength of our defense and the investment for education, for employment, put all of that together. So it really, really is. There's so much that we have to do there. We're going to move on to our next topic here, and we've been looking throughout the day, we've been looking at culture, we've been looking at so many areas of what we need for a more holistic society. We're now going to look at building fashion's next growth market and really looking at the investments that's needed there, the infrastructure, and of course, building those local value chains. Sofia Celeste is a senior correspondent for interior design and hospitality with WWD. And joining her in conversation, the CEO of the Fashion Commission for the Ministry of Culture from Saudi Arabia, Burak Çakmak. Burak, lovely to see you back on the FII stage again. We're looking forward to this. Thank you.
Thank you. Well, Burak, it's so nice to see you again. Saudi Arabia fashion is really growing at an exponentially fast rate. I know all the fashion eyes are on Saudi Arabia right now, especially after the last edition of Cannes, where we saw Saudi Arabian designers really have a very strong presence on the red carpet. And the Commission has, since you started in 2021, you've really been pioneering the Saudi Arabian fashion industry. And the Saudi Arabian Fashion Commission has forecasted the sector to rise to $40 billion by 2029. And that is expected to make up 2.6% of the GDP. What are the main drivers?
As you can imagine, it's a country with very young population, 60% under 30 years old, a lot of interest in creative sectors, and a lot of SMEs that are being created to be able to be part of this new moment, the Renaissance, cultural Renaissance that's happening in the country. And as the Fashion Commission, we are working very closely to support all of the businesses across the fashion value chain to be established and support them through their journey in growth. We run programs like Saudi 100 Brands, but also we have many other partnerships, including building making spaces, bringing educational partners to ensure that the full ecosystem is created in the country.
And the Commission has fully supported the manufacturing system, the value chain. One of the big projects that you've been behind is the Saudi 100, which has exported and resonated Saudi fashion all over the world. Can you tell us a little bit about that?
It's important to make sure that creativity is at the heart of all the work we're doing. We want to build a fashion industry that's driven from the design all the way to the finished product and retail. So local talent requires this kind of dedicated support. So in the past 5 years, we've been taking 100 brands every year into this intensive program and taking them through a journey of building their businesses. That includes also engagement locally, internationally with all of the right industry players. So we have done many of the fashion weeks around the world. We are now every year in all the key showrooms around the world introducing brands to the retailers and wholesalers, but also giving them an opportunity to also showcase, market their brands through our Riyadh Fashion Week, which has been the first public fashion week that has been established 5 years ago. And we are looking forward to opening this platform to all interested businesses as well in the country.
Riyadh Fashion Week was really the culmination of a lot of your effort, and you know, the global response has been very impactful. I know Giorgio Armani is building residences in Saudi. Dolce & Gabbana has plans to build a 16,000 square meter space in Riyadh. Can you talk a little bit more about the global participation in Saudi Arabia's fashion industry?
I think the industry already knows that Saudi consumer is a very strong base, and they have been engaging internationally. But now that the country has made a lot of investments and many sectors, including retail and tourism, and work population has increased significantly, there's a lot of demand to be able to do retail therapy also in the home turf. And this is basically supported by all of the infrastructure that's being built. And we just have seen Westfield announce that they will be operating the first 2 malls in the country starting this year.
Mhm.
And we are seeing a lot of international multi-brand retailers as well as international brands making commitments to the new retail that's opening in the country.
I mean, it's hard to envisage just how fast the Saudi Arabian fashion industry is growing if you haven't actually visited, but there's so much going on. New fashion districts sprouting up. We discussed that earlier in Riyadh.
So a few opportunities, especially when it comes to fashion investment. It's great to see that the first ever fashion district has been announced and it's being built as we speak in partnership with a real estate developer, which is creating a fund and it's open for investment opportunities as well. So anybody interested in this sector, we are definitely available to be able to make the connections to learn more about it. But in addition to that, I think what excited me the most is this year we announced the first ever fashion fund that has been established in partnership with a local venture capital that has been supported by the Cultural Development Fund, 40%. And now we have established a board and we already created a healthy pipeline of potential brands that's going to receive the initial investments. And we are looking at growing this exponentially as we showcase the success of the industry as well.
I mean, this is really good for the small and medium-sized businesses that make up the backbone of the Saudi Arabian industry. I mean, what are the criteria for these firms that you're looking to support?
I think for the fashion fund specifically, Zia Fund, it's definitely looking at number one, homegrown businesses as a priority. But in addition to that, any business that have interest, significant interest in Saudi can also be considered. So obviously we are looking at still small to medium size enterprises, but the existing teams, a healthy revenue stream available and the right financials are available for us to review. And then we'll take it from there for interested parties. So.
It's exciting to see how, you know, this very pivotal period in the Saudi Arabian fashion industry, you know, I know that the industry has grown. It now counts 343,000 employees, which is remarkable that it's grown to that level in just a very short time. Can you talk about these employees that make up the backbone of the fashion sector?
Indeed, I mean, we are seeing that number grow quite quickly. And obviously, about half of it is in the retail space. But the rest of it is core fashion roles that includes the makers, the tailors, the designers, the office team, the owners. And we are excited to see that even grow further because we are, as you mentioned, we are having many international businesses start to come direct. So there's any company can 100% own their business now in Saudi, which means that a lot of international businesses started to come direct and open their offices, build a local team, as well as operate their stores or other services. As a matter of fact, we had a few successful partnerships out of Italy, the heart of the fashion sector in Europe as well, to come into the country. So the first foreign direct investment in education was actually with Istituto Marangoni. The campus opened in August 2025, and they have been operating successfully with a healthy number of students. We also have the first ever permanent showroom in partnership with White Milano that is signed and will be opening this year. That's going to be able to represent all local international brands to the regional buyers as well as customers. And we also just recently, a couple of weeks ago, signed an agreement with Minerva Hub, another strong manufacturing group out of Italy. They will be opening their offices and engaging with us for supporting the local needs for production. And we are working on several others in the pipeline.
So Minerva Hub will have a base in Saudi Arabia?
Indeed, starting with an office, and we are looking deeper into what other support that can be provided.
That's really fascinating because Minerva Hub is such a key company within the supply chain in Italy. One of its founders is Matteo Marzotto, who is a major pillar of the fashion industry here. So these partnerships that have come together over the last years are really driving the industry in very unexpected ways. I was just wondering about the Made in Riyadh label. About the bringing manufacturing to the city, which is quite a unique concept.
I think the way manufacturing changes is enabling some of that to happen in a much easier way, with a lot of automation, new tools, many digital elements that is being incorporated is allowing us to be able to localize some of the production as well. So we have created a production space already in the city that is offering state-of-the-art facilities and supporting local industry, B2B and B2C needs. So we are able to do made in Riyadh, not even just made in Saudi, so creating a new niche around it. So the traditional garments, especially thobes, have always been made locally because it's always custom ordered. So there is already a knowledge around tailoring and patterns, and we are building on this momentum to be able to bring other experts to support us in that journey.
I mean, this is the last point, you've had a very international career. You've worked with Gap in San Francisco, you've worked with Swarovski, you were a dean at the Parsons School of Design. I mean, with all the sweeping cultural changes since Vision 2030 has been announced, do you think it will incentivize Saudi creatives from abroad to come back and produce in Saudi Arabia?
Well, indeed, we are already seeing that happening, and not just Saudi creators, but the opportunities also for anybody that's selling in Saudi. If you're looking at new value chains, that's going to make it faster, cheaper for them to be able to support the needs of the local market. So, for example, if you're an international brand and you want to do a capsule collection for Ramadan specific to Saudi, why not send the digital patterns and get them produced in Saudi and ship it directly from Riyadh to the customer, which will reduce duties and make sure that you can make adjustments last minute. So we are offering a whole new way of thinking about the value chain. But I also want to mention that we are seeing the momentum because of number of brands that are already starting to go IPO as well. So we have seen a very healthy growth in the brands that we support. In the past year alone, the brands in our Saudi 100 program grew their revenue around just over 30%, which is very significant at a confusing time around the world to see that momentum is still there. And several brands in the past 2 years have been able to go IPO. So to support that across the value chain is quite critical. And we want to see that to be an example to the rest of the countries around the world to see how they can rethink where they approach fashion industry.
Well, in closing, during a very critical time for the fashion industry where growth around the world is a challenge for many luxury brands, it's refreshing to see all of this growth and newness and investment in Saudi Arabia. So congratulations.
Thank you so much, Sophia.
Thank you.
Thank you so much to Sophia and Burak. And of course, there's great developments in the fashion industry in Saudi Arabia, just like every other industry. So it's wonderful. We can all be there in October, of course, too, to see much of the latest fashion. It's lunchtime. Please, time to let you go and enjoy lunch. Please be back here at 2 o'clock. In the afternoon, we will have destinations, we will have travel, we will have more AI, and we will have city information, infrastructure, growth of cities. But more important, we will also be talking about entertainment. So I want to make sure you're all back here, but be back here 2 o'clock sharp for our final run. The road to Riyadh will close this one off as we close off this wonderful Rome FII Priority Gathering. Thank you so much. And we're back. We're on the home stretch for FII 2026 here in the beautiful city of Rome. And we're here, of course, on a gorgeous summer's day. What a wonderful morning we had. We had so much to engage, inform, educate, and hopefully inspire all of you with in the past day and a half. And we're going to continue that for the afternoon. We're going to be looking at infrastructure. Of course, we'll look at AI again. We have to look at AI every step of the way and just see what's going on there. We'll have some fashion and we'll also have some entertainment. And let me start this session here. Capital AI and the new entertainment playbook. Simone Giacomelli, the CEO of Prem AI, is our moderator for this session. And he is in conversation with the founder of Marvel Studios. David Maisel joins us. Ladies and gentlemen, give them a warm welcome.
Good afternoon. It's a great pleasure to be here at FII and a real privilege and honor to share the stage with David Maisel, the founder of Marvel Studio. David, I have a few questions for you. But before we begin, I know that you have something special that you'd like to show the audience today. Yes. So we make sure that we have the time for that. Why don't we start by setting up the context as we go through this session? How did you identify back then Marvel to be the best place to focus your time and capital?
No, it's a good question because a lot of people think, given how big Marvel and the Marvel Cinematic Universe has become, that it was obvious. And at the time, it was the opposite. In 2003, Marvel had just come out of bankruptcy. It was purely selling comics and toys and licensing its movies to other studios who would take the risk financially and also get the upside. So Marvel had gotten up to about $150 million market cap, publicly traded. And on top of that, besides X-Men and Spider-Man, nobody really wanted the other characters. Warner Brothers, for example, had the rights for Iron Man for many, many years and never thought it was worthy to make it. So the idea of any IP holder to make its own movies was radical, especially $100 million, $200 million movies, rather than going through the studio system. And there wasn't a concept of universe. The reason, and obviously I got excited about it creatively, but I love the art of the creative, but I also like the art of the deal and of the business. And I think that's actually one of the reasons why I was able to identify this. I grew up loving Marvel. I was very familiar with the characters. My parents would say too familiar, probably. But it was something that I had my eye on all the time. But more important for this discussion about capital was I had to find something that I thought warranted my time and raising capital. And I had the privilege of learning about entertainment through some great experiences and mentors. Hollywood is a black box on purpose. They don't want people to understand how money's made. A lot of people in Hollywood don't really understand it. And they famously do not return capital, especially with foreign countries, whether it be the Japanese, the Chinese, the Germans, the French. Everybody has been taken to the cleaners, essentially by investing, especially in US Hollywood type of assets. There's been some exceptions, but those are the exceptions. I worked at CAA, Creative Artists Agency, with a man named Michael Ovitz, who was at the time the most powerful person. And because of that, I had access to all the information at the biggest talent agency. And then he became president of Disney, and I was able to go there and see everything from within a studio. Over a weekend, I sat down and I came up with a business filter for what my investment would be, in this case, my time. And that was to find an asymmetrical risk reward. We all hear about that now, especially with AI. It doesn't really exist, entrepreneurship in Hollywood. But I realized that the studios were not going to provide that. And they historically haven't. Disney stock, for example, is down over the last 10 years. A lot of people don't realize that, which is pretty amazing accomplishment given how the stock market has been. Warner Brothers was down to single digits from the high 20s with the Discovery deal before David Ellison targeted it for his acquisition. So that asymmetrical risk reward, I had studied the film business. I knew no matter how much you say you know and do, and I'll say this even about myself, I've never had not a #1 movie, but the first movie of something new is always risky. However, if it works, sometimes there's no sequels. People make movies where it's just one movie. There's no natural sequel. Sometimes there's one or two. I wanted to do something where if the first movie worked, there would be 100+ sequels or quasi-sequels. And that would be accomplished by mixing the characters. And the reason for that is sequels and spin-offs and so on are relatively predictable statistically from the box office of the movie before. So you can manage your costs and you're guaranteed to make profit. And versus wondering if you're going to make profit on the first movie. And with that asymmetrical risk reward and that type of formula, I needed IP that was a natural universe where there's enough characters, enough depth to the characters, where there could be all these films and we could get people into the story world and not want to leave and share it with their parents and their kids. And, being here this weekend, this week has been amazing, just hearing how the Marvel stuff has influenced people's lives and cross cultures. So from a return on equity, though, I knew that if we had enough at-bats, one of those films would work and we'd be able to have what is now people are seeing as the MCU. And it was content that I was focused on, for that period of time.
My next question relates to that. Mm-hmm. In today's world, what do you see are the key trends in entertainment when it comes to capital deployment?
That's the key question, because if you think about the value chain of entertainment, There's the production of the content. There's the identification of what content should be made. There's the production of that entertainment, whether it's a movie or a streaming show or a video game. There's the marketing of it. People have to be aware and want to sample your content. And then there's the distribution of it, getting it to people's screens. It used to be that the studios had a perceived monopoly on all that. And with Marvel, it was starting to disintermediate that. I said, no, we can own our IP. We don't need you to make the movies. We don't need you for the capital. We don't really need you for the marketing. At the time, we still needed distribution, going to theaters. We didn't have a direct contact with the consumer. Now, all of that's being disintermediated more. And it's important to understand that in terms of investment. You know, the identification and the production of what should be made is now quickly being democratized, right? With AI especially, there's going to be a lot of people who can make what was a Marvel movie over the weekend in their home. It's not all going to be great quality, but there's going to be a lot of ability and a lot of noise. So that sector, in terms of, we're just proficient in making the movie, will become more commoditized, right? And then in terms of the marketing, arguably the studios are not as effective for that. People can market themselves these days, obviously with the social media channels and creator economy and so on. It's difficult. There's a lot of fragmentation of time, and that's a trend that is very daunting, right? Because you have YouTube now that's bigger than, say, when I did Marvel. You have social media, of course. You have games. You have short form content, different devices, different mediums, horizontal entertainment, vertical entertainment, shorter entertainment, mini episodes. People are all in their own silos. So to get a cultural event like Marvel, to get that big return, because here we're not talking about investing $5 million to make $1.5 million on an indie film. This is about making tens and tens of billions of value. Marvel, we got from 100 million to 10 billion with the sale I made to Disney. Now I get told by Bob Iger and Kevin Mayer it's worth 30, 40 billion potentially within Disney. You know, to get that kind of increase has only really happened with innovators that are entrepreneurial. So obviously what we do with Marvel, but also Reed Hastings and Ted Sarandos with Netflix have done a great job. They're up to, I think, close to $400 billion. And famously, Steve Jobs doing Pixar. All of us I was in it in Hollywood. Those two really weren't. But they were entrepreneurial and saw that the market is inefficient. So even though I'm saying there's a lot of daunting trends, there still is opportunity. You know, I thought it was daunting when I did Marvel because the studio system's not necessarily attacking it. One thing I'll say is what David Ellison's doing with Paramount, with Jerry Cardinal and with the Saudis and others, is a smart bet. And I say that not because I'm in this room. I've known David for a long time, incredibly smart and motivated, but it's going to be owner-operated. It is focusing significantly on intellectual property, a la the Warner Brothers acquisition. They now own DC, obviously Marvel's at Disney. And with that energy, you know, I still believe what I believed in 2003, that the best place for value is owning the brand, owning the intellectual property of the characters, because it's been proven all through the things that no matter what happens, that's where most of the value will go. Like sports teams who renegotiate contracts every few years. You know, owning that intellectual property and that talent gives you assets that are evergreen, and it also means you can market easier because you're not trying to get these distracted people. You already have a brand that's established to go after.
Let's go back to AI for a second. What do you see, and specifically, what do you think is going to happen in the future of AI and entertainment as they're merging more and more together?
I mean, it's a key question because it's already happening. I mean, in different areas. So, for example, I'll show something at the end, but it allows me as a producer, as a creative producer, to play with scenes and to edit scenes. And in Iron Man, there's a 20-minute cave sequence that, if you remember, is in the beginning of the movie. When I wanted to see a version of that at 15 minutes, 10 minutes, 5 minutes, it would take a team of 10 editors and, you know, a couple weeks to produce that. Now I can sit and just with prompts get an idea, even if it's not perfect, of what these things look like. So it is almost like a huge creative assistant for creative people to play with their ideas. in the production end of the content, you know, visual effects, for example, all the fight scenes and action with the Marvel movies or animation, those processes will become so much quicker and so much less costly. You know, I think costs of animated movies will go down 50% in the next 2 years, maybe 3, and another 50%, and continue doing that. It takes 3 hours to make animation, 3 years to make animation now. Eventually it might come down to hours, but not 3, but it'll come down tremendously. The million-dollar question is, will there be new ideas that come out of AI, not just as an assistant? And you know, I don't know what's going to happen there, you know, where inspiration comes from, but I wouldn't doubt it at some point. You know, well, actually, in closing, as Simone said, Simone has an amazing company called Prem AI based here in Italy and Switzerland. His company helped me play with my new comic book universe, Ecos, which I'm as excited about as Iron Man. But I wanted to play with a teaser and literally be able to see what's in my mind on the screen, and it's something that could attract attention. It would have taken me a year and maybe $1 million+ to do it traditionally. With Simone's team, what you're about to see, we were able to produce in a matter of a couple months for, you know, pennies on the dollar. And it's still rough. I haven't shown this to many people at all, and never mentioned that it was made all by AI. Here, the people here at FII thought it would be fun to close the session. So you can see something that was made with AI in a very easy way. Probably can make even quicker now and better. And again, this is rough, but enjoy. This is the first teaser for Ecos.
This island has always been my entire world. And my home. My Ecos. I never knew life existed beyond it. All sharing this precious and beautiful planet. But that life is now in great danger. Our shared Ecos could very easily be destroyed. Everything is at stake. There is no path that is without risk, but I will take the leap. The world needs a wake-up call.
There you go. Thank you. Thank you. And thanks to Prem for helping assist that. All right, pleasure. Thank you all.
Thank you so much. See, we promised them entertainment. Well done. You delivered. Thank you, Simone and David Maisel there from Marvel. How exciting. And what a great story. What a wonderful story that was. We're now going to move on to looking at infrastructure for the urban century. And when we think about infrastructure, it has expanded over the years to include so much. We once looked at this as a construction topic, I think, but really we have to examine infrastructure now from a much more holistic point of view and really look at what is it all about in terms of the urban century. We look at the growth of the cities, we look at movement from rural areas, indeed around the world, into the cities. But some of the fascinating work that is going on, particularly in Saudi Arabia, I think it is they're growing communities and new communities. This is what's so exciting about it. These are new communities that have never been built before, and the appetite to see, you know, new life grow around these communities. So building, yes, the infrastructure, building the communities, building the technology that's going to help move them, and indeed just the very great skill, I think, and the determination that goes behind creating new cities. So it's a very dynamic time in the industry. And my dear panel is just standing in the wings here, ready to go. Let's meet our panel for the infrastructure for the urban century. They're joining us here. And we're delighted to have with us, too, our dear moderator, my dear colleague and friend, co-founder and CEO, Saba Communications Consultant. Please give a warm welcome to Siva Audi, and she will conduct this panel.
Thank you very much, Etna. I felt that we might need to fly in like superheroes after this presentation from Marvel. Thank you very much, dear panelists, for joining me, and thank you all for coming in today. So we are talking about future cities, and it seems that we are living through the most condensed period for urbanization in human history. By 2050, roughly 2/3 of the world's population is going to be living in cities. And there's an estimate by the United Nations that said that $90 trillion will be spent on infrastructure between the years 2015 and 2030, which is a humongous number. How and where and what are we building? In the past, roads used to be the foundation of cities. They were the infrastructure that we would build. Today, things have changed. Today, we're talking about data, we're talking about 5G, we're talking about fiber, and we are talking about cloud and data storage. These are the new foundations for the upcoming century. Now, knowing these demands are the demands of the future, how are we building it? I'd like to start with you, Rayan, and ask you about what you're doing in NEOM. You have the idea that the most challenging thing for cities nowadays is retrofitting the future into the past. But you have the luxury of building on a blank canvas, and you're not building a development or a small city, you're building an area which is twice the size of my home country, 2.5 times the size of my home country, the size of Brussels, effectively. What does starting from first principles give you? What does it give those cities that no Rome and no London can get?
Thank you very much, and would like to thank FII for inviting us into this panel, and grateful to be among my colleagues and friends on this on the stage. Starting a city from scratch, as you said, with a blank canvas has its challenges, but it also has its advantages and opportunities. What does that mean to NEOM? It means to NEOM our ability to build an energy infrastructure with technology where other people left off. So using the latest technology that is much more cost effective, much more sustainable as well. Being able to build both the piping for energy and water for a master plan that will live for another 100 years, not being anchored to any existing infrastructure that can become an impediment than it is an enabler. What it also means is that building a digital infrastructure that helps develop what NEOM would look like, or any future city would look like going forward, whether it's the 600 kilometer of fiber that we've put on the ground, or connecting through the subsea cables, or actually even deciding the location of that network that is aligned with a master plan that is there to live for 100 years. So the way we view it is infrastructure in the context of NEOM is a significant enabler, is a significant advantage, competitive advantage, and not a constraint as it may have been in other existing cities.
Sabah, at Roshan, as you are building and as you are developing also sometimes from scratch and sometimes retrofitting into existing developments, again, your philosophy is that cities are not single asset investments, they need to be integrated. So how do you prioritize, and where do you prioritize when building those cities, and how does that change your approach to putting down the infrastructure for those cities?
Thank you. Well, thank you very much for having me on the panel. It's actually a real honor to be discussing infrastructure in Rome, where 2,000 years plus ago, they were laying probably what must have been at the time extremely revolutionary infrastructure that has been modified, adapted over 2 millennia, and we're still using now, and we're seeing. And so having this discussion in this location is actually incredible. Going back to your question, as Roshan is the leading real estate developer in the kingdom, we look at what the customer needs are, and we work back from that, because fulfilling the customer needs, not just today, but also doing a huge amount of insight work with focus groups and customer and existing buyers and potential buyers. We're trying to look at how do we want, or how does our customer want to live today, tomorrow, and over the next 100 years, and trying to make sure that we provide the right level of infrastructure. Now, we can break it down into 5 heavily interconnected aspects of infrastructure. We have mobility infrastructure, which is both your primary roads, secondary roads, connections, and transportation within the communities, and that's changing as the technology is changing. So a road isn't a road anymore. You know, the way we think about a road today is going to be very different from how we're going to think about a road in 3 or 5 years' time, where, you know, autonomous vehicles are coming into play, much more focus on micro-mobility solutions and the like. So we need to really re-look at even the most basic concepts of what something like a road is. The second one is utility infrastructure. You know, what's our plans to provide utility infrastructure? How do we make sure that the utility infrastructure we're providing is fit for purpose as we go forward?
Yep.
Third one is communication infrastructure, which is maybe 30 years ago, it was a copper telephone wire leading up to people's homes. Now everything is interconnected with the you know, Internet of Things and the way all aspects of the communities are managed. And what we've tried to do is take a leading role in making sure that our community activations is all done through technology with apps. So our customers, we've developed apps where the customers literally manage every aspect of their community living through apps.
Right.
So communications is important. Then social infrastructure is equally important, which is schools, mosques, all the other community facilities. And lastly, we bring it all together with livability and public realm.
To ensure that these cities are well connected and well integrated. Mike, let me ask you, at Murabba, your solution to mobility is going vertical. So the smart cities, the Amsterdams of the world, the Souls, are now going vertical. They don't no longer think about how they're going to move cars on roads. They're thinking about limiting that movement. Your answer to that is verticality, but also creating density in a very small space has its problems. So again, how do you balance?
So thank you, and again, thank you very much for allowing me to participate this afternoon. We're very delighted to be here, both myself and Deemah, and thank you to FII. I don't want to repeat what clearly Rayan and Sabah have already said, which is nailed many of the things, but we have the benefit at Deemah of actually starting at the end and saying, what does the city need to look and feel like, and what do we want people to experience? And ultimately, we want people to experience a frictionless experience when they are living, working, and playing within Deemah, but also the mobility and the access to the new downtown needs to be seamless as well. The worst thing of all would be that the expressways and the interchanges of today became completely clogged up by the future 300,000 residents of tomorrow. So it's really important we think at the end first. And I think building upon Sabah's point, you know, we believe truly in quality of life. So therefore, half of the real estate has been given to green space and mobility. Now, as you rightly said, we're not constrained by the architecture of today because, like Rayan, we have a blank canvas, but we have to think very hard to make sure that not only do we create a frictionless experience, but we allow space for things that we don't know about today, but things that we know will come, because we can all talk about tech, AI, and whatever, but ultimately it runs on pipes, wires, servers, racks, which require cooling and ultimately power.
I'm getting images of being inside a closed space. I mean, going vertical and being dense. Can you be dense without being claustrophobic?
That's right, yes.
You can.
Yes, and I think it comes down to what you're trying to achieve. So for us, livability is really important. So therefore, if you do benchmarks around the world, we know what cities are potentially overpopulated and what cities feel half empty. And Deemah is positioned at about 24,000 people per square kilometre. Two things that are important about that. One is it's 4x Riyadh today. So Riyadh, which is a low density, is about 6,000 people per square kilometre. So we're going to create that energy and buzz that actually well-travelled Saudis and visitors know and feel. Above and beyond that, if we look at reference points, New York and downtown Manhattan is 25,000 people per square kilometre. Paris is about 23, London is 24. So we think we've got that balance right. We don't want to be overpopulated, but we want people to be there feeling vibrant, energized, because Saudis already are. And therefore, when they have the benefit of a downtown in their own backyard, we truly feel that we've got the balance right.
I'd like to turn to Ma'amar, and of course at DR you are developing in one of the oldest cities in Saudi Arabia, and in the region you're developing in Mecca, which doesn't come without its own issues. How do you design in one of the oldest cities for modern comfort?
Thank you, Sabah. It's a pleasure to be here. Actually, we are developing in different cities, but developing in Mecca for me is very special and deeply rewarding. The first principle when you work at Mecca is to respect the culture, the identity of the city, the heritage. So we consider that in the design of the building. You know, when you get closer to the center of Mecca where the Holy Mosque is, the identity or the design of the building going to more traditional. And if you go further, it's less traditional. While inside the building, we consider that the spirit of the design, the identity of the city, even we deal with some local artists to have the touch of Mecca identity within the artwork and the painting inside the building. If we talk about the design in general, actually, I believe the design is the foundation for any successful development. So, and the design is not only about the human scale or the comfort, it's about the human experience, the feeling. So nowadays, you know, the new development, it's a place where the people can live, work, and play.
Yes.
While we need to think about the units and the residential unit itself. Now the residential unit, because the lifestyle is changing, and even after the pandemic, many people, they start to work remotely, studying online. Many things is changing. So we need maybe spaces inside the unit or within the residential building to maybe it could be the future requirement for any student or someone to applying for work to have this space. Also about the kitchen, whether we need the kitchen, for example, or not, because now the delivery, whether for foods or shopping online, it's very important. We need to study logistic, how to deliver the items quickly, safely, and these things, it will has a major change in the development, and we should start from the residential unit itself.
So the design should meet the customer expectation and the kind of life they see for themselves in that place.
Exactly.
Pietro, let me go to you, all the way over to you, and ask you. You're not new to developing. You're one of the largest contractors in the world. You've been developing and working in the Kingdom of Saudi Arabia for the last 60 years, umpteen number of projects. Can you walk me through how Saudi Arabia has changed when building or laying down infrastructure for their developments?
Well, the first thing that comes to your eyes when you see Riyadh is change. Let's say if any one of you have been in Riyadh in the last 15 years, would appreciate the speed of what has been a city before to change into the city that it is now. We're talking about vertical. We were the one to make the Kingdom Tower, and from the Kingdom Tower, you were seeing from your room in the Kingdom Tower, you look at the city, and it was a totally different city on what is now. So we are in front of clients and fund managers and everybody who want to invest for the future. But like any general, without army and without weapons, cannot do and win any battle. All these people that have a lot of money cannot do an investment properly if there is no someone to build for them. So I think that just to give you numbers of us in order to understand what we do, our name is We Build. So I would not go further into explain what we do. But we work in 52 countries, 120 years of history, around $70 billion of contract under execution, 15.5 billion of revenues per year, 95,000 people around the world. And what this means? It means a lot of experience, a lot of problems, a lot of experience. But we are the one to make things happen in Europe, in Saudi. We are in Saudi since the 50s, so quite a long time. And what I was saying to you before is that there are only two things that look at long term. There are kingdoms and families. In families, you look at your kids and you think about the future. In kingdoms, you think about the next king and what will you leave to that guy to make for the future of the country. As such, we are a very strange animal because we are a listed company. The state is partly inside our shareholders, but it's also a family-owned company. So it's listed, but with all the things. So I think that this is the best situation in which you have result to give to your shareholders, a year by year constantly, but also reputation, which is the essential asset of a family, and looking for that in the future. This means very long-term relationship with people, very long-term relationship with clients. We work mostly for government, so it's for us it's not a enormous number of clients. We have a limited number of clients, but we do a lot of things with them. 170 projects underway now. So let's say that for us, when we think at development in Saudis and in Europe, we see two different worlds. One which was capable, like Saudi, to take the right choice, have a vision, and make it deliver to the people in time in which the people can appreciate the difference. I imagine the kids in Riyadh, the one who had 15 years old, remembers how it was Riyadh before.
Right.
And he now lives a different city. The metro line we built in Riyadh changed the transportation, which is one of the essence of Riyadh. Whoever has lived a little bit in Riyadh understand the only problem Riyadh has is traffic.
Right.
So it is important to do things like that. In Europe, to make the same infrastructure, it takes 25 years.
Right.
So it is outside the life cycle of a generation when you think that. Imagine the cycle infrastructure in Europe is so difficult because there is so many things. And in Riyadh, in the kingdom, it takes, let's say, a sufficient time to appreciate the difficulties, to understand what's going on. But then there is a decision. So I think this is the most important thing, having a vision and the capability and competence to have the people on board to realize it.
And the ability to look forward and to be able to anticipate. And the things that we are solving for today, we could not have imagined when we had put down the infrastructure that we are living with today. I want to talk very quickly a little about financing. Rayan, going to you, we're talking about massive numbers. If we talk about PPP is a bit extractive. If we talk about the multilaterals, they're slow and they put a lot of conditions. What's the best model to finance these mega projects?
I think consistent with what His Excellency mentioned yesterday around the new strategy of the PIF. And he mentioned how the PIF in its original strategy was looking to how to get investments into the world, and now it's focusing on how to attract investments into the kingdom. NEOM is a core pillar of that. We have many opportunities where NEOM provides the enabling infrastructure, energy, water, digital connectivity incentives for third-party capital to come in and make the investments. NEOM Green Hydrogen project is one great example where it's a $9 billion project with partners with Air Products and Aqua Power. Had $6.2 billion of debt financing. The remaining is financed by equity, but collectively as shareholders identified NEOM as a very attractive place to build such a large-scale industrial complex. The same applies with many other opportunities coming up right now, particularly in the renewable sector, as well as obviously the renewable sector is anchored by NEOM Green Hydrogen, as well as AI data centers, where the availability of land, energy, digital connectivity, and water infrastructure that exists today is providing an attractive proposition. So the model going forward is in significant investment done by NEOM directly in the infrastructure, enabling third-party capital to come in very specific industries that have the advantage of NEOM.
Right. Sabah, please come in on this for me. Traditionally, infrastructure is the remit or responsibility of governments. Is there a role for government here? Is it the developers that should be taking on the cost of this infrastructure being put down?
Thank you. So if you look at when you provide infrastructure, it does two things. It enables the land that you've provided infrastructure to be activated. So you create communities, business parks, activity, but I think equally importantly, it creates significant economic activity, and that economic activity leads to GDP creation. And the other aspect is that infrastructure is an extremely long-term play. You know, for the recovery of the cost of that infrastructure, it's decades and sometimes multi-generational. So the role of governments and the role of the base economy is extremely important in supporting the provision of infrastructure. Now, that's not to say that the private sector and the developers should just sit back and expect the governments to do everything. I think there is a middle ground where the developer provides a certain amount of infrastructure that supports their development, supported by the government that provides the wider infrastructure network that supports the wider activity and allows the developers to focus on what they can do and what they need to do to activate their developments. The provision of that then becomes, does the developer pay for it for himself, or as Rayan was mentioning, do you work with the private sector, both domestic and regional, to bring in third-party funding, PPP models and the like, where you can actually outsource the provision of that against a secure and predictable return?
Mike, I saw you nodding your head, but I'd like to move you to another subject, which is the use of AI. And where is AI finding a seat in the way that you are planning for this future city?
Thank you. Building upon what we've already heard, we have the similar belief, the understanding with regard to the private sector playing a key part. And what we seek ultimately is private sector to bring capability, capacity, to participate, and also to bring capital as well. So that applies across all aspects of infrastructure, including AI. At Numerable, we have really AI in two domains. In particular, we have AI inside the cube, and we have AI everywhere else. And if I talk about the AI everywhere else in particular, insofar as it relates to infrastructure, we have a need for 1.8 gigawatts of power, 110,000 cubic meters of potable water every day, and also all of the treatment of the sewage and the like. But also it is a smart city. So therefore we need to have AI acting in the background to ensure that that seamless experience I mentioned earlier is there for everyone. So in real terms, what does that mean? It means sensors everywhere, but not highly visible front of house, but not sensors to be watching people, but sensors to be ensuring that things like refuse collection is happening, and it just happens seamlessly at the right time of day so as not to spoil the experience and the enjoyment. And ultimately, all of that is brought back into effectively a central control. And that central control is constantly monitoring and iterating depending upon the circumstances. So it could be, for example, the number of decibels in a community at a certain time of the night exceeds, and therefore that will then interact, it will alert us, and we can then take the appropriate measures to actually re-establish control. But ultimately, it sits in everything we do, but we need to be really clear that humans also ultimately can control the information and the data that is driven out of AI.
100%. Mohammed, let me ask you about, stay with the theme of AI. I heard you say that you feel Saudi developers or developers in Saudi are quite lucky because as you are developing new cities now, AI is coming into itself, let me say.
Yes.
So tell me more.
Yeah, it's very clear there's a significant transformation in the market in Saudi. So we are fortunate that it's taking place where AI, new technologies, advanced data is taking place. So it's a very good chance to apply new inventions to the market, to the industry, not only in Saudi Arabia, but the whole world because of the timing of using this. Leonardo da Vinci said, wisdom is the daughter of experience. So we built on the experience nowadays. The experiences are available, the mistakes are clear, so we can use all this data to invent a new way of development.
Pietro, let me ask you a last question here. Aside from capital, what else do we need to bring in for developers to be working in Saudi Arabia? What's the opportunity?
Well, one thing that comes to my mind now is the fragility of the Gulf system of essential issues, water, energy. You have seen during this turmoil later that a possible attack to one of these desalination plant could have done an enormous enormous damage. So one thing I would suggest now is to invest in redundancy and in resilience, because this is very important to give to the investors the idea and also, let's say, the essence of what is safety. A lot of investors look for safety as the first issue. So this is very important to me, that Saudis keep this lesson that happened very recently to say, okay, we must be resilient to any possible attack from outside. This is one thing very important. The second thing is how to attract and keep the best talent as it is now. So this is very important because before the Gulf was perceived as something in a place to go. Everywhere was the same. You go in Dubai, you go in Abu Dhabi, you go in Qatar, you go in Oman, or you go in Saudi Arabia was the same for, let's say, for a normal person and investor. I think that the first choice is it is not the same. It is different. And Saudi has all the characteristics to be felt as the different big fish in the ocean. It's totally different country, totally different kingdom. This is one thing. How to attract these people, the competence, like the people like us, for instance, to stay there. It is to create for the future a framework in which these good and large companies can survive, let's say, and keep their action in continuity for developing the plan of the vision and of His Royal Highness. I think this is the most important thing, to invest into a framework in which is sound under the legal point of view. The settlement of issues is something that everybody understands as an international standard. The contract standard should be kept as much as possible as the international FIDIC standard. I think those issues, together with the safety measure that the government will take to shed the population for any possible event, will make the condition for the development of this fantastic plan.
Excellent. Thank you very much for that. Finally, I'd just like to ask you all the same question, if you would each think about it from the angle of your own development. By 2040, if you were to be asked, what would you consider to be the proof of success that your development has become an important node in the global urban economy? Would that be occupancy? Would that be capital flows, industrial output? Rayan, I start with you.
I think when you think of NEOM, it's much more of a economic development region than it is a real estate project. So looking forward to 2040, success will be measured by not only having a strong industrial base, which is what we're focusing on today, but also expanding into livability, population, and GDP contribution to the rest of the kingdom, which is the vision that was set initially for NEOM.
And Mike?
For me, the three pillars of the vision sit at the heart of that. So in terms of quality of life, vibrant society, and a thriving economy. And if we measure that in terms of behavior and the like, people will be talking positively about the experience of living, working, playing at Numaraba. And for those tens of millions of visitors coming to the Cube, they would actually be returning and booking their tickets to come back.
Okay. Sabah?
Thank you. So for us, fundamental pillars: quality of life, enabling a strong and vibrant private sector to create a real estate development sector that is active and self-sustaining within the kingdom, and happy customers who are proud to live in Roshan communities.
We need to count the happy customers by 2040. And Muammar, what would your measure?
Yeah, the real estate, you know, it's development, it's waves from a country to country to region, from region to region. I think in Saudi Arabia, the wave just started. So by 2040, we will achieve a lot of things.
I think the organizers may have forgotten about us. So I'll take this opportunity and just ask very quickly for the investors in the audience, give them one compelling opportunity.
Well, it's a very difficult question. There's a lot of opportunities, but if you invest in some development companies that working in different sectors, they have a diversity with a waterfront or downtown or whatever, and especially what we are doing in Mecca and Medina, there will be a game changer.
Yep, especially that the laws have changed now, allowing more
Yes,
ownership.
exactly.
Sabah, what's the most compelling investment opportunity?
Well, I think for us, for Roshan right now, particularly for investors who are interested in infrastructure and vertical development, our Marafi project in Jeddah, which is we're creating an 11-kilometer long canal that is going to completely transform the north of Jeddah, that's going to be anchored on this waterway that will be both an entertainment as well as a transportation mechanism and a lifestyle activator.
And Mike?
For investors, we have three verticals. One is classic real estate, which can be anything from land sales to joint ventures or anything in between. The reason why I believe that's attractive is because we're not special, but we are different insofar as we have this density and this verticality, which in simple terms means that the return on investment both ways should be exponentially attractive on the basis of the fact that for 7 million square meters of land, there is the opportunity to develop 20 million square meters of real estate.
Rayan?
I think there's one maybe hidden asset in NEOM that people don't talk about as much, which is the port. We've seen a rejuvenation of the whole Red Sea coast given the recent events, and NEOM has been a great beneficiary of that activity, whether it is Ma'aden exporting through NEOM port for the first time, or importing foods and other services, not only to the NEOM, but also to the rest of the Gulf. This has been a top-performing asset, and we look forward to really monetizing it in a commercial opportunity.
Inshallah, best of luck. Pietro, last words of wisdom. 2 words. 3.
2 words. I would say that thank you that we are in Italy, you're in Rome. I think that we have a sufficient heritage to say that we are the son of the son of the son of the son of Michelangelo and of Raffaello, and that also Michelangelo and Raffaello had to have a very good client to make their art. So we have in front of us fantastic investors that are also fantastic clients. So God bless you. That's it.
Wonderful. Thank you very much. Thank you all for attending today.
Siba, thank you so much. And to all of our great panel there, Arabian DR, Russian Group, New Maraba, NEOM, thank you all, gentlemen. And We Build, of course, lots of work going on. Lovely to see you all here. And thank you all and the great work that has been going on there. You must check out some of the work that, the beautiful designs that are on the website that are out there, and really quite spectacular operations been built all over Saudi Arabia, these new cities that are coming up. And many of them already starters. So the excitement that's there, and building the communities and putting the technology together and building the infrastructure, and of course working with the cities, with Riyadh, with Jeddah, with all of the cities in terms of building the transportation and all of that. It's a very active time there, non-stop. It's a very busy time. And for investors, it's definitely a great time to be there, because this is in many ways just the start. We've only seen some of these open up, but this will continue to move very, very quickly here. So it's very exciting. So we're keeping digital top of mind for this session too. Reimagining sovereign AI. And Barbara Carfagna, journalist and anchor with RAI, is our moderator for this session. And she is in conversation with the CEO and the co-founder of Cohere, Aidan Gomez. So if Barbara and Aidan join us, lovely to have you both here, and we're looking forward to hearing from you. Thank you.
Thank you. Hi, everybody. So, Aidan Gomez, you co-authored the Transformer paper that made today's generative AI possible. Looking back, did you imagine it would become not just a scientific breakthrough or just a tool, but a geopolitical infrastructure?
Yeah, no, definitely not. I don't think any of us who were working on that project had any idea what was going to come of it. At the time when we were at Google, we were building it for just the translation system. And so we were focused on a very narrow slice of the problem. But I think it took us all surprise what the community did with the technology. So we built it for translation, but then suddenly there were applications into, language modeling and all these other different areas that, and at this point, images, video, audio, it's been extraordinary to see. And I think next year, it will be the 10-year anniversary of the transformer.
So you were a baby.
Yeah, I was close to a baby. But it'll be the 10-year anniversary, and still we're using transformers. Still, they're the backbone of every language model, whether it's our own, GPT, etc. So that, for me as a scientist, is a bit disappointing, right? Like as a good scientist, you want to, yes, create something important, but then you want to see someone else come and build on that work and beat it. And that hasn't happened for 10 years, so I'm very excited about what comes next.
So what comes next? You are building what comes next. Cohere has chosen the enterprise and sovereign AI path rather than the consumer chatbot race. Is the real future of AI, more, no, this is, I guess, is this the future of AI more embedded inside companies, governments, and critical processes?
Absolutely. It's going to become fundamental infrastructure to every vertical. Obviously, intelligence is the most general and widely applicable function that exists in human society. It's in every single vertical. And I think AI technology first took off in the consumer space. We saw ChatGPT blow up. Then it started to take off in coding. And now what we're seeing is in enterprises, mass adoption. That also means a lot of spend and sometimes even overspend. We've seen some stories around that. But more and more, this is going to get integrated into the critical industries that power an economy. And so that's why sovereignty is so significant right now. Before it gets deployed into water treatment facilities, financial institutions, healthcare, et cetera, we need to ensure that we don't have third parties or foreign governments with the ability to just switch off critical infrastructure. And so that's what we at Cohere have been very focused on, is ensuring that there is that resilience, that we're able to offer countries, governments, and their industry the ability to have a fully sovereign stack that they own and control.
And it is still transformer.
It is, yeah. Still, these models are transformers.
But you are thinking about what there will be after transformer.
Yeah, well, I've gotten excited a number of times. Like, there were a number of research papers that came out that suggested, oh, maybe we can beat the transformer in this way. We'll make it more efficient on long sequences, for example. Or instead of generating just one word at a time, we'll generate a bunch of words at a time. There were these ideas that emerged, and I got super excited. You know, I spun up teams inside of Cohere, focused on researching those, testing those. And then I like to call the transformer a great artist because it steals ideas. So the transformer just copied the ideas that emerged in these papers, integrated it into itself, and it's still what we use. So I don't know what comes next. I've gotten excited and disappointed a couple times.
Meanwhile, Europe is increasingly worried about dependence on American and Chinese AI platform. In your opinion, can sovereign AI be a real industrial strategy, or is it just a defensive reaction to a technology already dominated by a few giants? For example, you acquired Aleph Alpha and Open in Paris. So you believe that there could be a sovereign AI for Europe?
I mean, it's not that I just believe it. It has to happen. Like, this technology is going to form the bedrock of our defense, every single critical industry, our national productivity, our ability to perform advanced research. It will become the bedrock of our entire economy. And so there must be solutions to sovereignty that we need to find. Obviously, I believe Cohere is the most promising among those. And I think that the example you gave of us merging with Aleph Alpha and the partnership between Canada and Germany, the digital alliance that they formed, that is it's a blueprint for what countries can do to come together to build truly sovereign capabilities that they fully control. Something that no one else can mess with or see the data inside of or switch off at will. That partnership between Canada and Germany, between Cohere and Aleph Alpha, it was never meant to be just 2 countries. It's a alliance that we want to expand. And so that door is wide open. And I think for countries in Europe, like Italy, like Spain, that we just announced a partnership with, we want to bring more and more countries into this alliance. And we're happy to give very, very strict guarantees to those countries in terms of sovereignty.
But AI is made of different layers, many layers, including the chips. So there will be the possibility to have for one nation or one continent the possibility to have all the stack.
That's completely correct. I think it would be incredibly inefficient for everyone to reinvent this entire stack, and that's not what I'm suggesting. I think what we need to do instead is partner. There needs to be concrete partnerships between countries that have guarantees around sovereignty, like what we're doing between Canada and Germany, but hopefully at other layers of the stack. We're the model layer, we're the agent application layer on top, but we also need those sorts of partnerships on chips, on infrastructure. Another thing that Cohere does that's a bit unique is instead of asking the customer to send their data over to us in one of our data centers with our model and we process it, instead of doing that, we take our model and our entire software stack on top and we send it to the customer. So it's fully in there. We completely trust them with all of our IP. So we take the risk and they don't have to take the risk because they're in full control. We can't see in, we can't switch it off, but we can also deploy it in their national champion. So instead of them having to rely on like a foreign cloud to manage the infrastructure, to manage the chips and facilities, it can be a domestic champion, whether that's Stackit in Germany or Deutsche Telekom, et cetera, or Bell in Canada. So you have a sovereign controlled player that actually runs these chips, or Humane in Saudi Arabia.
So you are among the European champions. You were also invited in these days in France for this reason, but you are Canadian, so people wonder why a Canadian should be in the system and building the system for Europe.
Yeah, well, I think Canada has a very deep history, shared history with Europe, of course. Our parent nations are Britain and France. But me personally as well, my mother is British, I live in London now, my father is Spanish, and so I have a lot of passports. And I think Cohere in general does as well. And there's something unique about Canada, which is we're a country of immigrants. And we're not a melting pot. We don't force people to give up their cultures and set that aside, leave that behind. Instead, we're a mosaic or a tapestry. People come and they retain their connection back home. And so when you are Canada selling out into the world, you have genuine, deep relationships and connections to so much of the globe. And that's been a super helpful thing in terms of building trust, especially on something as sensitive as sovereignty when it amounts to the health of your people, the education of your people, the defense of your people. These are extremely trust-based matters.
So you are offering to the governments a way out of American infrastructure dependency. How many of them are actually willing to pay the price of that exit? We are in these days having news about France cutting with a lot of platforms and trying to build her own system.
It shouldn't be an either or. It should, like, I don't like to think of sovereignty as decoupling from someone or not buying anything from some nation. It's about having a diverse supply chain. That's what promotes resilience. The whole point is that there's no one nation that can just switch off your economy overnight. That is the risk. And the way you mitigate that risk is not by not buying from anyone and just buying from yourself. Instead, it's by diversifying who you're buying from so that no one has too much leverage over you.
What does Europe have to do, in your opinion, in the next 3 years that it has not done in the last 10?
I think a posture change from the default mode of trying to control technology being regulation to the default mode being innovation and building within the technology. I think that needs to continue. The other major missing piece is capital concentration. Particularly in AI, you need massive capital to compete on the world stage and to build this technology. And really, Europe has not set up the entities capable of writing significant checks to build these capital-intensive, frontier-level pieces of technology. So that's a place where I think we really need to face down that if we don't have the ability to fund these projects, it's a self-fulfilling prophecy. It will not get built here.
Thank you, Aidan Gomez,
Thank you so much.
to be with us. Thank you. And Aidan just made the case that sovereignty is ultimately about controlling the full technology stack. Our next conversation is about a different kind of pressure on sovereignty, when the very thing that gives a place its identity becomes too popular to sustain. Please welcome our next moderator, Barbara Serra, and her panel.
Oh, there are other people coming, I am sure. There they are. Hello, welcome again for one of the final panels. I think an apt topic, considering that we are all heading, presumably for holidays quite soon. Can destinations survive the price of popularity? You always know that it's going to be an interesting panel because we've been talking nonstop backstage in the green room about it. There's so many issues. So let me first welcome to the stage Ritesh Agarwal, founder of Group CEO of Oyo Rooms. Thank you. And Jean-Jacques Morin, Deputy CEO of the hotel group Accor. So welcome both.
Hello.
Yeah. So we're going to be looking at specifically whether destinations can survive the price of popularity, basically the impact that tourism can have, obviously positive economic, but there sometimes can be prices to pay. But before we address that, I think it's important to look at how the industry is changing right now, has been changing arguably a lot, we were discussing, since COVID. So Jean-Jacques, if I can start with you on this, just talk us through some of the changes. You know, we can't have a panel without mentioning AI, so obviously that would play a part, but just in general.
I think over the last couple of years, we've learned to be infinitely flexible, because we keep navigating in something which is non-linear, which is connected, which is ambiguous. And if you really look at that industry, it has performed extremely well over each and every period. We are breaking records after record. There will not be, this year will be again a record in terms of global travelers. And so the industry has learned to adapt to a point which is extremely surprising and continue to surprise all the investors, to start with them. I think that's one key element. And then the other one is there is a dimension here, which is ESG, which in some part of the world, this is not anymore a priority, but you know, it is a priority. And so I think what you've seen is that the European industry has kept the ESG values as something that they really want to pursue. And this is a very good thing for the long term for this industry. And then there is AI, but AI would be in itself a panel.
Okay, and then one of the things we'll address as well, you know, we talk about travel and tourism at different impacts in different parts of the world. Ritesh, just starting with the same broad brush question to you, the changes that you're seeing in the industry post-COVID, because that obviously was a big shock, but then with a lot of technological advancements now.
Yeah, before I begin, I'll just introduce myself that I run a company which is Prism, of which Oyo is one of our most popular brands. We manage close to 100,000 summer houses, apartments all across Europe, including in cities like Paris and so many other gateway cities. I think tourism, for whatever reason, I believe will be the biggest beneficiary of the world of AI, because when there is massive productivity gains and people will have a lot of time and money in their hands, I hope people will come out and spend time on leisure and discovering themselves, wellness and things like those. Now, what we're already starting to see is AI is becoming a big difference creator from discovery of travel, where people used to earlier discover on Google and so on Facebook. Now they're discovering which destination to go on their foundational app like ChatGPT or Claude. Within the city, once they've identified the hotel or the vacation home, they're choosing the restaurant, the play they want to go visit, where should they go shop, all of these on ChatGPT and other foundational models already. So if we do not play catch up and frankly even lead, I think there's a chance that we can reduce the quality of experience that we were already delivering earlier. But if we do a good job at it, we can dramatically improve. So there's a massive change that AI is bringing. There's a significant amount of change that customer interests are bringing, which is after COVID, people sort of live with what is called YOLO, which is you'll only live once. So people want to travel and discover new locations like never before. And the last but not the least is the first two, which is this massive travel demand, is leading to cities, which is topic of our discussion. Frankly, just being shocked to say that there's so many people. Like every time I come to Rome, the airport and the lines all the way to the immigration is massive, and it continues to grow longer because people just want to come discover this beautiful city. But are we prepared to deal with the implications of it?
Just to say, the line at the airport is also a lot of Brits coming, that they finally caught up with Brexit and their passports don't quite work the same way. But that, there's always people coming into Rome. I'll give you that. So let's look then at the balance that ideally would be struck in a lot of tourism destinations between, obviously, it's great to share culture. My previous panel was all about culture. Economically, it helps cities, but has a much bigger economic impact in less developed parts of the world. But balancing it, I guess, ecologically speaking, but also when it comes to lifestyle and the authenticity of the people who live there and impacting. And I think it's interesting to mention, and we'll talk about it in detail now, that a lot of cities, Venice, obviously, Barcelona, I believe Bali as well, you'd always think that the markets regulate. Actually, they're doing quite their own to regulate, especially things like Airbnb. So Jean-Jacques, if I can start with you, where have you found it hard, if you ever have, to balance it? Where have you seen maybe problems with balancing the positives of the travel industry with some of the negative impacts it can have?
I started by saying that this industry is blessed and is doing so well. The reality is that we are social animal. Our DNA is to be social animal, i.e. we want to connect, we want to visit, and the reason for why we have what you described becoming more and more of an issue is the fact that the number one growth factor is demography. So on this planet, 2 billion people were added in 25 years. So this is a lot on the basis of 6 billion. But on top of it, what's changing is that the middle class is the portion which is growing the fastest. The middle class is supposed to grow by 1.5 billion between now and 2030. That's a lot of people who've got the monies in order to see something else than where they live. And so that phenomenon that you describe is in fact probably today underscoped versus what it will be, because the inertia of the system will push everybody to go in that direction. So what can be done? There are two really elements that can be managed, I would say, because the growth will be there. So it's how do you manage it? One is what you describe, and a large part of it does come from action from the government. There is also things that, as hotelier, we can do in order to help, in fact, getting that environment a little bit more balanced, a little bit more shared, a little bit more adapted to the local needs.
But can I just get your opinion on, let's say, a city like Barcelona that's trying to basically shut down or limit Airbnbs? Do you agree with that move? Do you agree with the principle, but maybe not the move itself? What are your views?
I think we need more of that. I think we need more of that in a coordinated manner. I think the reason for why it's done is, in fact, proper reasons. It just needs to be in a way which is structured, i.e. with clear principles, and not something which is decided from the one day to the next and changing with the changes of mayor in the city. And so everybody in the world is trying to do what Barcelona is doing. New York is doing the same thing, Amsterdam is doing the same thing, Paris is doing the same thing. Even in Latin America, in Sao Paulo, you've got the same kind of rules. I think there must be a way for Europe to get it, as principle, a better framework and a shared framework. What you see as being the problems that Europe is faced with in politics, in defense, in economy, in taxation, you find also in our industry.
Okay.
Well, my view is partly because I'm in the business of managing, vacation rentals and apartments. I believe that regulation is welcome, but regulation which harshly shuts down an industry entirely may not be the best thing. But I think regulation which ensures the right taxation, the right compliances, I think it's absolutely welcome, because we ourselves are bothered with unlicensed establishments, because when something goes wrong in one of them, they hurt the reputation of the broader industry in entirety. So my view is that being proactive about regulations is far better than being reactive, because by the time we react, it's sometimes too little, too late.
Okay. I mean, by definition, the travel industry is obviously global, right? It's tourism. But what we don't have is some kind of framework within this kind of regulation would happen. And so you have the strange situation where even within countries, and we were mentioning the example earlier, between, you have something in Barcelona that then you don't have in Madrid. So same question to both of you. I mean, listen, I don't think a framework will emerge out of nothing in the next 2 weeks, but how important would it be for there to be one, and what difference do you think it would make, Jean-Jacques?
To get a framework?
Yeah, some kind of framework.
Again, I can only be a promoter of that framework. I think it's always easy to put the chip on the shoulder of your neighbor, which is what I'm doing right now. So I think there is a couple of things that we also do, but there is a need for something which is much more potent, in fact, organization, to go and define that framework. Let me just expand a little bit more. In the destination, we as hotelier can have an influence. We can direct the flows. There is something called duping going on right now, into which post-COVID, with that willingness that people have got to get different experiences, countries or places that never were visited are getting visited. Like the Scandinavian countries are having a really great result lately, because it's too hot, especially here. But you have also places like Croatia. Today, 20% of the GDP of Croatia is coming from travel. So there is a lot of money here that can be redirected to help the people locally and to do the right thing from a governmental perspective.
I'll pick you up on some of those points, but Ritesh, if you can just tell me what you think about
the EU has already made a lot of progress. That a good example of it is in our vacation rental industry. There's a singular EU framework for reporting of listings, that whether your house is registered, taxation, which is money collections. So we're already starting to see on the taxation side, there is a sense of framework that exists. Could that become true for tourist taxes? Could that become true of how the tourism taxes are used? Could that become true for sustainability practices about energy, trash management, and so much more? I'm optimistic, and I think it will be valuable for destinations to be sustainable in the long term.
And that it would help, it would be good for the destinations, would it also help organizations like yours?
Absolutely. I think having clarity helps everyone, because the more differences there exist, it becomes that much harder, because there'll always be that one person who tries to use that as a business opportunity. But if it is a standard framework, we will all play by the same framework that exists.
Because of course it's not the same impact for everyone. And Jean-Jacques, you mentioned Croatia now 20% of its GDP. Even France, which I think is the most, Italians don't take offense, but France is the most visited country in the world. But you were saying the GDP that comes from tourism is 7-8%?
7-8%.
So obviously it has a different economic impact in other parts of the world. One would presume that in parts of the developing world, the percentage of GDP that comes from tourism is even harder. So to have an honest conversation about the impact, then obviously the economic income matters more. So, and Ritesh, I'll start with you because your business started in India first and then you kind of went global. So you have a sort of an international approach to this. Can we have a conversation about the travel industry internationally, or is it a more honest conversation to have region by region?
It's a journey, but I think there is absolutely possible to have a conversation in the travel industry internationally. Just for context, India is now the fastest growing outbound tourism group in the world. Joe mentioned about middle class. India has the world's largest population and the world's largest and the fastest growing middle class that exists. So to that extent, when travelers and tourists come from different parts of the world, the international conversation is not just a good to have, it's almost a requirement because they will have a stake in the game because tourism by design is global, right? Which is different destinations come together. So it is absolutely possible, but it has to start locally. And once it's done well locally, it can absolutely translate to be a global conversation. That's what I think.
Yeah, no, I think you're right. And again, you know, when you have a big problem to resolve, it's always easier to cut it in pieces. That's what you learn when you study math, right? And so if we are already able to make it work for Europe, it would be a huge step forward. And even that one is not easy. And there is an element in all of that, which is lead by example. So I think as a company, we are very proud to have as part of our mantra the fact that we define ourselves as pioneering the art of responsible hospitality. So we define ourselves with that sentence and not with a sentence that says that we're going to be generating the most EBITDA in this planet or whatever. It's not a financial mantra. It's done raison d'être, we say in France. And I think it translates into things like being responsible on food wastage. It translates into things like being responsible on obviously energy consumption. It translates into responsible on taking care of minorities and making sure that they are represented. It translates into things like on the sourcing of what you do, being eco-responsible. And all of that is being measured. All of that is being published. It's part of the extra financial reporting of the company. And I think that's what you want to show. That's what you want to prove. You want to have everybody think that the environment is important and that you try to do in the redistribution of your wealth what is right for the country.
Okay. We only have a few minutes left, so final thoughts from both of you. But I suppose my final thought would be, you know, we talked about European cities where you know, the regulators started acting because there were entire neighborhoods that would seem to be taken over by Airbnb and that discussion. But in other places, you're talking about pressures on resources, on water, on energy, on space. I'm just wondering, along with your final thoughts, if you think that sometimes it's actually incompatible, going back to the title of this panel, can destinations survive the price of popularity? Do you think there's just some places that shouldn't necessarily or can't quite handle right now becoming big travel destinations?
You know, we have a framework for developing new hotels, and we apply that frameworks because part of what we are measured on as a management team is water consumption. And so there are properties, beautiful properties in Greece that we have forgiven going to because we knew that we could not meet, you know, that target. So do we do it? Yes, we try to do it by implementing it at operating level. So whether through development, or for example, when you talk of a brand like Novotel, some of you may have seen, we took some engagement versus the ocean and the nature of the food that we provide, the nature of the education that we provide to the people. And so we try to contribute our way to what you describe as being responsible.
Ritesh?
Well, we are in the beautiful city of Roma, so let me use some context there. The ancient utopian life of just living happy that used to be the case here in Rome. I think that the modern technologies like AI have the ability to bring that back, which means in the many years, people will just have the opportunity to live a good life, travel, and see the world. When that happens, I don't say if that happens, I think when that happens, massive tourism and massive use of technology in tourism will be the baseline. And if we imagine that's certainly going to happen, I'd encourage cities to look back and say, how do we deal with that kind of tourism traffic? So believe it or not, tourism is here to grow and grow rapidly. We can either deal with it, or we can imagine it's not going to happen. I'd encourage we deal with it.
Okay, we're going to have to leave it there. Ritesh Agarwal and Jean-Jacques Morin, gentlemen, thank you both so much, and thank you.
Thank you.
Thank you.
Barbara, thank you so much. And gentlemen, thank you so much. And there you have it. Tourism is there to stay. And yes, it will grow. And hopefully we'll have a little time, some of us here, to enjoy being a tourist in Rome after these wonderful 2 days. This is our last session. Do you want to come up closer? Anyone who's down there, we have plenty of room up the front. And I'd love to see a full house here because we have a wonderful session. And maybe move in a bit. We have a few empty ones here. We might even give away a few front row to make sure that you're all here with us. But it's lovely to please be here with us and be part of this final conversation. We're just about ready to get started here. We are going to, of course, look at this as a new growth story. And we have at this closing session here, we're absolutely delighted to have our wonderful panel. So let's get them in here. We have the former leaders of state from Italy, from Estonia, from Croatia, from Norway, former presidents, prime ministers, they're all with us here. And we're absolutely delighted to have with them all of, we're going to get a wonderful perspective of what's happening in Europe. And welcome back to the stage, Richard Atias himself, to conduct this session, our final session of the day.
Thank you, Whitney. A big round of applause for Whitney, who was an amazing MC for this past 3 days. Thank you. So, Your Excellencies, I like this exercise always, because when I am on stage with former leaders, I know that we are supposed to have freedom of speech. So let's be very open. Please allow me to introduce first from my left, His Excellency Kjell Magne Bondevik, the former Prime Minister of Norway. Her Excellency Kolinda Grabar-Kitarović, the former President of the Republic of Croatia. Next to her, Her Excellency Kersti Kaljulaid, former President of the Republic of Estonia. And last but not least, playing at home, His Excellency Matteo Renzi, former Prime Minister of Italy. Please, a round of applause for our guests.
Thank you.
So we have 40 minutes to discuss, because many of you have to run to the airport and to catch your flight. So thank you for being with us. You are coming from Northern Europe, Southern Europe, Baltics, Balkans, beyond treaties, by the way, regulation, and institutions. What truly do you think makes Europeans today? Maybe we start with you, Your Excellency.
Well, yes, I do come from the northern part of European Union, but you have to also understand that, and I think you do, as being a European yourself, that if people want to position our Europe like some kind of a straitjacket where we all have to do things similarly, then I'm sorry, we are very different and on different development paths. You have a fully digitalized Estonia, and you have a nice, comfortable, tourist-oriented Italy, all in the same union doing totally different things. And this is Europe. This is the strength of the Europe. Of course, we have our problems. For example, our economy, we must not afford to fall behind US and China, because that would mean that our democratic voice will be less heard. So we absolutely need to figure out how to make our economy to grow again without losing at the same time our social market credentials. So that will be the trick which we need to achieve. I think I know how, but I will tell that later.
Prime Minister Bondevik, what do you think?
Well, my starting point is that Europe is a privileged part of the world because we have some core values that is a foundation of our democracies. I'm thinking of the sources from Athens, namely human dignity especially, the sources of Jerusalem, Christianity, and the sources from Rome, where we are now, law and order. These are the foundations for democracy. At the same time, our European countries are modern countries. Our economy is rather good. Still, we often think that US is the big economy, Europe is very weak. That's not true. EU and UK together, their economy, measured by GNP, is the same as US and still bigger than China. But we have a challenge to compete with them, but we have a very good starting point for doing that.
President Kolinda.
Well, first I have to defend my geography. We don't like the word Balkans because of the connotations. We prefer to call it Southeast Europe.
Fair point.
We accept the terminology from the EU and the US about the Western Balkans, but then where is the Eastern Balkans? And who wants to have Balkans in their house? But joking aside, Croatia is a country that connects regions. Central Europe with Southern Europe, towards the Middle East region, the transatlantic space, etc. And I think this is what Europe is all about, by connecting different regions. Second, Croatia is also the embodiment of Europe's transition, the choices that we make. Practically in one generation, we underwent that transition of Europe. I am part of that generation, born in a rural area under communism, went through transformation, nation building, war, post-war recovery and rebuilding, and then choosing freedom, democracy as the way forward. And I believe that these choices that we make strategically and consequentially in Europe is what make us European as well.
Matteo.
You ask Richard to be very clear, freedom of expression. I'm so diplomat usually, so it's very difficult for me to be clear. And first of all, the time of Europe is now. But the problem of the Europe is the lack of leadership. In this crazy world, with a totally unpredictable presidency in White House, an incredible trouble in USA. I was yesterday in Chicago for the inauguration of big library of President Obama, and I saw the climate of, particularly in the Democrat side, what could happen in midterm, the chaos in the next 2 years. My humble opinion is USA continue to be our pillar, our best partners, our great ally, but we have to imagine ourselves as potential great pillar of the new world. The problem is not the quality of the people. And this event, please let me be very grateful to Richard and all the team, the new CEO, all the team of the Future Investment Initiative to choose this city for the event. This location and this place, Roma, show what is the real metaphor of Europe today. We have great people. I'm not sure we have great leaders. And to conclude, Richard, there is an expression in Italy, tutte le strade portano a Roma. There is also an English expression, all the roads led to Roma. I think for Europe, all the roads started from Roma, not for Roman Empire, not only for Roman Empire, but because Roma was the place, the birthplace of Europe. March 25, 1957, the first 6 countries decided to start with the idea of European institution. My humble opinion, we need a new, fresh start. When next year we will have 2027, the new election in USA, elections in France, Italy, Spain, Greece, and in a lot of our countries, I believe the real challenge is create an idea of Europe able to compete with USA, China, and the rest of the world in terms of ideas. But for that, we need a wake up for our leadership. Today is the time to act.
Please, you want to react on that?
Yeah, absolutely. Matteo, you know, I feel always uncomfortable when the has-beens say that we currently have bad leadership. Therefore, maybe I would like to a little bit round that picture. Actually, leaders can only lead that far ahead of the people believe. And therefore, you have to have to your back to your wall to a certain extent. Like, for example, Europe started to spend for Ukraine defense because our back is to the wall. We also are doing economic reforms because we have our back to the wall. We should do them quicker, of course, but the problem is people don't understand. Chancellor Merz is doing great things because German people understand that they have to spend on defense. Back is to the wall. So this is what makes great leaders. So actually, I believe that with difficult times and Europe having its ability to always model through, it can only get better. And what we need to do to restart our economy, where I totally agree with Matteo, you cannot defend yourself if you don't have a good economy to support it. Then basically there is one thing which I would quickly do, if I had just to do one thing, I would redefine in our competition policies in Europe, market as the world, because to have a good economy nowadays you need hyperscalers. Americans get hyperscalers, Chinese get extremely big companies, but we say no, you cannot merge because in Europe your market share will be 30, 40, 50%. But that means we do not grow big companies who have deep pockets to invest comparably to Microsofts and Googles. And this is something which I believe is the simplest thing to redefine in our union. And then we actually will already have done a big thing.
I know, President Kolinda, you want to react on that. And before you react, I would like also to ask a question, which is, what do you think today, talking about challenges, as Matteo was mentioning, what do you think is the main challenge that Europe should overcome today, before, I would say, let's say 2030, if we want to stay a global major power?
Yeah, absolutely. You mentioned about speaking frankly, and when I was
shut up, house rules.
When I was in office, I spoke frankly. It's probably one of the reasons that cost me re-election. But nevertheless, what you have to keep in mind, it's not about the next election, it's about the next generations. And too many leaders in Europe think way too much about the polling numbers rather than explaining, first of all, taking difficult decisions and then explaining the consequences of those decisions to people, because people will be able to identify with them only if they understand them. So what do we lack now is speed and scale. So taking decisions at speed, we're great at defining problems and issues and producing strategies and frameworks and roadmap papers, etc. But when it comes to implementation, we're too slow. If the measure of growth in the world was the production of paperwork, Europe would be the fastest growing power in the world. So what I do believe is that we need that implementation stage of the decisions that we have, including on defense and security, because without being a credible defense and security actor, Europe cannot hope for a leadership position in the world.
Please.
Yeah, I mean that Europe has three main challenges ahead of us now, where decisions have to be made rather soon. Now.
Which was, by the way, one of my questions. One of my questions was, if you cannot, what is the one decision that Europe can no longer to postpone?
Now that is, of course, security and defense, because Europe cannot rely on US as we have done before with regard to security and defense. We see that. US is more and more withdrawing also from Europe, militarily, economically, politically. We don't know if it will change after Trump, of course. I'm not sure. So we have to make the decisions to build up stronger security, stronger military forces within the framework of Europe, and EU must take the lead. That is number one. Number two is climate change. If we don't tackle the climate challenges, we will destroy our economy as well, sooner or later. So in 2030, there are important measures to be met. And also after that, EU is rather progressive in this regard, better than many other great powers. And thirdly, of course, economy. And European economy is rather strong. Our level of welfare is better than other continents. We don't forget that. So it's important to remind ourselves that economy and social welfare in Europe in general is rather good. But we have problems, and especially in accordance to the Draghi report, I say that when I'm in Rome, it has to do with innovation and productivity. These are the two main challenges for European economy ahead of us. If we will be better on these two tracks, I'm sure we can compete with China and with the US.
Matteo?
I totally agree. What is in the Draghi report is great, but our problem is we write a lot of reports and nobody acts. That is the problem. Please, come on, we are in Italy. We have two Italian former prime ministers, Mario Draghi and Enrico Letta, who wrote two very brilliant reports. But where is the action, not from the people, but from the institutions? Just to be very brief and frank. First, Richard asked us, what is the priority number one? And then I come back very briefly about the funds. I think, first, energy. Without an energy strategy from European Union able to do better than ideological strategy as Green Deal was, we are over. The problem is I'm for renewables, I'm from nuclear, I'm from oil and gas. Stupid thing. We are for a mix, for sure. But the problem is, if we believe we need Claude or ChatGPT or everything, we need energy, not only for our transportation or for air conditioned. So the first problem is energy. The second, very briefly, is innovation. 10 days, well, 1 week ago, Elon Musk, a very good friend of Richard and someone of us, decided to did the most important IPO in the history. We can say here at the same level of Saudi Aramco, just to be very careful with our friend Yassir and Amin. But if you think about the IPO of SpaceX, where is the strategy of European Union in the space economy? We have great guys in Tolosa. We have great ideas in European Space Agency, but where is our strategy for economy? And the third is demography. Our problem is demography, not democracy. We risk a decline of demography unbelievable. But just to come back, a last one point, sorry, Richard, is about defense. I totally agree. And I'm very appreciative in the program of today. We had great meetings with the Minister Crosetto, with the Cavo Dragone, and all the guys. But please, we have to check and to have a benchmark between the United States of America and Europe about investment in defense, okay? If we bring $10 and 10 euros, or you can use the same value to avoid discussion. In Europe, our problem is not what is the budget for defense, is also that for some, but the priority is what type of investment we did with the defense. Because if we have more or less the same budget between USA and EU, but the quality of investment is totally different. And American guys create with dual use, internet, laser, satellite, space economy, thanks to investment in research, in the military research. And we had an incredible investment in bureaucracy in our investment in defense. We have this paradox. The budget is more or less the same. More or less, it's not right to see, we say we have the same budget. But USA, you spend the same budget for defense, but they spend 90% more than us in research, in dual use. So we lost money, we waste money. So I agree with the idea about priorities, also about defense, of course, after the aggression of President Putin against Kiev and against Ukraine. So we have to defend the border, we have to defend Europe, but we have to spend better our money. Also because Ukraine show with the drones, you destroy tanks. That is very important. With a very not expensive drones, we could create a lot of problem to very expensive weapons. So we have to qualify our investment in defense. Europe, wake up again.
I would take Matteo up on energy. Yeah, you can clap all you wish to your former prime minister, please.
No. I bring 2% of vote is my statistics in Italy.
Yes, even I have better in Estonia. But you know, Matteo, energy is indeed something. If I could, I wouldn't put cohesion policy together with agricultural policy, but I would put it into the energy bucket because Europe is in absolute energy deficit. We cannot run AI on our own data in Europe anymore, simply because there is no energy. So basically, we either accept that our data is crunched elsewhere, or we actually start building energy. Now, why we don't have energy? For 20 years, we've been saying next has to be green. So nobody has been building brown, which is right. But at the same time, you never know what is the regulation tomorrow. So you really cannot bring green on as well. In addition, energy market is fragmented. It is not common in this sense that each and every nation does their own energy spending, quite often with government money, which means that we ruin the market. We compete on the market on variable cost, which is ridiculous. Every nation, I mean, French support the nuclear, German support gas. Small states are price takers because they cannot never support at these levels. But there is a solution. Yes, we need green because that's the only self-sustainable. It's not only green, it's safe for Europe. But we should actually take European policy and subsidies to the European Union level so that we would recreate as much as it is possible European energy market and do the most efficient spending, but do it so that Estonians can build so that it will also work in Poland or Germany without our government subsidies, because Estonian government, we are 1.3 million people. We cannot subsidize like that. So I have a solution for our energy markets. I have also one big worry everybody mentions defense. And people think normally Europe spends NATO defense, which is right. It should be this way. But there is one element where Europe must not miss. You remember what happened to Georgia? Georgia was standing at our doorstep, EU, NATO. We told them, wait, you are not there, argued, had referendums about even visa freedom. And look what happened to Georgia. Georgia is truly and sincerely back in the Russian hands today. And this was our loss. But you could say Georgia didn't matter. Now imagine Ukrainian people. We will leave them dangling behind the door of European Union. And indeed, it is their biggest wish today to join the Union, but so was the Georgians. Yet, when we disappoint Ukrainians, you cannot guarantee that their next or thereafter president will not come to power and say, these Europeans don't want us. Let's go with the Russians. And then what we have created, a military superpower producing a lot of defense equipment turned against Europe. So the biggest security challenge now is getting Ukraine into the Union so that they can be on our side. Whichever means, however we do it, however we name it, full membership, economic area, whatever. But we have to absolutely, this is where our security really depends of. Very important.
Yeah. Yes, to build on that. Thank you. To build on that, President Kolinda, you made your country a loved brand. Let's be very frank. And you are friends with everyone.
Yes.
And you travel all over the world. You just came from Uzbekistan, you will be flying to America, and so far and so on. So for decades, let's be very frank, Europe prospered under what I would call an implicit bargain. It was American security, Russian energy, Chinese market. That model is over. So what replaces it, or what could replace it?
A grown-up Europe, a mature Europe, finally realizing that nothing can be taken for granted and the age of assumptions is over. I have been among those who have been heavily critical of some of the processes, especially when I was president. One of the areas was dependence, creating these dependencies that become weaknesses and dangers. Energy dependence, but also when it comes to supply routes, supply chains, etc. So back in 2015, I sat together with my Polish colleague and we started what is today known as the 3 Seas Initiative, and it keeps growing. Italy, just during the last summit, became a partner of the initiative. And that's connecting the Baltic, the Adriatic, and the Black Seas through building infrastructure in transportation, energy, and digitalization. We determined those to be the weakest spots. So now to contradict Matteo a little bit about how things come from Rome, I believe that the next growth stories will not be written out of the big centers like Rome or Brussels or Berlin. It will be written also from what have been called periphery regions, where, as a matter of fact, the strategic gravity has shifted towards Central and Eastern Europe. And the weakness is that the north-south axis has not been built. So we cannot ensure for the European security without ensuring for the security of all parts of Europe. Cohesion is still there. as something that we have to achieve. Also, looking at Croatia's path to the European Union, it shows you that connecting different regions and different perception of strategy, depending on geography, whether you live in Portugal or in Berlin or in Estonia or Croatia, we need to work towards creating common understanding and not leave that on paper only, but work towards becoming a true strategic geopolitical power. You don't do that by just writing rules, by regulation, because that is not power. Power is being able to provide for security, for investment, for the safety of your people, for the young people to stay. I completely agree that demography is one of the biggest issues that we're facing. So if you just continue to regulate, we're at the time of the World Cup, you're behaving like a referee in a game that others who build and who innovate are playing. So looking at 2030 and Rearm Europe, Save Europe, all of those instruments, what I want to see getting there is Europe that has managed decline and that has built the confidence to take those strategic decisions and implement them, and that has invested a lot more into innovation, into production, that has deregulated many sectors, including public procurement and investments into military, dual-use defense and other technologies, and Europe that is self-confident that we can do all that.
Good.
Yeah. You mentioned, Richard, how to replace...
You are all getting a lot of round of applause. I think you should go back to power, guys. Huh?
I think I have slightly high, above 2%, but sorry, not absolute majority. Our parliament would need to vote for me. So I'm not popular. Common sense is not popular, Matteo. I'm sorry.
You mentioned, Richard, how to replace Russian energy.
American security and Chinese
markets. Well, with regard to Russian energy, I would like that we could replace a big part of it. As a Norwegian, I'm not humble. I can say Norwegian gas, used in the right way, it can be clean. That can to some extent replace Russian energy and gas. With regard to security, I already indicated that Europe cannot rely that much on the US as we have done before. We must strengthen our own military forces and strengthen security cooperation in different fields. Security is not only about military, it's also about health, for instance. And thirdly, with regard to markets, I don't see a reason for replacing China in that regard. China is still a potentially huge market for Europe as well. As Norway, we have not utilized all the possibilities we had with regard to China. And I will also say that we can learn from China and also from India with regard to climate technology and health technology, especially. These two fields, they are in the front in the world today, China and India. Let me also add that, in a way, I want a more flexible European Union. Norway is not a member of the Union. And one main reason for that, when we had our last referendum in '94, and I voted against myself, was that we felt that the EU had ambitions of being a very restrictive union. In accordance to the Maastricht Treaty, they should have a common foreign policy, speak with one voice in international bodies. They should have a common economic policy, an economic union with a common currency and so on. Fortunately, EU has developed in a much more flexible way. They are not following the Maastricht Treaty. They don't speak with one voice in all international organizations. Even not all countries have the euro currency. So I have come to the conclusion, despite I voted no in '94, that next time I will vote in favor of Norwegian membership, because the geopolitical situation with the ambitious China, with the aggressive Russia, and more nationalistic US, we need to build up and strengthen Europe And I think that we can do this by making Europe more flexible. We can have inner circle of some countries that are very closely integrated. We can have a second circle with members that are not following all measures of EU, for instance, with regard to currency. And we maybe have a third circle around the two others with countries that are not members and don't want to be members, but can cooperate closer with the European. That's my vision for Europe.
I will give you the reaction, Kolinda, but Matteo, I will come after Kolinda react. I would like to come to you and to ask you, because you are a really true believer on Europe. And I have a question for you after, is can Europe remain united while national interests are becoming increasingly dominant, please? And this is a question for all of you. But before Matteo answer, I think you wanted to react to something, Kolinda, no?
Yes, I wanted to react just to the concept of strategic autonomy and building European capabilities. I fully agree. I'm one of those people who believe that we should have started that a lot earlier, that we should have stuck to our own promises that we're going to spend at least 2% as defense investment. I don't call it spending, but defense investment. And that we were freeloaders and free riders, as the US calls us. Finally, we do have the wake-up call, but we have to build those capabilities. However, that strategic autonomy, which is a bit of a misguiding term, has to mean that, yes, we are capable to act, but it cannot mean an illusion that we can act alone. We still need our partnerships, alliances, not just across the Atlantic. NATO remains indispensable for European defense, but also across the world with like-minded countries and building coalitions of interest. And when you talk about leaders and national interests, the fact of the matter is that national interests have always existed. They will continue to exist. We cannot deny them. We cannot disregard them. The way forward, I believe, is looking at where national interests overlap with the common European interest. When I was negotiating with President Trump on starting the avoidance of double taxation treaty, I talked to him in his language and persuaded him that it was actually in his interest and the interest of the United States to sign that treaty with a country the size of Croatia. And if we make these national interests from energy, connectivity, transportation, from Central Europe, the Mediterranean and other parts of the European Union, truly European interests, then this is when we can align and then build stronger projects, not just institutions of integration.
Matteo.
For me, it's very difficult because 10 years ago, when I was in the office, if someone asked to us, what is the number of phone of European Union, as the famous quote of Henry Kissinger, every one of us had an answer, the mobile of Angela Merkel. Because 10 years ago, there was a very clear Germany who led the European Union. And remember what is this business in Europe? Germany had great export from Germany to China for car and not only car, great easy energy from Russia thanks to great relations, particularly between Schröder and Putin, but not only, and an asset, an alliance, a partnership with USA. And the Merkel and Obama speech are probably the iconic symbol of that. So that was Europe 10 years ago. What happened now? A revolution. Please, come on, COVID. Russian aggression. Then the crisis in Middle East, and then the crisis in the Strait of Hormuz, with the consequences not clear now, because the consequences for inflation in the food field, we have to see it again. It's not clear. What happened to Europe? Europe remains absolutely blocked. So our Norway friend explained the priority is defense. Is right. But he didn't speak about energy. Why? Because from the day one of the war, Norway did an incredible quantity of money thanks to the crisis in energy. And if we are not clear about that, no, please, come on, it's good for them. I'm happy for my friends in Oslo and not only. But what is the political consequence? We have here in Italy, I'm not in the government, so I'm opposition, so I can speak a lot about the limitation of my government. But we are here in Italy, a cost of energy which is incredible. And what happened? The people in the south of Europe will pay more energy, will pay more for energy, and without energy, there are not drones, there are not defense, there are not nothing. So if we don't enter in a different vision, because everything is changed around the world, and particularly in Europe, and a system who created for years and years is totally changed. If we don't understand this point, the consequence will be elections will be always in the hands of extremists. Far right or far left, I don't enter in that point. But the day-by-day life, we cannot solve this problem with what my friend Tony Blair and before him, my friend Bono Vox used to say, radical centrism. It's great expression, I love, I work for that. But without an idea how things are changed in the last 10 years, a complete revolution, we don't understand why Europe of today is totally different. And just to conclude, Richard, I think that conference, and I really very proud of what you did and all the team did, and I'm so happy and so glad because for the first time FII was in Roma, and my Italian friends have to understand how is great this platform, this global movement, as Richard used to call, what that showed to us. We have to bring now some opportunities, because if we lose again some opportunities as innovation, the future of Europe will be very similar to the future of museum. So I love the museums. I think Roma is a great city, one of the most beautiful in terms of museums, the number 2 in the world. The first is Florence, of course. But I think, oh, please, come on. But I think the real challenge, and the FII show very well, we have to give a message of radical change in Europe. Because if we remain to say, we are the best, we are the great guys, we are the most important defensor of democracy, yes, maybe we have the truth in our side, but we haven't the future. And I prefer to have in my side the truth and the future together.
Matteo, I think it was a great thing that you bring out Angela Merkel's phone number, because the problem, of course, that I would rather trust Giorgia Meloni on Russia than Angela Merkel, I'm sorry. Also, she was the one who closed down the nuclear power plants. So, I mean, your energy problem in Europe will probably not be as bad as it was. So, yes, indeed, she was a great leader, but I'm not sure she was leading us into the right direction. And that is where our Europe can be stronger if we speak in many voices, but unified for our main objective and for our main priorities. So it's a good example, Matteo, but I disagree that it was a good leadership. On the other hand, what I do believe is that nowadays in Europe, we have this understanding that we are losing out. Yes, I agree also with Kjell Magne that our economy is still good, but the tendency is bad. One tendency, which I don't know whether you are aware, but 70% of the inbound foreign direct investment to the United States is European. There's something wrong with our Europe. It's not good quality workforce. So it has to be something else. And I would say it has to be this, that it is easier to grow companies and develop technologies in the United States than in Europe. And this would be my final word, because I will do the Cinderella and run away quite soon.
No, but before you run, I have a last question for you guys. Before you react, Prime Minister, think about it. We have still 3 minutes to go, and I want to keep the time. But before you leave, I would like you to give us a piece of advice, each of you. You have led your countries during time of and moment of uncertainty, all of you, without exception. So if you have to give a piece of advice to the next generation of leaders in Europe sitting in this room or listening to us, I would like you to conclude by telling us what will be this piece of advice. Please, go ahead.
Thank you, Richard. First, you asked, can we keep Europe united? I think to some extent we can, but it requires a more flexible EU, as I indicated with 3 concentric circles on how close you cooperate. And it also requires that we can avoid extreme groups that will destroy democracies, and that we can avoid authoritarian leaders. We have unfortunately got more of them over the last years. It's my personal theory that if you are sitting in office as president or prime minister more than 10 years, so you start to believe that you are the only who can rule the country. And you do whatever you can to keep the power. And they become more and more authoritarian. It's just to have a look around in some European countries. I will not mention the names of them. We know leaders who have sitting too long and become more and more authoritarian. So an advantage of Europe is a market economy, it is democracy, it is core values, and I will say to the next generation of leaders,
please,
don't lose your belief in your commitment to human rights and democracy, despite that more countries have become more authoritarian over the last years. Because human rights, democracy, market economy, that is a big advantage of Europe compared to several other continents. Thank you.
I would like to...
Kolinda, before I will go in this order.
I will say one sentence and then I run, I promise. One thing, keep social mobility. Government has to do education, healthcare, nothing else. Don't do anything else. Do these 2 things right. And then we spend next year the conference in discussing why 2 deep social support schemes do not help with salaries at all. But I mean, end from me this year and hear you next year. So thank you very much.
Kolinda, please.
Yes, completely agreeing with what has been said. Just very quickly.
Thank you, Kersti.
To young...
Safe travel.
Safe travels, Kersti. So to all the young leaders out there, do not let the size of your country or your background or other people's expectations limit the size of your ambition. And do not confuse caution for wisdom. Have the courage to take decisions and be accountable for them. Thank you.
Thank you, Kolinda. Last but not least, Matteo, a piece of advice.
No, I'm so happy because you organize a very 3 days of great quality in the debate. That is, I think, Europe needs. Because Europe in the last years lost some opportunities also because we prepare very good report, very detailed vision, very great slides, but we lost the vision. So we are a great continent with all the things our friends and colleagues explained. We are great. We are one of the most important places in the world, but we need the future. In the next 20 years, Nigeria will be bigger than European Union in terms of demography. In the next world, our level of decline in terms of longevity is unbelievable, but it's also an opportunity because, for example, Italy is in the position #2 in the ranking of expectation of life. That is good, but that means change totally our economy, our healthcare, our ideas. So if we'll be able to host events as that, and we'll be able to learn from events as that, and to move from the discussion to action, I think we'll be able to do what Roma did in the last centuries. Because if some places in Europe created an incredible masterpieces, that happened for the great leadership and also for the capacity to act. And I hope Future Investment Initiative offered to Italian guys and to European friends a platform to try to look at the future with more optimism and more confidence. And for everything, thank you so much to the people who participate. Thank you so much to Richard. And I hope you can continue to follow Future Investment Initiative, not only in Europe, not only in Roma.
Thank you, Matteo, for your kind words. Matteo is an amazing board member of the FI Institute, so we are very happy to be here. Thank you for your hospitality. Thank you to all the Italian authorities. Thank you to all our partners here. And ladies and gentlemen, thank you so much for being with us until the very last minute of these great days. Before you leave, and we'd like you again to make a round of applause for our amazing guests. And you can sit still 2-3 more minutes. While we are leaving the stage, you will watch the best of videos of these past 3 days. And there is only one thing that we wish with Her Royal Highness Dr. Maha is to see you again soon in Riyadh for the 10th anniversary of FII. Thank you all.
We are entering a new era of profound transformation. The old world is fading, and the next world is still being imagined. Welcome to FII Priority Europe.
First of all, I would like to thank our partners and members for their great support and their loyalty.
Over the next 2 days, we will explore the forces redefining Europe.
We need strategic autonomy, industrial capacity, technological sovereignty, and financial power.
We think that Europe can find the courage and the strength to make a huge step forward, and we consider that FII priority contribution can be extremely valuable.
A lot of people thought we will stop deploying investments internationally. I can tell you that we're not going to stop.
Please help me welcome our board of changemakers.
Europe at these moments tends to move in the right direction, more slowly than it should, but it does.
If we do not put that into common denominator, we cannot afford to build something that is competitive worldwide.
2030 vision is so powerful, then give the country very clear guideline.
Number one problem of Europe, which is politics.
I think that Europe has a competitive advantage in the current structure.
We just need to mobilize differently the savings that we have in Europe.
The next Renaissance will not be written by spectators. It will be built by leaders.
Our priority must be strengthening synergies with our partners.
Aramco, SABIC, PIF, not only to invest more, but to keep their own investments in Europe.
L'Europe a besoin de partenaires fiables pour son énergie. L'Afrique a besoin de capital patient.
We will continue to implement our plans. We have our transport and logistics strategy, which is guided by the vision.
We want the AI to empower the people, to support the young people.
We need tourism more than ever because it's a bridge between cultures. It allows people to engage and understand each other.
The culture, the heritage, the national identity before you put the development scheme in.
The world, Expo 2030 will be the moment where the world experience firsthand the achievement that done and achieved by Vision 2030.
To be able to be part of this new moment, the Renaissance, cultural Renaissance that's happening in the country.
When you work at Mecca, it's to respect the culture, the identity of the city.
We believe truly in quality of life.
Well, how does our customer want to live today, tomorrow, and over the next 100 years?
What would be the first 3 decisions you will make to attract investment and to unlock all these opportunities?
Businessmen, they really know what to do.
And if they don't do anything they're not supposed to do, you guys in Europe, you have police, no? You have intelligence, you have all that stuff. Go after these people. Unless you guys don't have the energy to do. But I really think people care about their country. So simplify, simplify, simplify.
To attract capital, you need policy formation.
Now, international trade is not only about nearshoring, it's about friendshoring. You do business on who with you trust.
The most serious problem is that Europe is lacking in defense and security and in a real industrial policy.
I joined FII Institute not simply as its new CEO, but as someone who believes passionately in the power of ideas.
She is the future of Spain. We need people like you.
Painful reform is better than comfortable decline and decadence.
The AI is, of course, very important, especially with what's happening right now with the AI. The world needs more energy.
Today, the renewable only is not enough, so they need to be balanced.
My priority is not trying to get power for data centers. I want the rest of my people in Sierra Leone to have access to clean water.
Sovereignty and cooperation are not contradictory concepts.
L'obiettivo dell'industria europea dovrebbe essere quello di velocizzarsi, soprattutto quello della difesa.
Europe and the Gulf can offer the world a replicable and scalable model of strategic cooperation, capable of turning energy, trade, infrastructure, and interconnections into factors of stability rather than vulnerability.